Mark, Mark. Check 1, 2, mic check. It's Monday already. That felt like a short weekend. What do you got going on there this morning? Mic check 1, 2. I think we go back to members this week as select chat. Good morning, man. What's going on? I see some of you out there. Check 1, 2, 3, 4. Have a little bit of softness in the market on the wake up this morning. Do you see that right now? Let's get right into it here. Oh, wait a minute. Camera's off. Dang it. Can't see the camera here. Let's see if we're ready to go here. We'll find out. Oh, yeah. People are here. Good morning. CaptainJimJames here with you. I can kind of see you guys out there right now. Hold on, what's going on here? We got here are JPM or JP Morgan's favorite stocks heading into March. We're going to start the morning off here in the market brief and looking at tickers that are JPM's favorite picks. So we're going to scroll right through here. JP Morgan added 3 new stocks into its list of top stocks heading into March, including 2 real estate trusts. The bank updated its focus list in a Friday note to include Annaly, Capital, Sendus Pharma, and EPR Properties. All 3 stocks are rated overweight. The JPM list includes the bank's top equity ideas around growth, income value, and short strategies. Analyst Richard Shane added real estate investment trust. It looks like Annaly, doesn't it? Can you imagine working for Annaly Capital? Onto the list as an income idea. His $20 price target implies that shares could rise nearly 4% from their Friday close. The stock pays a 13.5% dividend yield. Quote, compelling double-digit yield with book value upside from lower rates and tighter MBS spreads, the analyst wrote as his rationale. Shares of Annaly Capital, which specializes in the residential mortgage finance market, are lower by less than 1% in 2024. Another real estate trust, EPR Properties, joined the list as an income idea. Properties in the company's portfolio include ski resorts, amusement parks, and movie theaters. Analyst Anthony Pallone, or Poloni maybe, possibly, I can't decide which one that is, cited the stock's above average monthly dividend as a catalyst alongside improving growth opportunities that could drive its price higher. EPR pays a dividend yield of 8.2%. We probably need to, at some point, discuss dividend yields outperforming the S&P 500 and where you put money for growth over time at some point this morning. We'll discuss that as well today because that could tie in or dovetail into the Fed this week and Jerome Powell. The bank's price target of $51 suggests approximately 22% upside from where the stock closed on Friday. EPR Properties has slipped nearly 14% this year. Finally, a pharmaceutical name, Sendus Pharma, up 21% this year, was added to the list as a growth play. You guys remember that we talked about healthcare stocks earlier in the year, and more specifically, healthcare manufacturer or equipment manufacturers as being hot or going to be hot this year. We've got this pharmaceutical company, Ascendis Pharma, up 21%. Was added to the list as a growth play. The bank has a $165 price target, more than 8% above where the stock closed Friday. As catalyst for the addition, analyst Jessica Fye cited the company's upcoming launches, cost containment efforts, and potential for a GLP-1 drug licensing deal. Here are some of the other top picks that made J.P. Morgan's list. We've got NLY, ASND, EPR, CAT, DANAHER, Amazon, Broadcom, and Eli Lilly. So this comes from CNBC Pro this morning. And if you want to jot these tickers down, you're more than welcome to. Let's go back again. We should probably go back to the market brief. Hold on here. I totally forgot. We didn't even finish this up yet. We're going to go right back to the market brief once more. We're going to go over to Financial Juice this morning and read some of the headlines here. We've got the S&P 500 has set a new record for the 15th time this year as technology booms. The stock market surged on a renewed rally in tech companies, while traders sifted through the latest remarks from a slew of Fed Reserve speakers. This was all last week. For clues on the interest rate path, the S&P 500 surpassed 5,100, setting its 15th record this year, with NVDA leading the mega cap gains, and Dell rising 32% on strong sales. Traders overlooked weak factory data and consumer sentiment in favor of betting that the central bank will be able to cut rates as early as June. That's kind of interesting to read as well, right? U.S. 2-year yields fell further after Fed Gov Waller stated that he would like to see the central bank shift its holdings towards a larger share of short-term treasuries. The S&P 500 rose for the second week in a row. The NASDAQ 100 climbed nearly 1.5%, and chipmaker index increased by more than 4%. Treasuries rallied across the curve, with the 2-year yields falling 8 basis points to 4.54%. Oil reached $80. As a matter of fact, did any of you take a look last night at the oil short that we posted yesterday? Maybe we'll take a look at that this morning as well to see if there is if that's coming up. That's not quite an oil short, but I believe it's XOM. And we'll take a look at that this morning as well. Next up, we've got for March 4th, the only news coming out today is at 12 p.m. We've got Harker speaking. Then tomorrow on Tuesday, we have factory orders, ISM services, both at 10 a.m. And then we've got the Fed speak again for the rest of the week, right? We've got a huge week of volatility coming. We have ADP, well, so that's later in the day on Tuesday, but then Wednesday we get ADP employment. We get Jerome speaking and testifying in Congress. And if any of you guys remember, what was it, 2018, 2019, and previous examples, the Fed would love to come out and surprise with sometimes rate increases. We haven't had that Jerome, though, in many years. I'm always on pins, though, waiting for that surprise Fed, and we haven't had it. So I am still fascinating. I'm gonna think to myself that if I was a bear or a doom seller, maybe that becomes a topic of conversation this week. Does Jerome come out and say or do something that's unexpected? I don't think so. I don't think he's going to do that, but I'm assuming that if I was a doom seller, that's what I'd be talking about, right? Does Jerome come out with something that's unexpected at one of these congressional testimonies? As a matter of fact, I think the last one that he did, the market just ripped. Like, as soon as he got there, the market just started flying to the upside, almost like they already knew what he was going to say. So we do have him there at 10 a.m. on Wednesday. We get wholesale inventories, job openings at the same time. Afterwards, we get Daly speaking. Then we've got the Beige Book at 2. And we've got Kashkari at 4:15, Mr. Hawk, right? Or he can be or has been in the past, Hawk, but then I have seen him turn dovish as well at times. On Thursday, we also have claims at 8:30 in the morning, productivity at 8:30, and U.S. trade balance. And then we've got Jerome wrapping up I believe he wraps up his testimony on Thursday, and that's at 9:40 a.m. in front of Congress. Afterwards, we get Mester and then consumer credit at 3 p.m. On Friday, we get John Williams, non-farm payrolls, U.S. unemployment, and hourly wages year over year. This is the one thing that does have me not so much concerned, but I think I've seen other times where we've seen Jerome come out on a Wednesday, Thursday, or a Tuesday, Wednesday, and then we still didn't get a true market move until Friday data. And that actually propelled the market a second time to the upside. Now, I don't know if we go down on Wednesday, Thursday, but the key point here would be whether we're going up or down. Focus on the fact that on Friday we get some key data with U.S. non-farm payrolls. Next up, we're going to go to the Discord this morning. Oh, yeah, baby. Does anyone know the Twitter for our guest? This is Discord this morning. Does anybody know the Twitter handle for our guest on Friday, Scott? His name is Volatility Wiz. We had Volatility Wiz here on Friday, and he brought up something that went against, not quite went against, but he brought up he opened the door at least to another like option C. I think Trader Podcasts and I had both discussed the seasonality calendar and how we haven't had any kind of correction, right, in the market. Zero, nothing. And what are the options? Volatility Wiz brought up the sideways and up market. Not so much a corrective measure, but something that's kind of sideways. And a lot of what we're looking for this weekend, even into next week, is a sideways and up crashing type volatility event in the market. So I'm fascinated to see how that plays out this week. His name is Volatility Wiz. So if you want to find him on FinTwit, that's how you find him. That's his name. So we did get asked that this morning on Discord. Next up, we're going to take a look at the website this morning. We've got the front page, the always will be and always, the expanded daily pivots or daily levels. So if you don't have those, if you're not a member, you can always go there to get your levels for the market this morning. After that, we're going to now jump into the opening bell. It's 9:16 this morning, 14 minutes before the open, and we're going to find out what our positioning is today. So just right now, as we look at it, I think I posted yesterday a market brief yesterday and Sunday, and we were looking for a dip buy down below on the hourly trigger. So we are seeing some weakness this morning coming into the open, and we already discussed yesterday, right? Give me a dip to buy today. Now, on this dip buy today, right? I don't know what they're saying on FinTwit this morning about the market being weak, but I'm gonna guess that at some point into Tuesday, you're going to see CNBC come out with some kind of a traders or investors are all waiting for Jerome Powell. That's the assumption here, right? That we're gonna slow down this week. And into Tuesday, at least, you'll find some kind of pause in the market as we await Jerome's testimony in front of Congress. So this morning, just before the opening bell here, if you wanted to ask me what I think happens, I'm gonna look for a dip to buy. It's Monday, right? So I want to find a dip to buy. We know that it's down below here at 510.68. We'll take a look lower as well this morning. We've got this squeeze back here. You see it right back here? So we're going to snap a couple lines here. We're going to take take or show some interest down below here. And then something, this squeeze right there. See that one right back there? See all this gap down below? This is like a little tiny gap down here, right? So I'm going to leave this box up here as yellow instead of green. And then sneak down right down there. That's the one that I'm most interested in. See that one right there? Whoop. We're going to turn that one green down there for potential dip buy this morning. So we'll leave that right there on a Monday and see where we're going. Now, I will preface this with, if you think we're going to go up on the bell right at 9:30 this morning, to just pay attention to these previous highs right here, okay? And for me to take that trade above, whoop, right there, I would need to see, just so you can see this, like here, and over here. Not so much right here, but like right there, right? I would need to see price on the open get above there, right? Back test something like this, and even then get up here before I even attempt to take a long for the week. So I would really need to see some constructive upside right off the bell over here. So I don't think you get that, and this looks horrible, by the way. I don't know what that is over there. It looks terrible. It's not pretty. But you get my point, right? If we're above, I'll take it as long as we're above. But if we're not, I would suspect some kind of tomfoolery in here to get down here for a dip buy. Let's also take a look even lower, and that's over down here. You see that one right there too? So we'll snap that box down there too, right down there, just in case. So put that one right down there. Oh, right down inside of there, and look for something to buy this week down there. That's 504.70, and then we've got 507.54. We've got this one right here, this nice little hourly trigger. We'll set up for that one this morning. If you guys are going to buy the open, let me know in the chat. I don't know if you're going to. If I had to guess, from like a personal standpoint, like what you're feeling outside of what the charts are saying, I would say you're going to get trapped this week. That would be my thoughts. My thought would be, if you're a bull, they're going to try to trap you and tease you with an upside move. If you're a bear, they're likely going to trap you as well. Especially as a retailer, they're going to pull you into this event coming up on Wednesday and Thursday. Eventually, you're going to get tied into that trade that you're in, and then they're going to take all your money. They're going to take all your money into Wednesday and Thursday, and you're going to get your real move after. So if you're a wise person, if you have some wisdom, I would be sitting on my hands. Whenever these Fed events come out, I always like to just sit back and watch or wait. If you're invested in the market, we were discussing over the weekend. A buddy of mine and I were talking about the cost of protection. It is dirt cheap. If you look at, or if you looked at the, oh wait a minute, I'm missing something here. What am I missing here? There we go. If you were looking at the gamma profile over the weekend, well, I think we posted on Sunday the SPX gamma that we left with on Friday. There is nothing below us. There is like no floor. We have a glass floor that's like just above us. I'll switch to that right now so you can see it as we get prepped or ready for the launch at 9:30. Let's go over to the main screen here. And we're going to take a look down below. If you take a peek down down below here, right? This is the Qs. And then we've got MU over here selling off this morning. And we're going to take a look at SPX. So this is the one. This chart down below here is going to get updated in just a few moments. But I want to show you over the weekend that there was nothing down below. We have no developments down here at all. It's just like sitting out there, hanging out. The gamma flip and the downside is undeveloped. There's not a bunch of put gamma below 5,000. 5,000. That's it. And we want to watch that as the week progresses. and see if there's any development in put gamma to the downside. The entire market, in what I can see, is unhedged to the downside, below 5,000. That's not too far lower, right? We're at 511 right now, and there's nothing down there. So let me know in the chat too what you think about that this morning. That there's no development to the downside. There's no one's protected. Everybody is bulled up. Everybody is like, we're going way up there. That may be the case, but it is fascinating to see that there's no hedge on the market that's important as of right now. No, or at least the gamma, the gamma side of puts, there's zero below 5,000. What do we got here? Gem lately is short underlying. Long calls and long dated vol. Yeah, I was a little concerned if there were two things, I think there was two or three things on Sunday that piqued my interest. One was seasonality. If you're a bear, if we wake up one day I would not be shocked if we woke up one day this week or next and we're like, oh wow, we're down 100 points like tomorrow. I would say to that too, if you are along this market, do you have any kind of protection, or can you handle that reset? Sometimes it's not always doom and gloom. It's just the market resetting itself. The second thing that bears had going for them was the gamma market. I mean, or if you just look at SPX gamma, there's no floor. It's glass. Now that doesn't mean we go down either, but we do sometimes love to check down there. The last time we had a situation like this, we rode straight down to it, busted below it for a brief moment, poked the head around, and then came right back up again. And we reset the entire options market. So just be aware of it as the week moves forward. That's still down there. And looking at the chart right here, right? This is 504 right here, right? My cursor is. That's not too much lower. You see it down there? There's that daily trigger down there. It's currently sits at 497.63, and I bet that's that same place that we can see on gamma down below, just peeking your head down there. So for me, at least this morning, looking for a dip buy lower at this point. We'll see where we go with that. You've got 480 puts for 419. I've got puts on the market still. I have a put hedge for March 28th, protection. It's been pretty much in the money. Well, not in the money. It's been pretty good twice so far, but I still have that hedge in the market. Haven't dumped it, and that's my protection. I got to have that so I can feel safe trading, just in case, right? Good morning, Juice Box. How are you? Let me see. Dealers going to walk us down. You know how that goes, right, Carillo? It's not that we aren't going up. It's that they like that reset, right? Make all of you rebuy a second or third time. What else did I hear? If Jim Cramer is saying buy the market, then sell the shit out of it. Did he say that this morning, Jimmy? Did tell me Jim Cramer didn't say buy the market this morning? If he said that, then run. Good morning. What's going on there? What do we got there? Beef Frank, what's up? Bull for trading. Yeah, Bull for trading's like, oh no. Kramer said buy the market. All right, so we're gonna let this open up. I'm gonna grab a cup of coffee here. Whoop, right here. You guys know what to do. You guys know what you're looking for too, right? If the market gets bought right off the opening bell, typically goes something. Here, I'll draw this out for you on the open here. You usually get. Oh, I don't like that. I don't like the look of that. That yellow. It's so rough. And like 1 point here. Okay, so let's put that away right there. You guys already know how this goes, right? You get the buy off the top, right? You know, you meet that one right there. You get that one right there. Come back down over here, right? Sit park right there. Whoop. Something like that off the bell. I'm still not liking this here either. I would expect this to come right back down, right? Something like that. And that's maybe the bull trap right there. break underneath, and then whoop, straight down there. Something like that. You guys see that right there? You get like the push up, the push. Everybody's all bulled up on a Monday. You get up there, you catch yourself a new high, and then boom, they just dump it down on you. And the real dip buy was lower. So we'll see how this plays out on the opening bell this morning. Maybe I'm wrong here. I could be wrong, but I'd rather take the long. I'd rather take the long up here somewhere. If you break above and then consolidate down there, and then we start heading higher. I'd be down to jump on that right there. Right there. So we'll let the market open this morning. Let me know in the chat what you guys think. Do you guys think that we go straight up on Monday? It's possible. It is possible. No, but CNN is pumping it. So wait a minute. What's going on here? I got somebody connecting to my thing right now. Give me 5 seconds. I'm going to come right back with you guys. I got a session disconnect, and I don't know why. You see this? Somebody's connecting to my account right now. You or somebody else just logged into my account from a different device. Give me 2 seconds here. I'm going to try to find out who's connecting to my account right now. I'll be right back with you guys.
NVIDIA's the leader just because he had a vision of which, candidly, remember, no one adopted his vision until ChatGPT. Yeah, look, Chat, which is at the heart of the lawsuit, brought to the fore how great it could be, but it's really NVIDIA's chips. But I do want to spend a little more time on the Equinox versus the Equinix, because I think that's going to move stocks. Got a lot of stuff that's very positive, again, about Eli. Again. And a lot of it, there was a Lancet piece that came out last week. And the Lancet piece...
We'll bring up Tesla. I posted that chart for you over the weekend.
And the only way to really control obesity is not diet and exercise. People don't have the willpower. It's diet, exercise, and GLP. And if you don't do diet, if you don't do exercise, by the way, you're so frail, unless you get the protein shakes by Abbott, which is another great thing, that Abbott's got a protein shake.
Jim's referring to an ad by Equinox, the gym, which folds in GLP-1s as part of the pitch.
Regimen,
to some degree. By the way, UBS goes Lilly 810 to 910.
Yes, that was a very good piece.
There's the ad. We've talked any number of times about the fact that you do lose muscle mass on these GLP-1s.
Right, and there's shots, not
particularly
pills.
for an elderly population where it's, you want to keep as much as you can.
And that's why Abbott's taking advantage of it, because
you see a chain of gyms and the like advertising saying, incorporate us into your overall usage. So
well, look, theoretically it makes sense. I mean, they talked about getting payer coverage. The payers are starting to get very stingy, starting to do a lot of denying, and that's a problem because these are the comorbidity issues. We learned that during the pandemic, that obesity is comorbidity, and diabetes. These are the people who die.
You saw the Goldman piece over the weekend. If 60% who need the drug take it, and it's 90% effective, GDP up 1%.
Yeah, you know, those are the kinds of things that happen. I remember a piece that recommended American Airlines because the planes will be lighter from GLP. I mean, we can go anywhere we want with this thing. I'm not kidding. I saw it.
I know.
Every pound counts.
That was like, I came out and said,
lighter.
I said sell GoPro because I was in Japan and I saw a goat with a GoPro on a surfboard. I said, that's it, 96, enough. So let's be careful. That was the height of the, yes, the airlines hold to buy GLP. That was the dumbest.
That was right.
That was a dumb call.
It hasn't stopped Lilly, though. I mean, if you'd sold then, you would have been a bad sale.
Lilly has
even if you thought that was the top.
They have the factories, and the cost of fortune. These are like foundries. They're very hard to make. They've got 2 in North Carolina.
Well, that's why Nova went. Remember, they did that big deal in part to buy control of those.
I know.
I'm also going to put IWM up this morning.
Viking on CNBC.com, which is worth reading, although I just think Viking is nowhere unless they get a takeover bid. That's what we posited, but they just did a second. They just did an all equity offering.
Viking, though, shares were up well over.
IWM looking great this morning, by the way.
For their GLP-1.
Which is way too early. And the FDA historically doesn't like Me Too drugs coming in from companies that don't have pedigree. The FDA is just like us. I mean, they're not sitting here saying, "Oh, Viking, let's help those guys so we can get them to do banking." I mean, the FDA is just saying, "Listen, Louis got it. Louis got the Zepbound, and people are not getting sick, even though there's like 42 different things that could go wrong." No, who knows about these guys? By the way, Viking Cruise Lines is coming public. Viking versus Viking, David.
Viking versus Viking, yeah.
Yeah, like Royal Caribbean? Yeah?
Oh, yeah, love it. Yeah, it's great.
You like the 13th row down, the 13th deck?
Are there 13 decks? Or the
I don't know. Where's DiCaprio? What deck was he on? Was he
Steerage.
Steerage.
Yes, third class.
Steerage.
Yes.
Yeah,
I was just trying to find my notes here.
Yeah, what are you looking for?
No, I'm looking at Tesla shares because they are down another 3%. We mentioned it, obviously, but shipments from its factory in Shanghai,
22.
lowest level in more than a year. A lot of stories of late about the strength of Chinese
BYD
automakers, and obviously EV is a large portion of that. Stories about how they're going to be flooding the market in markets that will take them around the world because, of course, the Chinese economy is weak. You do not have the level of domestic consumption that would be there to actually buy all of these automobiles. These are all, many of them are subsidized companies to a certain extent. That'll be an argument, of course, that takes place when you want to put even more tariffs on these things potentially, but they're going to be everywhere, maybe not in the U.S., but, you know, Phil last week was in Chile. That was a great story, just showing the strength of these Chinese brands in these markets. And then you obviously have the advances that are being made by these Chinese automakers. Again, a separate Wall Street Journal story, some good stories there. Just how quickly they're moving. I know. And then Bernstein, I know you love Tony Sacconaghi.
Are you going to do that to me?
But he just says, but the Journal added, BYD launches a new product. BYD makes it seem effortless. Why is launching a new product for Tesla appear to take forever?
No, look, if you're going to subsidize, they win. Remember, they're done subsidizing real estate. That turned out to be a bust.
8, 2, 3.
Bogus numbers about their GDP growth. Good luck. And then
We got 50, 70. Where's SPX gap?
Speaking about the plan,
They canceled the press briefing.
Well, that's positive.
For not
Give them a
just this
flip
year.
set. 50, 70.
It's going to be the case for apparently the next few at least.
They have more debt than we have. Can you imagine? And I believe, by the way, I just want to say on the record,
have their debt to GDP.
Their
debt to GDP ratio.
Gamma Flip has risen this morning. Just a heads up down below here if you want to see it.
We'll point out, just so people know.
There's your Gamma Flip down below here if you want to take a peek. Watch my cursor down here.
Bitcoin.
Now at 50.70 this morning.
I don't trust these fiat currencies. So let's just be as a hedge, a diversification hedge.
Including our own?
Yes.
With our 36 trillion.
I think the younger people believe that there's no way that we can ever make good other than to inflate, to make it so we're paying with cheaper dollars debt that was
We've pointed out many times interest costs have moved up dramatically in terms of as an overall pull on the U.S. budget, one of the largest now.
And Bitcoin's as good as natural gas is bad. Natural gas is the lowest this century on inflation ingestion.
Now EQT cutting some production on these low prices.
That's a good company.
Even crude today, or at least earlier. OPEC Plus extending some of the voluntary cuts to mid-year.
We're producing 13.3. We're going to go up to 13.5. I am so tired of reading the stories which say we're done growing production. All of these mergers, David, are about the production, both, of course, where you went to, Guyana, but also because there's just so much oil in the Permian, and we need to have more, let's just say, there has to be a rationalization.
Meaning what?
They can't, there's these companies that have to get rid of their overhead in order to be able to just drill more. I mean, I have Qatar tonight. They've got a plan to shift out of Marcellus into Permian. They add 1 or 2 rigs. You don't need to add that many rigs, but there's so much oil in the Permian that it's just you
I'm going to read something for you here this morning. Give me one quick second.
Diamondback boy.
Diamondback.
I'm just going to read you quickly a morning note. The S&P 500 is moving sideways at the start of the week and is currently sitting at 51.25, while Daler Net Gamma position declined from 900 million to less than 700 million. We are looking for a fairly quiet day with the straddle riced at or greater or equal to 18, but the volatility is expected to increase throughout the week as data releases are picking up and will peak Friday with non-farm payrolls print. Central banks will also play a prominent role with Powell testifying before Congress and the ECB communicating their interest rate decision. Over in China, the National People's Congress will begin tomorrow, continuing through Friday. Do you guys remember the last time Z had one of these guys get dragged right out of that Congress, and the ECB is communicating their interest rate decision? Wait a minute, hold on. Sorry about that. The National People's Congress will begin tomorrow, continuing through Monday. Financial Times reported that China's President Xi is resisting pressure to increase stimulus efforts. That is negative for the market, by the way. Gold is getting some attention today as the precious metal is bracing for a breakout. Per GS, perhaps a mirror of its digital counterparts. But what, if any, signal is being sent to investors from the rise in crypto and gold? Is it perhaps that deficits finally will begin to matter, that inflation is going to remain stickier than the market is pricing, or that liquidity is still ample despite high nominal rates? Oil also broke out of its range to the upside with a strong weekly close on Friday. So we'll take a look this morning at both oil, and I'll put up oil and the gold chart down below on the bottom left-hand side of your screen.
They do own derivatives. We're not quite sure how much.
No.
They are in partnership with Brigade Capital Management as well.
MU being bought this morning right on its hourly trigger at 94.61.
As potential equity investors as well.
I'm going to hear what.
And listen, they've got serious advisors. I mean, Jeffries is on the...
Gold with a breakout this morning. Let's take a look at that right now. Gold being bought immediately this morning, right off the opening bell this morning. So keep your eyes on gold.
I don't want to dismiss them at all at this point. No. Today they're having a dinner tonight.
Coming into its first resistance at 2,100.
Risk arbs to try to convince them that they're serious.
Well,
so you'll hear the pitch from management from Arcas as to why they perhaps are serious here.
Okay,
but they're trying to convince the investor base, obviously, here that they are trying to put pressure on Macy's management, which has previously said no thank you. And to your point, it is a real estate play. There is a question, of course, if rates are going to come down, why wouldn't you just wait?
Well,
because
okay.
They got a little Y in there.
To potentially realize some value for these real estate assets.
Yeah, you know, Terry Longgreen came out this weekend and said we already tried.
Gold ripping face off this morning. This is the chart for gold.
He's the new CEO. About how he's going to basically Bloomingdale-ize this chain by closing the bad Macy's and put more Bloomies up and put more Blue Mercury. But I think that he heard his case by saying, listen, it's going to take a little bit. Yeah. Because what you really need to be able to say is I can get to 24. I can get to 26 in 2 years versus your 24 now. That gives the board a little more of leeway.
Yeah, but why not sold to you at 24? Here you go, Arcas.
Okay, because he started about 6 weeks ago.
Do your best.
Well, because you know,
Arcas, Draft House, whatever. Make a movie theater chain. I don't care.
Waffle House. Okay.
Waffle House.
Waffle House.
Park House, Draft House.
Another note this morning, Goldman's Pravotsky, the market wants nothing to do with energy stocks, stuff you can drop on your foot, pour into your car. Don't have an AI semi-angle. I think it's a good contrarian bet. Tesla bleeding right now this morning.
Rejecting URI with a little billion-dollar deal. We're going to hear from Kroger's.
We're also going to bring up XOM on the chart down below as well.
And there's a real question on that deal.
Outdoor's done everything.
MNC was rejected, 35.
They've done everything they can to change that company from being like.
They're going to need CFIUS for the current deal they have, though, because it's a foreign buyer. There are a number of J.D. Vance has come out and said, "What are you doing here?"
This has done a good job. They're a good company.
We'll see how long it takes for them to
steal them.
Get that CFIUS. That's a national security review. And again, it is notable when you don't have a unanimous vote of the board to reject. Obviously, MNC is hoping there's going to be something for them to do at some point along the way there. They make ammunition.
Well, they know they do so much more than that. That's the negative rap, David. That's why I had them on, because they do so much more than ammo. Oh, they've got all sorts of stuff for when you want to hike. They've got really great hiking stuff. They're not just an ammo company.
They're not.
No.
Isn't ammo the main part of the company?
They're not. They're sporting goods.
The hiking stuff?
They're sporting goods. Think Cabela, okay? Ski, bike. They have the best.
They'll give you the hiking stuff so that you can hike.
Helmets are.
When you need the gun, then you can shoot the thing, whatever it is you're hunting.
Yeah, it's just, they do have shotgun shells. That's the rap against them, okay?
That's the rap against them. That's what they do. But why they should be sold to it, I think it's a check. Is it a check?
They're cycling company. Have you ever been to Cabela's? Stay away from the gun library, my friend.
I've been there once.
Believe me, you'll come out with a 12 gauge.
Yeah?
Yeah. I don't
think so.
In company apocalypse, you think you at least have a couple.
I mean, I've done some training.
You ever use a Tommy gun?
Excuse me?
A Tommy gun.
A Tommy gun?
Yeah, I used a Tommy gun about 6 months ago. It's really kind of.
Really?
Yeah.
Were you in Vegas?
I was
to the gun show?
Ski.
Oh, really?
Yeah.
Were you wearing a suit like you were Al Capone too, or what?
No, I was wearing
a copper.
I have to tell you, I'm going to get in trouble by saying this, but I like to shoot skeet. I have not.
Nice.
You don't use Tommy guns to shoot skeet.
No, but that's kind of a turn on, frankly, it was. To have an actual Tommy gun, I mean, with the circular thing, and just like blasting the skeet from every side.
Yeah,
shoot.
That's not really sport as much as having a.
David, it's plastic things. It's not like I'm not taking a family of deer out, thumper.
We need the deer population reduced.
All right, I'll take it. Oh, I can take out a family of deer in a second.
They're a menace.
Jim, really quick, in media today, we're going to get Netflix presenting Disney, Morgan Stanley, 135.
Did you read that? Experiential.
And Dune 2, best debut of the year.
I mean, everyone says I got to go watch Dune 1. I guess so. I mean,
I watched Dune 2. I didn't watch Dune 1.
We went back and rewatched Dune 1 to get ready for
I'm told you have to watch Trader 1 if you're going to get into Trader 3. That's from Peacock.
Trader.
The reality channel.
T-A-R-A-I-T-O-R. I don't know if our audience heard. It's on. Well, what network is that on? What streaming service is that available
There's
on?
a Peacock in season 1.
Thank you.
Actually, in the
This is
Scottish
a beautiful
castle.
movie, I have to say. Yeah. I didn't have a clue what the heck was going on, but it was beautiful.
On Disney, the bull case in Morgan Stanley Jim's 165, and a lot of that's about profitability in streaming down the road,
look,
they say.
This is their chance. I really feel that they have to do something because, remember, I know that Nelson Peltz, stalking horse for Ike's Perlmutter, but the heat on these guys is pretty heavy. A lot of heat.
Who? What? Which heat? Heat on who? On the board?
On Iger and his team.
Oh, yeah, right.
No?
I don't know. We'll see. They're going to, listen, between now and the vote, roughly a month from now, they're going to be spending a lot of time with ISS and Glass Lewis and investors.
Right.
At the very least, it's a big distraction for management.
Okay, so why is there a big X? Oh, man.
They were very happy they got the support of all the heirs last week. You saw that.
Yeah, they have I have more. My Chapel Trust has more shares than they have.
Great-grandnieces, great-grand.
Why are they taking it to the drugs again? I mean, it's just such an inconsistent market. There's no room for both drugs and, at the same time, data centers, as David said. I thought David was going to come in with a big rap on private credit, but I guess that's after the Blackstone dinner. He'll come in private. No?
What would you like to know about private credit?
No, I'm saying that I thought you might have been with a bunch of private credit people this weekend.
Private credit people can overlap with other types of people, sure. It's all within the alternative asset management family. The alternative asset managers are undercovered, to say the least.
Well, that's one of the things that I'm trying to get David to do. I want to dock on private credit.
I can't do a dock on private credit.
Why not?
Because there's nothing to show.
What would you look at?
What would you look at?
Money?
Yeah,
There's
people with
nothing
bags on their
to
heads and
show.
stuff.
Nothing.
Black
It's a
stuff.
visual medium. I don't know if you heard.
Do you know B-REIT was able to?
B-REIT had 100% of the 100% of the redemptions. Yeah,
I think that was
Blackstone's-
terrific. We knock them when they're down. Why not say something good when they're up?
Well, I was going to on Friday, but it was you and me, and you just talked too much.
What can I say? He's right.
Guilty.
He's right.
As we go to break, let's watch bonds today. The data flow doesn't really start until tomorrow, but we will get Harker at 11 before we dive in tomorrow with ISM services, factory orders, durables. It'll be a busy week on that front. For now, off of the initial lows, S&P 5133. Don't go anywhere.
Seeing spot gold hitting $2,100 an ounce on Fed rate cut baits. So it's in the Bank of England sells 750 million pounds of bonds in an auction, receives 1.47 billion pounds in bids, with an APF gilt sale operation cover ratio of 1.96.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%.
NBC.
Take a look at some NASDAQ 100 laggards this morning. You see Workday at the top of the list. Tesla, we mentioned earlier. Warner Brothers Discovery below 825 would once again take you back to 2009 or so. Google also with some declines of about 3%. Dow's down 74. Stop Trading with Jim's coming up next.
So Bitcoin rises to a new high since November of 2021 now. It's last up 5.4% at around $66,240.
Trial.
It's time for Jim and Stop Trading.
One of the most exciting stocks, perhaps one of the greatest stocks of the year, we don't talk about much, is Ferrari. Symbol race. And this thing has just been one of the great rocket ships. This morning, Citi comes out and says, listen, hold to sell. We just can't take this valuation anymore. And I get it because it sells at a very big multiple sales, 12 times. I mean, it is. It's just 12 times. It's too hard. It's 12 times sales. And I would say this, that it is part of the Mag 7 of Europe. You know, LVMH, there's a bunch of them that are good, Novo Nordisk, but I would not short this thing. I think that's, this guy even admits that he could be wrong in our timing. But this is one of the great stories of the auto industry, which is just, this is the premium greatest manufacturer.
Its market value is twice that of Ford's.
Well, it's better, yeah.
Yeah.
What is that, you know?
I'm just pointing it out.
2-year backlog. One of Jonas's longtime top picks.
Hey,
over
by the
Morgan
way,
Stanley.
Eddie Q on the board there.
Eddie Q's on the board of race.
Yeah, he's a very
Ferrari.
big car fan. I know my wife loves to drive cars.
The works of art, the margins are probably, it's like every luxury good. The margins are amazing, aren't they?
Well, they build them, and there is a waiting list. I mean, Lamborghini, big waiting list. These are just premium cars in a world where there's just a lot of rich people, as David described, because he hangs out with those people. I'm at Dollar Tree. He's at Data Center.
You're at the Dollar Tree. Yeah. He's at the Ferrari dealership.
I'm in the candy aisle. You're in the, I don't know, the Ferrari aisle.
Yeah, no, I am. It's true. Yeah, Ferrari.
You got to step up your clothes, man.
Start wearing the gear, the merch. Is that what you're saying?
Yeah, I was reading that.
You want me to come in my Ferrari racing suit? Because I'll do that if you'd like.
Well, a lot of the Bitcoiners that wear Brianna made me feel bad. I was reading a book this weekend about that. Number go up.
What are you mothering?
Number go up. I'm reading this book right now. I'm in the NFT section because I'm trying to learn Bitcoin. Like everyone trying to learn Bitcoin. Relearn, because I thought a lot of this was the ETF. I admit that, and then it broke down, and then it's been off to the races ever since. And there's a lot of people who just believe because, again, it's a diversification.
Bitcoin is up sharply
and I think there'll be an Ethereum LTF. You know, there'll be an Ethereum ETF, and then you're going to have to go buy that one and just get ready. Okay.
Yeah, 68,990 is the magic number.
I think it's unbelievable.
The highs.
And
how about tonight?
I have I have this next tracker, which is they make it so that the solar panels move, so you always capture solar at a cheaper price, software. And then Tom Jordan, who I think is frankly the most thoughtful man about oil versus natural gas. He's really cutting back Marcellus, going all in oil, and he's doing incredibly well, and it yields well, and it's just the stock to buy.
That's good. Busy week ahead.
Yes, an exciting week. And don't forget, State of the Union. We're going to hear something on union, something on ESG.
Okay.
All right.
Say so. Sure.
Yeah, no, I am.
Okay.
I am saying something.
Got it.
Mad Money, 6
So
p.m.
I'm going to see you at the private credit dinner tomorrow.
Yes, private credit.
S&P down about 4. Don't go anywhere.
Disclaimer.
Good Monday morning. Welcome to another hour of Squawk on the Street. I'm Sarah Eisen with Carl Quintanilla and David Faber live for you as always at post 9 at the New York Stock Exchange. Take a look at stocks. We kick off Monday morning in the red. The S&P just barely lower, I would say, after another strong week. If you look under the surface at what's causing it, some weakness in communication services, energy, consumer discretionary, utilities, and healthcare. All the other sectors are up. Industrials are leading today. So are materials and financials. So the cyclical groups tied to the economy are actually performing a little bit better. The Nasdaq's off about 0.25%. Again, we're coming off of record levels in all the major averages. Take a look at treasuries, how the bond market is starting off the week after we have seen a little bit higher yields. They're higher again today. The 10-year goes above 4.2. The 2-year yield just below that 4.6, 4.57, ahead of a lot of data this week, including jobs. We're 30 minutes here into the trading session. Here are some movers we're watching. Shares of Supermicro soaring again. The AI server maker getting added to the S&P 500. The stock is now up more than 200% so far this year. More on the company's wild ride ahead on the show. Macy's is rallying this morning. Activist investors Ark House Management and Brigade Capital, well, they're raising their offer to buy the department store chain by almost $1 billion in hopes of taking it private. The new offer now works out to be $24 a share from $21. We'll see if the Macy's board takes it more seriously. And Apple continues to be under pressure. The tech giant hit with an almost $2 billion antitrust fine in Europe over Apple Music. The company says it will appeal. Separately, Apple unveiled new versions of its MacBook Air laptops with its latest M3 chip. And then shares of JetBlue and Spirit Airlines on the move. The two carriers terminating their $3.8 billion merger plan coming weeks after they lost a federal antitrust lawsuit that challenged the deal. So that was a win for the antitrust regulators. But guys, as far as the macro data and setup, we do have a big week ahead. Some highlights this week to look forward to. So on Wednesday, Fed Chair Jay Powell is going to be testifying before Congress. This is the first time we've heard from him publicly since the 60 Minutes interview that he did in early February, before we got a little bit of a streak of hotter data on inflation. So will he be more hawkish?
Protect your trade from
Before we get with more, I think we have some breaking news.
We do. I have some breaking news out of the Supreme Court. For that, we're going to turn to Eamon Javers in Washington, D.C. Morning, Eamon.
Good morning, Carl. It is a 9-0 unanimous ruling from the Supreme Court reversing Colorado's decision to remove former President Trump from the ballot. That means that the former president will be on the Colorado ballot tomorrow, Super Tuesday, in Colorado and other states. The Supreme Court here ruling 9-0 that, in fact, he can stay on the ballot. Also, a decision here that is going to impact all states across the country. There was some
here we go here
in the oral arguments about whether or not a single state or a small handful of states could move under the 14th Amendment to remove a candidate from office by saying that that candidate had engaged in insurrection.
Tesla getting crushed on the open.
Decision now by the Supreme Court says that's not something that an individual state or small group of states can do.
I wondered if Tesla was just a flush. Let me look.
Congress could do in the future, single out a candidate and say that person engaged in insurrection under the Constitution.
Bookmap is clustered
From being a candidate for president.
Take a look at Bookmap really quick, too.
Or other high office. In this case, however, the Supreme Court saying 9-0 that
go over to
is reversed, and the former President Trump will be on the ballot.
Let's take a look at a Bookmap on a larger basis here.
Thank you, Eamon Javers, on that important decision. I mean, haven't actually heard a lot about politics yet.
Break time, be right back. The old man.
Smart people about what it's going to mean. Say another Trump.
Let's take a look at. Someone mentioned Bookmap this morning.
When he was elected, and I don't know. What do you hear?
Looks like straight garbage, doesn't it?
The situation is very different.
I mean, tell me that doesn't look like straight garbage to you.
Coming up more often, as you might expect, as we move deeper into the election season. I think there is a.
It looks like garbage.
Front, for example, that if
or at least the index is not quite garbage, but you know, it doesn't look like.
More amenable to deals overall, but also
looks like a lot of like month start flows. If I was looking at this, I would say it's beginning of month flows.
If a company fell afoul of him personally, he
doesn't look like much to me.
sort of direct.
It looks like, well, what this thing right here reminds me of is what we were discussing on Friday with
Trump's desire.
Volwiz, which is you are way more nimble than a bank. Like banks are big elephants, right? Waving through, and this looks like, if it was me, I would be sitting on the sidelines right now, just letting this week open up. Even some of the morning reports that I read today said the same thing. You just kind of let it do its thing right now. Let's see if we can see anything better here. We can catch anything from this. It just looks like a bunch of supply coming into. Looks like a lot of supply coming in right now, but I'm not taking this as bearish. I'm looking for a low to buy this week. Are you guys looking for a low to buy this week or no? Hold on 1 second here. I gotta do some finagling. And even look right here, right? You've got SPY with the quick squeeze up, right? Looks like they matched this previous high. Talked to you this morning about some kind of like possibility of like the trap up here. You come up here and then we roll down, right? Looking for that weekly low. But maybe everybody's all bulled up. I guess maybe everybody just wants to go higher now. Look at that right there and see what happens. See if we can get closer here. They're testing that 1 minute trigger right now. We'll keep our eyes on SPY right now. XOM getting rolled this morning. If you watch down below, they're not even waiting to start selling it. It doesn't look like. If you are a pro subscriber, I did post a good short on XOM, though I think it's higher. It's not right here. Looks like they're just selling it right off the open this morning. And I think they were pumping oil today. I swore I heard people on CNBC trying to pump oil today. IWM, a little bit of a sell right now on IWM in the half hour. They came up onto R1. Not necessarily bearish or anything. Still looks like consolidation. You've got a dip buy down below at 205. We'll look at Tesla really quick. Tesla getting blooded this morning on a half hour basis, trading 192. And they have a half hour trigger rolling down on 199.88 on the daily trigger. We'll pay closer attention to Tesla. Was there any Tesla news? Give me 1 quick second here. I swore that I saw some Tesla news this morning. Why is Tesla getting blooded? Is there anything that did Elon do anything? It's always my big question. Elon Musk. Tesla China shipments plunge. Well, that's not good. That's not good. Tesla China shipments plunged to lowest in more than a year. This was 5 hours ago. Tesla China made EV wholesale sales decreased 19% in February of 2024. That's not good for my idea of Tesla continuing higher to get to 220, is it? And not only that, but someone asked me what the catalyst was for the rejection above. Now we've got I've got projections of Tesla going to possibly 280, or a rejection at that 220 on the upside. But even so, I figured that it would still trade the downside target of $78. And someone asked me someone had asked me what's the catalyst, and it looks like they're coming in early this morning, trying to produce one of those catalysts, which is the China sales. And I'm really afraid of Chinese EVs coming to the United States, if they ever do, or in scale like they are in China right now. It's a hard one to say, but there's a whole Tesla argument coming out, right? That AI has surpassed EVs and Tesla, and that Tesla's not the story anymore. In truth, I'm more afraid of competitors to Tesla, to be honest with you, especially the entry level cheap Teslas. Even my oldest daughter right now, we're discussing getting her a vehicle, and we're talking about getting her an EV. And some of those Chinese EVs, I mean, I know we can mock the safety and all of that of those EVs, but EVs in general are, pretty reliable vehicles, right? They don't have a bunch of moving parts like an ICE vehicle does. But the price on some of those cars in China, they can't be beat. They're going for like $15,000, right? $20,000 for a new EV in China. I thought that would be later in time, but right now Tesla looking ugly. It's getting blasted down on its daily trigger right now on the half-hour basis, trading $193, completely washing out a bunch of call holders likely. Now there is something to be said down here. If you take a peek, excuse me, at Tesla, you can see that the demand came in down below here at 182. Demand came in again over here at 189. Demand again came in at 190. So it will be interesting to see if buyers show up again today on Tesla. Looks like we've got a little bit here in the half hour. Watch this tick right now. You just watch this one right here. We'll find out if the buyers step back in and buy Tesla down below here at 192. If it were just washing traders out, or if this is the actual roll. We'll keep an eye on it because I've got Tesla going up much higher. So this has got to be hurting Tesla bulls this morning. There's no way that it's not. Let's see what you guys are saying in the chat right now about Tesla. Oh, wait a minute. You got a great pod on Macro Voices recently that talks about the likelihood of China taking over the EV market longer term. Yeah. So I posted a career low. I posted a link on Twitter last week about connected to the Southeastern Michigan projections for the economy in Michigan into the 2050s, I believe. And it was wild to read. Now, this comes from the University of Michigan and business leaders in Michigan. And they were discussing the ICE vehicle market, EVs, because Michigan is trying to attract EV business development, battery development as the future for Southeastern Michigan. And the ICE vehicle market in particular is going to go away by all estimates, or at least I'm assuming that these people know insiders in the U.S. car market, and their outlook for ICE vehicles is very bad. In Career Low right now, talking about the podcast he was listening to, Career Low, what did they say about China taking over the U.S. EV market? Is that a possibility or not? That's one of my greatest fears is we probably have to go to some kind of a trade war with China. Even with tariffs, they're still cheaper, and they're doing something that Elon invariably created, right? I'll give Elon something, right? He developed EV manufacturing or assembly manufacturing, the processes for it to be profitable. But then when you see the scale that China's doing it, China's like, we're going to build a factory in like a week. You guys want a factory over there? And then they're like, okay, we're going to put in all this equipment. We don't have the equipment. Let's develop that. I'll have it done by the weekend for you. And my mind is blown by the scale and speed that China can just do these things. Yeah, I'll try to find the post and repost it for you if you're interested in this stuff. I mean, Michigan is still a really insular place. When I saw that reports for the future of EVs, and when I saw the reports on the future of Michigan, it gave me cause for concern, because I'm assuming here, not only the data and the the technicals that they put into this white paper, but they know each other, right? These guys all know each other, and I was shocked at the decline expected in ICE vehicles. I mean, it is like a straight down. It's really bizarre. It's like ICE vehicle, and this isn't all vehicles. This is the market for, I don't know, retail consumers. We're not talking about people that are ICE road truckers up in Canada, or the military, or I guess not. There's a part of the military that could use EVs, but it was shocking to see the regular consumer, the expectation that there will be no more ICE vehicles heading into about 2030. 2035, I think that's where the real big crest happens. You don't see an all-out flush with Tesla, simply because the long-term diehard Tesla bulls will not give up quickly. Capital, I think, will cause Tesla bulls to capitulate. I think it's a mixture of, what do I think the capitulation is? I think it's China, the threat of China, number one. Number two, I think definitely AI to some extent. We've seen this in the past, right? We've seen it with all kinds of different tech, right? The shiny diamond that's out there, people are like, ooh, over there, I want to follow that, whether it's late cycle or not. Yeah, I think that is an issue for Tesla, and we already know that Tesla's its own thing, right? So it doesn't really matter what X is doing. It doesn't really matter what SpaceX is doing, Starlink, or any of his other companies. It's not a part of Tesla. Tesla's its own thing. You know, Joe Donut was saying to me the other day something that made sense to me, and that was he said it's tough for Tesla right now because
leading edge of news for non-farm. Then sign up today and get our special offer.
It's not that it isn't great. It's that it's going to take a lot of years for Tesla to realize a lot of their forward progress, and that's of concern to a lot of Tesla bulls. That a lot of the yeah, this is unique, and this is cool. Some of the origination, or some of the original part of that, is going to take a longer time periods than it did ramping the start of production on EVs to be profitable, right? To be a true EV company, like all that shine is going to be spread out over time now, and not like, boom, we just did this, boom, we just did that, boom, check this out, boom, we got that going on. And I agree with that. I agree that there's more space now, more time for Tesla to mature. Whereas, you know, it was like ragtag and all this and that. Maybe it's not so much like that, but like what once was. So bullish on Tesla, just not the growth company that they were thought to, or they were at one point. The unique, like brand new shininess, right? That diamond that you're like, oh yeah, I got to have that over there. It's losing some of that mystique right now, Tesla. At any rate, I'm not bearish on Tesla at the moment. If you want to look at the Tesla charts down below, I really want to see what happens above here. If we come above to 199.88, if we come back up right here, I would be extremely bearish, though, on Tesla if we come up here and we get that immediate rejection to the downside on the hourly trigger coming down. And that report this morning does not help bulls. That report from China, we've discussed this on the show already in the past, which is the threat of EVs from China. It is dangerous to Tesla. You know what else is weird about this too is I didn't really have a fear of competitors to Tesla. I was like, oh, this is all good, right? You bring BMW in, Toyota's trying to fight the whole thing. They're trying to do liquid water and stuff, fuel. They want explosive cars, even more explosive than battery cars. But I think Tesla competing against U.S. car makers and to some extent European car makers is different than the competition. Well, first of all, selling Teslas in China, but then also the threat of Chinese EVs. They remind me a lot of Japanese cars in the early or late 70s and early 80s. If any of you know the history um, of U.S. car makers, they literally dropped the ball. They literally knew. They knew that Chinese or Japanese vehicles were coming to the U.S. and that they got great gas mileage and that they were economical and that they were easy, right? And they said, "Fuck this! We're gonna make 8-cylinder hatchbacks that have horrible gas mileage, and we don't care. People will buy them." And they didn't. Americans at that time embraced Japanese automakers. As a matter of fact, my dad owned a Toyota B1000 or something like that. Whatever that, maybe it was a T1000. I don't remember. But people loved them. I remember when I was a kid, everybody's parent wanted to get a Honda or a Toyota or a Datsun. I think it was the Datsuns were back then too. Like they had Datsuns and Nissan, and it was huge. It was a big moment for U.S. car makers that started to declare bankruptcy, and some of them barely survived that push into the U.S. car market. So I would assume that people remember that there are people alive right now that remember that and are scared of that rush. Yeah, do you remember that? Remember the Datsun? Do you guys remember the Datsun that had the two chairs in the back with the? I remember when I was a kid, I was walking up the street from school one morning and I saw a Datsun truck, or I don't know if it was a Datsun. It was maybe it was a Subaru. It was like a Baja looking little truck, but it had the back open, and there were two bucket seats in the back with handlebars and like BMX bike grips on it. And as a kid, I was like, that is the coolest thing I've ever seen. I want to sit back there and I want someone to go four-wheeling with me in the back of it. That's how we lived. Do you guys remember that? What was that? Oh, it was a Brat. Was that a Subaru Brat? Is that what the make of that vehicle was? Or a model? Subaru Brat, maybe? It was the coolest thing. You couldn't make that car today in the U.S., could you? I don't think that would be allowed. You're just like party rocking in the back of a truck with a plastic bucket seat. I don't even know if were there seatbelts in those things. I don't think there was. Let me see if I can look it up right now and find it. Subaru Brat. Let me look at the picture. Let me find a picture of it. You guys want to see some sauce here? 1980s. Let me see if I can find a picture of this thing. Oh, yeah, this is it right here. Let me see if I can show you guys. This is the Subaru Brat right here. Look at this. I mean, this is the lap of luxury. How could you want anything more than two hot chicks in the back of your Subaru Brat? You got extra seats for them in the back. You go to the beach. This thing was terrible. It wasn't terrible, but talk about dangerous. Oh, dude, it did. So see right here? It's got the two little handlebars right here. Look at them. You got the one handlebar right here. And you got this one right here, too. So you're like a stud back in the day. You're like, come sit in the back of my my Brat. Can you imagine? Can you imagine your wife? Like, I brought the Brat home. We're gonna take the kids out this weekend. We're gonna race down to the I don't know, the drive-in movie theater. Spoo's climbing higher again. They had their SPY. Let's take a look at this really quick. So SPY came back in, took out this prior high right here. We got the next one over here to take care of. We'll take a peek at that one where that target is right there. Whoop. That one is right where this one is right here. You want to see that one right there? Let's see if you can take that one out next. So if you're long calls, you're looking for a target of 513. We'll keep our eyes on that one. Yeah, the Subaru Brat. Dude, raise your hand if you're out there watching right now. When you were a child, or were you a child of parents that? Well, I guess there's two questions because I was a child of both of these. I was a child of parents that smoked cigarettes, and when I was really young, right, they would smoke in the car and crack the window for me to let the smoke out, like a little crack. When I started to get older, it became socially unacceptable to smoke with your kids in the car anymore. But that was the first one, and then the second one was my parents had like a Clark Griswold type station wagon, and we would load up like friends' kids, us kids, and they would throw us all in the back of the station wagon with no seatbelts, and we'd just sit in the way back, and we'd go to like the drive-in movie theater. We'd go on for like a Friday night or a Saturday. It was nobody's business. I would sit in the back of my dad's truck. We'd go like dump runs and stuff. We'd bring like refuse down to the dump, and they didn't care. I guess I think it might have been the last generation of they didn't give a fuck about kids. I guess they say they don't care about kids today, but when I was young, woof, they didn't care at all about kids. Hold on one second here, guys. All right, I apologize for that. I just got brought breakfast. I'm very happy being well taken care of this morning. Yeah, the kids today are like, our parents don't love us. I'm like, well, I don't know. I'm like, my parents, they didn't give a fuck about kids. Well, I guess in today's world, if you did that today, you'd be thrown in jail or something. You do that to your kids, smoking cigarettes with the window up, and you get the kids in the way back. You're like, I'm gonna bring the neighbor's kids with me too. We're gonna go to the drive-in. One of your favorite things is going to the junkyard and picking pieces from the pile as a kid. We did that too when I was a kid. You'd go to the junkyard, right? You'd drop off your trash, you'd drop off your refuse, and there'd be a pile, and the kids would all be over there picking through it. I remember those days. Absolutely. Hold on one second, guys. Thank you. Got some coffee here too. Yeah, I remember that G-Dad Gold. I remember those days. That was a long time ago, wasn't it? I don't think you can do that anymore. The scrap metal pile was full of gems. I remember those days. You know what reminds me of those days too, G-Dad Gold, was I have been accumulating radios. Like I've been accumulating shortwave radios recently. I've been buying a bunch of that stuff. And I was thinking about my aunt who used to have, I don't know why I relate this to the junkyard, but she used to have a bunch of shortwave radios. And when I go and look at those things today, they're worth a lot of money. I thought they were junk. Remember how playgrounds were like the Marine Corps obstacle course? Yes. We don't have any of those anymore either, do we? Do they even make, let me ask you guys a question out there. Do they still make, I don't see them too frequently, but like, remember the jungle gyms where you'd have like the hexagon, like almost like a hexayurt to an extent, but it was like you'd climb up there and there'd be like a 20-foot drop if you climb the entire thing from the center of it, whatever the upside down dome was. It's not a jungle gym. I don't know what it's called. Yeah, the Dome of Doom. The Dome of Doom. They used to be like 20, or it felt like they were 20 feet high. Only the strong survived the old times. The Death Dome. They have that at Burning Man, right? They've got they've got something similar. Burning Man's got I forget what it's called now, but it was like those Beyond the Thunderdome, right? I think they call it Thunderdome. Any of you guys ever been to Burning Man? They got a dome there, and you can like hang out on it, and they put you in a harness, and you beat each other up with bugle sticks. Darwin playground equipment. You're getting black hands from the coins and the slot machines. Oh, gross. Mom, I landed. My niece took out all my uppers. You'd come from Romania, and their playgrounds looked like actual death traps, but all seemed normal back then. It's all right. That kid didn't make it, but you guys did. You'll be fine later in life. Dude, Tesla getting murked this morning. Straight murked right now. Look at Tesla here, blooding really bad right now. I'm gonna put on the pivots for Tesla now. In this early morning, I want to let you know here, there's probably a dip buy coming in on Tesla. 190.54, 188. I'm going to try to buy a dip down here, so give me a second. I'm not fully on Tesla doom this morning, and the fact that we've bled this far this morning, you figure we're trading 192.84. I'm going to come to a 1 minute trigger here, or a 1 minute basis here on Tesla. And I'm looking to buy a dip here. All this doom and gloom on Tesla this morning. They have looks like a double bottom forming right now. 190.60 and 187. 187.97. 190.60. So I'm going to set up a trade here for Tesla. Give me just a couple seconds here. I want to buy this dip. So right down here, this 190.60 and 187.97. So if you look at the bottom chart, let me go over to that chart really quick here. All right, so here's Tesla right now, right? For all the doom and gloom that's out there, I'll take it. I'm looking for it. I always like buying Tesla doom. Let's take a look on the 30-minute trigger here, or 30-minute basis. Lots of doom, right? Let's see if we can find a prior example of this and see if they're lying or not. So just even right in here, right? Just right in here. Lots of doom down here on Tesla. This looks pretty bloody, right? We've got the come back into the zero line on Tesla. And I know it looks terrible. Move this over here. Just right over here. That looks terrible, doesn't it? But look at all that. Look at all this vol here, right?
Securities regulations.
Even that, right? You got vol there, vol there. You got vol over here, but yet it still continues higher, right? Got this blood down here, but it's still continuing higher here. And we do have the cross though above. This is kind of negative, right? When you get this cross, the hourly trigger trying to cross right here. Oh, wait a minute. Back over here. This is significant here. This hourly trigger come down. Don't ever like seeing that. That's not positive. But in an intraday basis, whenever a stock ticker trades like this, up or down, doesn't matter. If this was in the upside for Tesla, whenever we come into these zones down here, this S4 and S5, it starts to pique my interest to either sell if we were on the upside of these two levels, or on the downside of these two levels that it's had enough and it's going to get a squeeze higher. So I'm going to try to put a trade on here in just a moment. I'm going to keep my eyes right here. And 190.60. Let's take a look at some 190 calls together, and see if we can catch a reversal here in Tesla. Give me one quick second. Let me take a look at this. Hold on here.
Where Bitcoin's reward for miners drops by half. If we look at where we are versus the last one, I'd say, which happened 4 years ago, we're in better shape. You know, obviously we didn't have the ETFs back then. If you look at things like derivative volume, it was nascent 4 years ago, now very high. We've just hit a record. And the ETF flows have actually surprised me. I was a little skeptical that they would take off quickly. And now we have close to, I want to say, $50 billion. It's about 740,000 Bitcoin held in these ETFs. Daily, we're getting between 100.
Hold on here. I got the chart open.
$100 million flowing in. So there's a lot of positive forces that are pushing Bitcoin up right now. And this is before the halving, which is usually after that fact.
200C.
Really skyrockets.
How do you describe to viewers
March 15th, they're $3.
Retail interest.
$3.25 for March 15th, 200C.
From like pre-2020, there was very little institutional interest in Bitcoin. It was a retail-driven.
We can get down to 190.60, 190. I'm going to put on this trade.
There is a lot of institutional money that tracks it. It's also why you see such interest in derivatives. The volatility in Bitcoin, I think, is one thing that really attracts a lot of institutional investors. And you have to understand that, you know, Bitcoin is...
I'm looking at March 15th, 200C. They're now down to $3.15. I'm looking for a bounce on 190 before placing that trade.
Price earning ratios, it's just a sentiment driven token. And what you can say about that, of course, is that sentiment has no limits. You can always be more optimistic. And so this rally may be the biggest we've seen. If we just look at where we stand today, pre-halving for Bitcoin, and look at historical patterns, that would suggest, and I'm not predicting this, I'm just saying if you applied the historical...
I'll bring someone's asking for Google right now. I'll bring Google up too.
Bitcoin being in excess of $300,000 at the peak of this next bull market.
Let's take a look at Google.
And since all tokens are correlated to Bitcoin, that means that all the other tokens, like
oh yeah, they blooded Google too, right?
Solana and some of these
Google with a double bottom at S4 as well.
in lockstep.
So I'll leave that one up for you too. I like the idea of the Google trade as well.
Directionally the same, but since they have a lower market cap, they tend to move up to a greater degree.
What about Tether? I know that your price doesn't move up, right? You're tied to 1-to-1, but
I'm long on Tesla right now. Pray for me.
I think it's the first stablecoin to ever do that. What is driving that? What's the significance of that?
Handles German finance minister says
it is the first stablecoin, and so therefore
shows that Germany is
and the biggest.
Sites. As we see a hybrid attack from Russia.
Tether is the entry point for acquiring.
Pray for me this morning. I'm long Tesla right now.
All the institutional buyers.
We could have a little bit more down to go. We could hit the 190 mark, but
then go and buy
I like the idea. Some March 15th.
All trading pairs.
March 15th, 200Cs
with Bitcoin are matched to Tether. Tether is the way you acquire crypto. So when you see the Tether...
Anyone out there getting long on Google, I've got that chart up as well right now. There's the Google chart down here. They've got a double bottom. They're coming into their S4 right now as well.
Not just through ETFs, but buying actually on the exchanges. And I should mention, you know, the exchanges only have...
I still think Tesla has more down to go, but it's close enough. We got the 15th, right? We got at least a week and a half.
There was a day not that long ago where the ETFs acquired 10 times in that day the amount of Bitcoin that gets produced in a day. So there's only 900.
Let me know in the chat if you think that you shouldn't be buying a dip on Tesla or Google.
So if this volume of buying keeps going,
I have a breakfast sandwich just came to me, so I'm gonna eat that really quick. Give me 5 minutes for a break, and I'll be right back with you guys.
To affect the price.
Yeah, definitely a far cry from 20K, which is where we were roughly about a year ago. William, appreciate it. We'll be talking soon. William Quigley.
All right.
Still ahead this hour, a look at one metric showing the consumer still spending, but not everywhere. New details of a new survey after the break.
Wait a minute, did I lose that? Hold on here. Put that right over there for you. Now I want to keep the chart up on the screen, too. I don't like flipping back and forth the Tesla. I'm all sweating bullets over here.
Theaters Friday.
Fintech company Fiserv out with its latest pulse of small business and the consumer. The company's small business index data from February shows the consumer still strong. Small biz sales up 6.6% from last year. Restaurants and drinking places seeing the biggest spending increases. Joining us to discuss this is Fiserv Chairman and CEO Frank Bisignano. He joins us now. Frank, it's good to have you back on. So there were some questions about the consumer after a strong holiday, weak retail sales in January. What are you seeing now?
Well, I think what you saw and what we had talked about in January is there was definitely a weather effect. And you can see in retail, foot traffic definitely helped out in February. I think you saw it expand across the board. And so, you know, as we had thought very well could happen, the consumer would be back and spending, and the early effects of January and the year-over-year increase you could feel. So I think the consumer remains strong.
What I love about this is that it captures small business spending, and we get a little bit of that with the sentiment report. But you're really going deep into the small business world. So restaurants were strong. What other categories stood out for strength and weakness? Retail.
I mean, sales across the board. Retail. We also saw it in trade contractors. I think what's important to recognize, given our size and scope, you know, 65% of our volume is SMB. I think also this is capturing more than card services. it's also capturing cash and check.
So strength in demand, but what about other issues that have plagued small business? Inflation, cost of capital, access to lending, real estate. Are all of these still headwinds? Oh, wait, Frank, I think we lost your shot. Do we have it? Oh, we lost it. Frank, we'll try to get you back on. Frank Bisignano.
Usually he comes across the street and sits with us.
I know.
So
That's what you get for being remote today, Frank. We'll get him on the other side of this break. Talk more about small business from Pfizer.
In the meantime, keep your eye on shares of Ferrari today. Citi does go to sell on some valuation concerns, saying that they would, quote, struggle to justify shares trading above €400 or around $433 per share. More on a different auto name after the break as well. Tesla, as concerns continue to grow around the company's China exposure. Shares a big laggard so far this year, down almost 23%. Don't go away.
Almost on cue, you've got CNBC chiming in with Tesla being down on the year. God, I guess you can just counter trade them, can't you? I just ate this sandwich. I was pretty happy with it. Elon Google weekly's off S4, but I think it goes lower still, just playing a bounce. Yeah, I'm not anti it going lower either. Best entry on Tesla would be 1 penny. I remember asking. I think Winky doesn't like Tesla at all. We were having a conversation once, and I said, if Tesla got to, or what price would you buy Tesla? And the question on that was an interesting one, with interesting answers from people. What would you own Tesla at? And I think the consensus at that time, let me see if I can put that away and put that away. I think the question, or we posed the question to people. Someone just said 1 penny. So my question to you would be the same. Even if you don't like Tesla, even if you don't like Elon Musk, is there a price that you would say, I'll buy it? I'll own it. I'll put it in my portfolio. Let me ask you that question, or pose that question to you. Do you have a price that you would say, yeah, I would own Tesla at that price regardless? Do you have a price in mind? And I realize some of you are going to be like, 1 penny. I get that. But for the rest of you out there, especially Tesla Q or Tesla Bears, is there a price that you would say, yeah, I'd buy it there regardless whether I like the ticker or not? Would you buy that $78 mark, or would you buy 60 or 50 or 25 or 1? What would it be? Right now, S&P 500 getting a little bit of sell pressure here on this previous high right above here. I guess we could draw this one in. So we can draw that one in.
Fiverr.
Pfizer Chairman and CEO Frank Bisignano joins us on the phone. Sorry about the shot, Frank. Next time.
Would you buy $100? You said you'd buy it $100.
It's a lot easier when I'm there physically.
I hate Tesla, but yeah, $75 you'd buy it.
These new results of the small business.
That's my question is to you. Is there a price where any of you would even own it?
Good news in February. What's happening?
Regardless of your disdain for it.
Lending environments. It's a trend we were watching.
That you could think to yourself, yeah, I could put this inside my account and hold on to it for 10 years and hopefully I get paid.
If you're in the payment flows, it's always very simple to be in a...
Tesla looking pretty bearish right now. This is the Tesla chart. They are still... This isn't looking too good here. It's flattening a little bit. The 1 minute trigger is starting to turn sideways.
I think
you just see that not so up here vertical, and then it's turning a little bit here.
They're continuing to drive their business very, very well across the board.
Wouldn't shock me to see one more down move, some kind of blood or some kind, but looks like it's turning around a little bit right now. You can see it. The 1 minute trigger is beginning to turn a little bit.
The consumer always, that's gonna drive it. I do think, that they will continue to invest in technology.
You might have to add to this position.
We see it in our increased software sales to them as they're continuing to think about how to drive their top line and manage their bottom line better than their largest, obviously, component or what they procure and their people costs. So there's great opportunity for them to grow and great opportunity for them to continue to manage their businesses better.
Followed by a Q&A in Washington. A text is expected for Fed's Harker, again, giving a presentation on the economic impact of higher education. So unsure how much monetary policy talk we'll be hearing from Harker.
No new high on that S&P 500 rip just then. We were looking for 513. So far, not having it. Bulls want to see that new high up there at 513 on S&P 500.
That help them manage everything from the amount of time they.
Frank Nano from Pfizer, chair and CEO, speaking about consumer discretionary XLY.
Every day for big business.
Yeah, and I think we view our job across our banking sector and across our small business that we need to be good for them to manage their businesses, and that means we're investing in AI to bring to them. You've heard me talk about it for our financial institutions.
I'm down 10 cents right now on Tesla.
Put a lot of knowledge to it. We're doing the same with data and insights into our small business, and we'll continue to do that. So we really need to be the operating system for these institutions.
It's a great snapshot of small biz and of consumer. Frank, thank you very much for joining us. We'll see you in person next time.
I'll see you in person next time. Great to talk to you guys.
You too. Frank Bisignano. We've been pronouncing it wrong all this time. The chairman and CEO of Pfizer.
Yeah, only for 20 years for me. Sorry about that, Frank. All right, if it moves, Phil LeBeau covers it. And today there is plenty to cover, from deals that are not happening, such as JetBlue and Spirit, to deals that might happen, not to mention sales numbers from the
JetBlue up 4.13% this morning.
Let's start with the airline.
Tesla's still blooding right now.
About an hour and a half ago, not a huge surprise. Both Spirit as well as JetBlue calling off their proposed $3.8 billion.
Gold still blasting above R1 now. Target on gold, 2119.
There's going to be a lot of questions about the future for Spirit. So essentially,
Q's getting bought right now.
How much will each of the airlines...
IWM still consolidating, looking for a target price on IWM of 205.56.
DOJ had already blocked...
XOM getting shanked this morning, now trading below S2 at 105.85. Target below at 104.33.
You've got JetBlue paying Spirit 60.
Google still kind of looking rough here alongside Tesla.
Dividend that they were paying Spirit shareholders.
It's got a triple bottom. It's down at S4 right now. It's got an S5 target of 132.01.
JetBlue, yes, the stock's moving a little bit higher today. The challenge for them and the focus for the airline, boosting revenues. And we've already heard from new CEO Joanna Garrity that her focus is on doing better in terms of how the airline is run, in terms of driving greater revenue growth. As for Ted Christie, who is the CEO...
I don't even want to look at this Tesla trade.
It's going to be on debt levels, as well as how do you cut your costs. And I know there are going to be people already saying, well, look, these guys are going to keep falling and going lower and lower. They were losing money.
I'm going to have to add to this position. I already know it.
For these guys at this point, though, you will hear plenty of that talk. And finally, guys, I want to remind everyone that coming up in about 40 minutes from now, we're going to be talking with American Airlines CEO Robert Isom. We're going to get some sense of their outlook in terms of as they look at 2024 and beyond. I really haven't heard long-term what they see for the company. That's what we're going to be doing in about 40 minutes.
So in 5 minutes' time
David
now, at
mentioned
the
just how
top of
busy
the
your
hour,
beat is today.
Fed
You want
Parker
to talk a
is
bit
due to
about
be
some of the
speaking in a
China data on
TED Talk-
Tesla
a
and
TED
the
Talk
U.S.
style
data on Ford?
presentation, sorry,
Yeah,
on
and
the
remember with
economic
the
impact
China
of higher
data, which comes from the
education,
China
as he's
passenger
followed
car.
Here we go right now, too. We're going to start, CNBC is going to start discussing Tesla China shipments. So if you want to listen in closely to this.
It's the Lunar
recorded
New Year
remarks or
in
the
China. So
pre-recorded
you
speech,
have to take these
unlikely to be
results on a monthly basis in terms of shipments with a grain of salt. But they're the weakest since December of 2022, down 16% year over year, 19% compared to last month, or 16% versus January, 19% versus last year. And quickly with Ford, look, 10.5% increase in sales last month, and hybrids are the story, with sales jumping more than 31% compared to the same month a year ago. We've talked about before, hybrids are in demand, and Ford is leveraging its ability to increase production of hybrids.
Tesla down minus 5.82% right now.
Of some of the EVs and other autos being made in China in markets around the world, not our own, of course, when you're in Chile. I mean, what
Tesla coming into S4 right now, 190.60.
The Roadster, I know, is expected fairly soon.
It's the next generation model. And how quickly can it come out, and how low can the price go? Look, that's where the growth is within EVs. You've got to get the price point down closer to $30,000. And I know there will be people who say, well, look, with the incentives and so forth, Model 3, you can get it down close to $30,000. You've really got to bring it down even further. And that's going to be the vehicle that they're going to be ultimately building in Mexico, though I think initial production will start in Texas.
Yeah, I think that's the only way to fight China. That would be a sub $30,000 vehicle, even closer to 20, to be honest.
Market coverage as well will continue with all the major averages down right now, but NVIDIA shares are up 3.7%. We're back into this.
So that was CNBC chiming in with the Tesla report. Yeah, you know, this is all material stuff. This really isn't like Elon Musk or anything like that. There is real concern about Tesla. I've got that same concern on Tesla, but that doesn't mean I don't think it's going up either. So I'm sweating bullets here. I'm going to trade on Tesla. We're testing right now S4 at 190.60. The low that was just had was 190.74 on S4 on Tesla. I'm going to read a story to you this morning. This is coming from Dan Niles. He's one of my favorite guys out there. Dan Niles is a famous stock market bear. He's always on, well, in my view, he's always on the stock market's going to crash, but he doesn't look so bearish right now. He's saying that he reveals that he prefers the Fantastic Four and when the AI bubble might pop. So he gives his opinions on this. I'm going to read this story to you this morning. Hedge fund manager Dan Niles has named NVDA, Meta, Microsoft, and Amazon as his favorite stock picks thanks to their ability to boost earnings in 2024. Niles, who runs the Satori Fund, explained that stock performance for big tech companies over the past few years has primarily been driven by Federal Reserve policy rather than company earnings. He noted that in 2022, the so-called Mag 7 stocks fell 46% as the Fed aggressively raised interest rates at the fastest pace since the 1970s. Then in 2023, when the Fed paused rate hikes, those same stocks skyrocketed 111% as investors anticipated numerous rate cuts, despite little change in their underlying earnings power. Quote, if you look at the last 3 years, the move in tech stocks had nothing to do with earnings, Niles told CNBC's Street Signs Asia last week. It's all been to do with the Fed. This year, however, Niles sees a divergence where earnings take on more importance for stock market performance. While shares of Apple, Tesla, and Alphabet have fallen this year in negative estimate revisions by analysts, Niles' four picks continue to see analysts raise forecasts, specifically called out estimate increases at NVDA, Meta, Microsoft, and our MSFT, and Amazon, thanks to their booming AI business. Those names are being driven by earnings, Niles asserted. For the four stocks, analysts have raised EPS expectations for this year by 50% on average. Let me mute that back there. For the four stocks, analysts have raised EPS expectations for this year by 50% on average since the end of last year, according to FactSet data. Meanwhile, estimates have stayed nearly flat for Google, Tesla, and Apple. The stocks have responded accordingly, with NVIDIA up 60% to date, Meta gaining 35%, and Microsoft and Amazon also outperforming. Now, I want to make a statement here about this. We always talk around here about outperforming the S&P 500, and how do you do that? If you can't do it, you're not going to do it if you're not going to do it if you're looking at tech stocks that are outperforming. You have to look for tech stocks that are underperforming the S&P 500. Tesla being one of them. The next question to Dan Niles was, when will the AI bubble pop? When asked if NVDA's continued surge is reminiscent of past bubbles, Niles pushed back. He drew parallels between the launch of Netscape's web browser in 1994 and the launch of chatbot ChatGPT in late 2022 to argue that it's still the early days in the current AI bubble. The hedge fund manager noted that after Netscape went live for the first widely popular web browser in 1994, tech stocks and the overall NASDAQ composite entered about 15 months of euphoria from late 1994 through early 1996. The NASDAQ rose 47%, while the S&P 500 gained 40%, as investors grew excited about the internet's potential. We're gonna come back to this statement that Niles made here. Dan Niles was talking about the time period between 1994 and 1996, and he's stating that that run was extended in a time period into 96, but actually that run lasted into 1999. Niles highlighted that a similar thing is happening today in response to ChatGPT and other AI technologies, with the NASDAQ up 42% since ChatGPT debuted in November 2022. However, Niles argued that the 1990s internet bubble took 5 more years. So this is exactly what I just said to you a few moments ago, right? It lasted much longer than that. 5 more years after 1996 to reach peak valuations. The S&P 500 ultimately topped out up more than 200% from 1994 levels, while the NASDAQ hit a nearly 575% 6-year gain at its early 2000 peak before the crash. If you guys remember, I showed you last week and posted on the Pro Trader account last week the S&P 500 forward PE ratio, and we were cresting. We have crested the 2 runs in the 80s at this point, and the next target above on PE ratio is the run from the early 1990s to the tech bubble of 2000. And we are looking right now. I'll try to bring that up for you right now really quick. Give me one quick second here, and I'm going to show you what I'm talking about. See if I can pull this up over here. So Dan Niles making a statement to CNBC about they were probably early in this run. So I'm going to bring up for you, give me one quick second here. This PE ratio that we looked at last week. So I can draw this out for you right now. So this is the S&P 500 PE ratio, and I posted this on the Pro Trader market updates last week, and I posted this with these 3 arrows here. You can see this gray line that's running across. This is the current PE ratio. So if we snap this line here, right? And we'll make this white, okay? Not green, we'll make that white. And we're beginning to crest this bull run back here with the crash in 87. And then this one over here in 1991 and 92. What's fascinating is if we're looking over here there's more room to run to the next peak. This is the peak of May of 1999. We had one pullback over here, but then we kept going. So if you're looking at a time frame, where are we right now? We are roughly at March of 1998 in valuations. March of 1998, and then the peak, of course, being April of 1999. So maybe not as close as what Dan Niles is saying. Oop, hold on a second here. I went to the wrong screen. That's your S&P 500 PE ratio, at least. I'm going to read the rest of what Dan has to say here. However, Niles argued that the 1990s internet bubble took 5 more years. After 1996 to reach peak valuations, the S&P 500 ultimately topped out. We already went through all that. And he is quoted as saying, there's no way you can say this is a bubble from a valuation perspective or from a time perspective because it took 5 years for that internet bubble to build. And we're only 1 year and a quarter into the AI bubble, if you want to call it so, Niles added. I think we have a lot more room to go. And he's speaking about 5 years. When I'm looking at the PE ratio, we don't have that much time. It looks like we've got about a year and a half, at least historically, if we were to continue on that same plane as we're on right now, to reach that bubble. So a year and a half, maybe 2 years max. And he's making the argument that it's possible that it could be 5 years in the future. I don't see that right now at least from the perspective of PE ratios. I see it more like a year and a half, at most 2 years, for that valuation to come into play. SPY getting sent over right now. This is looking kind of bearish to me. We missed this high right here. So you see that one right there, failed to get the new high on S&P 500. Be wary of this right here. No new high in S&P. We wanted to get to 513. With that failure, we're coming back to check the 5-minute trigger right now. If you're getting bared up right here, I would be on S&P at least. Google trading down right now to 132.54. Tesla tested its S4 at 190.60. I'm still long Tesla right now. So I'm getting a little scared here. Good, not gonna lie. Getting a little scared here on my Tesla trade, especially with S&P testing its 5-minute trigger right now. Let me see what you're saying. Fun fact, 1994 to 1999, 10-year yield went from, 10-year yield went from 8.01 to 4.31. Thanks for that, Bull, for trading. Oh, no, it was from 94 to 98. Uncle JBJ saying the 90s were the best. Not stock market related, just a simpler and better era. Today sucks. May 1999, I had a full head of hair. The 90s were a weird time. If you weren't alive then, or you don't remember the 1990s, it was one of the best. It was a time. The 1990s, right? You had the fall of the Berlin Wall. You had the threat of nuclear war receding. You had a lot of optimism as well for climate protection, or awareness of climate change. You had a lot of people were happy, I would say, in the 1990s. There was a lot of optimism about the future. I remember too that there was a class of, I think, 92, somewhere in there, like the class of 92, or that generation, or those kids were very optimistic for the future of the world, I guess. Yeah, I'm in agreement with you. It was a good time, the 1990s. There was a lot of hope then in the early 1990s. Of course, that all changed, right? I would say 9/11 was probably the big turning point. At that time, you could fly anywhere, not be patted down or searched. You could just hop on a plane and go wherever you wanted to go. There was all kinds of positivity at that time. I'm trying to think if there were major wars at that time, but I can't recall anything There was the first Gulf War, I guess, would be the only thing I could think of. What do you guys think about the 1990s? Was there optimism or not? Yeah, Kosovo. Kosovo, I was there. I went there under a UN flag. I got deployed there when I was I think I was 18 years old when I got deployed there. That was a really rough place. That was a sketchy thing. It was very scary. There were a lot of people. They had their books out. How do I relate this to people? Serbia, Bosnia, that whole thing, right? You had when the fall of Russia. It was fascinating at that time. You had the Soviet Union, right? Had Eastern Bloc countries that they controlled. Not just Eastern Bloc countries, but a lot of buffer states. And a lot of these countries they kept a black book. They were like, I'm going to write down the names of everybody. And the moment that the Soviets leave, we're going to have some payback, right? That happened, right? And there was a lot of remembering of past grievances in those countries. I remember that. I forgot all about that. It was really sketchy stuff, man. Stories being deployed there. This weirdest thing the weirdest thing I can say about being deployed there was the rules of engagement were kind of fucked up. You couldn't use direct fire, but you could use indirect fire to disperse crowds. I don't know if you ever seen like a 50 caliber just going by you or the ricochet. You would try to ricochet the bullets. I wouldn't. But I saw tankers try to disperse crowds with indirect fire with 50 caliber. That was the big one that crushed my soul at the time. I don't want to talk too much about it on the air, but it was pretty fucked up to watch. And I'm not going to tell you what I saw on those streets because the things that I saw there reminded me of stuff that I'd heard about World War II, but I don't want to talk about it. They would drag people in the streets and do really, really nasty things to them. It was really bad. It was worse than what they portrayed on TV. I should say that about the news. Yeah, gold is killing it today. S&P 500 SPY parked right now in its 5-minute trigger. I don't like seeing this on S&P 500. If it begins to roll, I might have to cut this Tesla trade. Still sitting in it right now. Haven't sold it because of how oversold it is right now. It's down 5 and almost 6% this morning. I probably should have taken the gold trade instead. We've got gold up right now. It's blasting up now with its target of 21,1918. IWM getting a bid on the half-hour trigger at 206.33. Selling oil. They didn't even get the squeeze. I guess they kind of got a squeeze, but they're selling oil this morning. XOM, we posted that yesterday on Sunday as a short this week. So any of you bears out there on Pro Trader should have gotten that trade. I did post that Tesla was bullish, and they got murked this morning as well on news out of China that sales are minus 19% for the month of December. But I did take a long trade on Tesla this morning on that news. Google now trading down to S5 right now. Google is trading. Hold on here. Google coming right into 132.01 right now on S5. Let's see if we catch a bounce on Google. I did not take a trade on Google this morning. I guess some of you were interested in that trade. Google now trading at $132. Woo! Cheap for Google. Dirt cheap. Let's see if they catch the bounce on S5 right now on Goog. Damn. SPX this morning, local resistance is at 5150. Local support is at 5100. on S&P 500. Whew, all that doom, man. I hate buying, sometimes I hate buying dips because there's so much doom around it. I don't know how you got, how do you got, I can understand why you guys do it when something's high flying. It feels really good when something's high flying, but I always hate buying dips. I always feel like I'm the only guy in the room buying a dip on doom. I'm always the only one down there. What are you doing? I'm buying doom. Why aren't you joining the party with gold? I'm like, nah, I want the doom. I like it. Bull for Trading saying, Cap, you gotta take on BTC for a swing trade. Stay with rocket to the all-time highs. Let's take a look at BTC. We'll pull that one up right now. Hold on a second here. Let's check Google really quick and see if it's going to catch the bounce or not. Google down today. I got to check and see how much Google is down, but it's getting wrecked here. Trading right now, right on S5 at 132. We'll bring up BTC next. Let's take a look at BTC, baby. I always hate buying these bottoms, man. It's never easy. But I always feel like I want to be with everybody else when they're all happy. They're like, woo! BTC right now, right? Still just face melting to the upside. BTC right now trading 66.836. It's coming into its R4 right now. If you wanted a high side target, we're there for the day. So we are currently on R4 resistance on BTC. You have one more level to the upside for the day. That is 68.031. I'll leave this chart up with you as well. Would I take a long here on BTC? No. No. This is the same as Tesla for me, right? So this is the opposite side of Tesla for me. On an intraday basis, whenever we're up around that R4, R5, I want nothing to do with it anymore. I'm always looking for that pullback dip buy on a ticker. So no, I would be short BTC right now. If you want to know where I'd buy a dip on BTC, here, let's take a look at it right now. I'd be looking to buy 64.120. 64.120. I doubt that I'm going to get that buy, so how about I give you a target of 650.640 for a dip buy by the time we pull back. So 65640 on Bitcoin. Your upside target, if you are long on Bitcoin, the high target is 68.031. Yeah, I'm not jumping on Bitcoin here. I can see why you'd want me to, though. I'd be very happy, wouldn't I? Yeah, Tesla coming back down again to retest S4. They bounced on S4 at 190.60. If we go below that 190.60, though, we start rejecting there. I might have to pull that trade. I don't want to get taken to the cleaners down there. 187, I think, would be brutal. So I'm going to watch this trade very closely now. Right now, 190.60. We bounced on S4 on Tesla. That's kind of where my stops are going to have to be, right underneath that 190.60. Let's see if I get taken out of my trade or not. Does Tesla still own Bitcoin? I think so. I think that they do. There's a bunch of companies that have come out saying that they own Bitcoin. Reddit owns Bitcoin too. They came out and went public that they have a lot of Bitcoin holdings. I think a lot of companies have more holdings than they express publicly as well. Where do I see this the most pain trade? Trailer Trash Jacks. I don't know what trade you're talking about. Which ticker do you mean? G.Gold saying, I thought Tesla sold its Bitcoin when it was less than 30,000. Let me look it up right now and find out. I thought that they still owned Bitcoin. Maybe I'm wrong. Hold on a second. Let me look. Let's ask Google. Let's do a Google search and find out. Does Tesla own Bitcoin? I think that they do, but I'm not positive now, I guess. Yes, Tesla still has the third largest Bitcoin holdings for a publicly traded company, estimated at 9,720 Bitcoin. So that's a substantial amount of Bitcoin, isn't it? I would love. Can you imagine owning 9,000 Bitcoins right now? Would you take the money and run or no? S&P 500 forming a bear cross right now, a bear plane. They're just waiting for the roll. Keep your eyes on this if you are a bear for a short on S&P 500. Right there, you still want to see it complete first. So you want to see the blood down, the rejection on the cross, and you get ready right there. Still no trade, but you want to be aware of it, that it might happen. So keep your eyes right here. We want to watch to see if we get the cross here, if the will of the buyers is gone already this morning on a Monday. So keep your eyes on S&P 500. See if this is weak here. I'm going to put a stop. I'm going to put a sell stop on my Tesla trade if this rolls down. So we're going to keep that nice and not keep that up right now and just see if buyers are weak on S&P 500. Google trying to fight back from 132.01. Tesla now down a full 6%, beginning to break below S4 right now. Now they're trying to roll this market over. My trade is down 25 plus 14. I'm down 30 cents right now on Tesla. Almost full 30 cents right now on Tesla. Looks like the market wants to roll to the downside. If you are a seller here, this looks juicy. Price target below 511.95 on SPY, and then you've got the next target down below of 510.94 on SPY. So here we'll set this trade up right here. You want to see a rejection right here. Get right through there, maybe some consolidation. And then that target right down below here. Hasn't happened yet, so don't take the trade just yet. Almost there, though. You can see it right now. Don't get trapped if you're a seller. You want to watch that cross first and then jump on this trade. You want to make sure it crosses first. Tesla getting blooded right now. Tesla now trading, the low was 190.12, down over 6% this morning. Google getting trashed this morning. Bitcoin on a high. XOM getting wrecked this morning. IWM with a dip buy on the half-hour trigger. Gold just showing up this morning, trading almost 2119.18 R2. Its next target to the upside is 2150.02. S&P 500. Let's look at this one really quick. So just take a look. Whoop, wrong one. So hold on here. What are we looking for? That not book map. Bottom right-hand side screen. So here's your SPX Gamma profile this morning. We've got local resistance above here at 5150, and then known support down below at 5100. And it's looking kind of toppy here, isn't it? Like it wants to run down there and trade that 5100. So if we go back to the main screen up here, right, that's that 5100. And if you watch right down there, remember we showed you this morning, that yellow, bring that over right down there, that yellow, like, yeah, I want to buy a dip for the week down here. That's that 510.50. And then we have the real dip buy down below at 507, 507.65, 507.40 on S&P 500. It looks like they're going to get that cross here too. So be very careful if you're a bull about this roll to the downside happening right now in S&P 500. Here it goes right here. It's already happening right now. You almost got the cross coming up. Let's watch that cross right now to the downside. I'm hoping that there's bears out there that are setting up that trade. Take this lower. Posted about INTC in the Discord over the weekend. That's synchronicity, saying it's looking really good right now. Ooh, baby. Let's see if these bears can turn this on for S&P 500. Oh man, dude, I'm so scared here with Tesla. I'm watching it right now. It's parked on S4. Oh, my stomach's turning even thinking about it. Weary Rome saying, sold a portion but still hold some Bitcoin. They made money on their sales. Is that what you're talking about, Bitcoin? Cap, my boy is up 100K on shitcoins. Holy shit. Shaq Baker. 100K on shitcoins this week. Going to Tijuana was fun in the 90s. Someone just brought up Senior Frogs. Do any of you guys remember Senior Frogs? I've been there. I've been to Senior Frogs. So Senior Frogs had a really dirty pool. And I think it had a slide too, didn't it? Does anybody remember Senior Frogs? It was down in Tijuana and TJ. I can't believe someone just brought up Senior Frogs in the 90s. Those are memories best left in the memory bin. Yeah, that's true too. Someone just said they went to Senior Frogs in Acapulco before the cartels took over. When I was there, it was run by the cartels. You could tell it was run by the cartels. It was sketchy as fuck the one in TJ was sketchy as fuck, or what I recall. Even the time that I went there, it was super sketchy. I think it was run by cartels even back then. Let's see if these bears can pull this off, or is this just another bear trap above? Senior Frogs. I haven't heard that word. I haven't heard about that place. And is it even still there? I gotta look that one up. See, dude, you guys are bringing back memories right now. Senior Frogs. That was the spot, wasn't it? There's a Senior Frogs in Myrtle Beach. I gotta look up Mexico. Yeah, Senior Frogs in Mexico. Oh, it's still there. Holy shit. They have them everywhere now. I didn't know that. They have one in Cancun, Las Vegas. I didn't even know they had one in Las Vegas. I had no idea. It says there's still a thing. Had no idea that Senior Frogs was still a thing. That place was a shithole. I don't know if you guys remember that. You guys remember Senior Frogs? I don't know where we roam. I'm long Tesla right now, brother. I'm kind of scared of my long position here. I don't want to see it get wrecked. I want to see $200. Let's see right now if the bears are going to be trapped or not here. Again, you're waiting for the cross to the downside. Still hasn't happened yet. You want to see that 1 in 5 minute cross before you take that short, so you are still waiting. You want to see a failure here, and you want to see the actual cross of the 1 in 5 minute trigger. Still has not happened yet. Hopefully we can trap some of these bears and make a move higher. Hopefully Tesla will turn around with it. Bears trying to come in force right now. They are trying right now. Senior Frogs in Miami is a good time. I've never been to Senior Frogs in Miami. Didn't know they were everywhere either. I had no idea. I forgot all about Senior Frogs. It was like something that you do in college. When you go to college, you go to Senior Frogs. Throw up everywhere in yourself. Throw up in the pool. buy bottles of booze, like whole bottles, like literal whole bottles of booze. I don't know if they do that anymore. Back in the day when we were driving Subaru or Subaru Brats and stuff with no seatbelts hanging out on the beach. Oh, you totally remember it? Yeah, dude, that was a thing, man, back in the day. That was the thing. If you were a college kid, you went to Senior Frogs. It was like a rite of passage. Come on, Tesla, fight your way back, dude. Look at you down here just hanging out. Tesla looking pretty bad here. Downside target on Tesla, 187.97. Give me 5 seconds here. I'm going to be right back. I'm getting a call. I got to take a phone call really quick. Give me 5 minutes for a quick break. One note here, Fed's Harker does not comment on monetary policy outlook in the presentation materials.
6-month bill high yield 5.105%, 5.105%, bid cover ratio 2.59, 2.59. The US sells $70 billion in 6-month bills and awards 96.19% of bids at high. And US 3-month bill high yield 5.24%, 5.24%, bid cover ratio 2.65, 2.65. So the US sells $79 billion in 3-month bills and awards 18.59% of bids at high.
$109.
Watch shares of Ferrari today. Citigroup downgrades the stock to sell, strictly on valuation, with the stock well over $400 a share. Citi's price target, $100 lower than where it trades right now. It has seen a tremendous run-up on just the demand and the fact that they are supply constrained because so many people want Ferraris. But the real action is in F1 right now. And I just need a moment to talk about the business of Formula One because the season kicked off this weekend in Bahrain. Typically kind of boring race because Red Bull took the 1-2 spots as they have dominated the entire sport. But so much drama and action around the business itself. Have you been following this at all, Carl? Red Bull's team principal, the head of the team, Christian Horner, has been accused in a complaint of inappropriate behavior from a female member of his team. And this has been all the drama. There are reports that, first of all, Red Bull came out and they exonerated him, but it hasn't gone away. Max Verstappen, the star driver on the Red Bull team, is now apparently putting pressure on him, or at least his father is putting pressure on him to leave. Mercedes is caught up on it. The bottom line is it's all good for the sport to have this kind of drama and engagement personally. And the sport's dealing with a bit of a reckoning when it comes to these issues, like inappropriate behavior management. Ford is involved because they're a big partner of Red Bull, and they have not really been on board with all of this and want to see some sort of resolution to the whole drama. And it feels like we're not there yet.
Wow. Well, Ford and Ferrari definitely on the ticker today. There's no doubt about that. So is American. Shares of American Airlines moving higher today as it holds its first analyst day in 7 years. Our Phil LeBeau is there with the CEO this morning. Hey, Phil.
Hey, Carl. Robert Isom, CEO of American Airlines. Carl just said it. First time in 7 years.
Right.
Why now? Why have an analyst and an investor day now?
Well, I wanted to have something to talk about. And the first thing, it starts we do, and it starts with demand coming back. And if there's one thing the pandemic taught us is that people want to travel. Demand is back, and we've got a really comfortable environment where we're at right now. Next thing is I really wanted American to be able to tell a story that says, you know, we deliver on our commitments. And, you know, on that front, we are reliable, we're profitable, we've strengthened our balance sheet, and we also want to have stuff to talk about going forward. And that's the big news for investors, that there's growth in American and expanding margins and a production of free cash flow.
We're going to show the margins. We're going to show where you guys are, what you're expecting for 24 was implied, but 25 and 26. Is this a case where you just build on what you've put in place right now and it's better execution, or are you looking for a fundamental shift in the market as well?
No, we've planted the seeds and we're ready to harvest. So whether it's our network, which we're leaning into, look, we've got the best domestic network, short-haul international network, a fleet that really supports that, a rewards program where we have the opportunity to renegotiate our co-brand credit card deals. And all of that is really founded on this operational excellence that we're running the airline with right now. And we have the opportunity to really re-engineer, take cost out of the business, and we see the opportunity to take almost $1 billion of expense out.
I want to talk about debt.
Yeah.
Q2 of 21, and we've got a chart here. It shows you guys are at $54 billion in debt. There were more than a few analysts who were like, this is too much, and I don't like this stock at this level. You're bringing it down dramatically, and you think you can continue to do that. Is this a case where the cost cutting here is finally coming through in terms of bringing down that debt?
Well, it's all the things that we've really set out to do. We're producing free cash flow, and that's enabled us to pull down that debt quite a bit. So we set a target of reducing total debt by $15 billion from that high water mark. We're 75% of the way through, 85% at the end of this year based on our projections. I feel very comfortable. One of the things that was hanging over our heads in 2025 was a debt stack, we called it, our debt tower, of almost over $9 billion. We've been able to smooth that out, and I feel very comfortable with the maturities that we have in the future. We're going to be able to manage it.
You just announced within the last half hour.
I want to do a quick check here. It looks like my voice is, the compressor looks like it's working, right?
Airbus, 90 from Embraer. The Boeing component here is
I think the compressor is working, man. Maybe I need to do more of an attack on it.
Confident you can get the MAX 10 by what, 28?
Check 1, 2. Oh, come on, give me that bear trap, baby. Give me that bear trap. Trap them bears. Bears gonna get squeezed out here in just a moment. Watch this. Watch this squeeze. Come on, bulls. Yeah, it looks like this looks like a bear trap right here, not a bull trap just yet. This is not a good sign for bears. They're gonna get squeezed out here in just a moment. Watch this happen. This is why you have to wait until the cross and the rejection. This is a good time right now to be watched. This is a good learning lesson for you bears out there. You see how you don't have the weakness and how you want to wait for the cross. You wanted to see red candles here to take that trade. This right here, this is going to get violent here, and bears are going to likely get stopped out here. So we'll watch this as it continues, but this is very bullish so far, what I can see so far. Yeah, and you're going to watch some panic by sellers here. They're going to get wrecked right now. Watch this squeeze happen, and they're going to get squozed right out here. They're going to panic. Tesla with a 1 minute candle down below really quick. This is the Tesla chart. You can see that nice green wick on the 1 minute. Some buyers stepping in down here on 190.03. This could still be mechanical buying, not so much bullish yet. I'm not going to take this as a good sign yet on Tesla. Normally at the 0s and 5s, you'll see mechanical buying or selling. So this isn't really indicative of a bottom yet on Tesla. Bears getting trapped right now. Sellers in the retreat already. Look, they were looking for a downside move, and you're not seeing buyers go away just yet on S&P 500. So S&P just holding up strong right now. Yeah, I actually wasn't. So I went out. I got a phone call from my neighbor. I had brought my neighbor some tools, and he borrowed them for a few days. He just called me and said, "I brought your tools back." So I wasn't here for the bounce down on Tesla. I didn't even see it. I wasn't in the office. Yeah, what's going? Well, hold on a second. Should I do that with the bear? I'll chime in with that too. Hold on a second. I gotcha. Can we do sad bears? We got sad bears going on. Bears getting stopped out right now. Watch that. Watch as this unfolds right here. Come on, Tesla, baby. Turn around, Tesla. Don't do me like this, Tesla. Don't languish. Sellers right now getting trapped on S&P 500. There's got to be some bear rage out there, right? See if I can bring this back out. Put my thing back over there. I love watching the bears with their faces right now. They got to be pissed. There's no way they're not upset. Like I would be if I was a seller right in here. There's your trap right there, right? Sell it down. Still no cross here. Going in early, and then this quick reversal here. You're likely going to get blown out. S&P right now likely going to squeeze up to 513. Trapping sellers. Pain trade right now on sellers on S&P 500. No joy for bears. Watch that squeeze. They're going to squeeze them hard. It's going to be fun. Seller rage right now in S&P 500. This is why you wait, by the way, for the full cross and rejection. It's not good right now. Sellers, I'm betting there's some sellers out there that are pretty pissed. Hold on 1 second. My phone's still ringing, dude. Why is my phone still ringing? Yeah, it might be. Hold on 1 second, guys. I'll be right back one more time. Sorry, I got to take this again. Google trying to make a turn. Tesla's still blooding. It's got a new low at 18924. Its downside target 18797. I'm likely going to have to buy more calls. I did not put stops. I talked about putting stops on Tesla and never did. So I'm going to have to add to this position down here. 18797. That's the target on Tesla. Another note here, too, XOM, we were pretty bearish on this one. We're coming in right now to S3 on XOM. If you took that short this morning, I'm going to show you the next two levels down for you here. Hold on one second. We're going to put S4 and S5 as a zone. We have some wild moves this morning in the market. Just keep your eye on XOM. They have a daily cross and a weekly cross at 102 and 103. There's a downside target on S5 at 103.29 on XOM, ExxonMobil.
And how much is speculation and wishful thinking?
Thanks for that. Yeah, it's real. We promise. We do real work. No, right now there is no partnership really. Lyft has had a food delivery partnership with Grubhub since the end of 2020. I think our view there is Grubhub has been a material share donator over the last year. They only have 5 or 6% market share. DoorDash is above 50, so clearly there would be a significant upgrade for Lyft to work with DoorDash. And then on the Lyft side of the equation, you know, both these companies have Chase Sapphire is another partner. We don't think there's anything like exclusive going on there or any reason why they couldn't work with them. So nothing today. We just see a lot of opportunity.
I wasn't questioning your work, more just the idea, because it sounds really good. So do the stocks work without it?
Yeah, no, absolutely. I think, you know, the off consensus call here more so would be Lyft, where we do a proprietary analysis where we evaluate Uber and Lyft, and we record prices and pickup times and so forth. And up until last August, we had always found that Uber had a significant advantage. They were picking people up quicker. In some cases, they were pricing more aggressively, but getting away with it. I think what we found since last August, and we updated it as a part of the note today, Lyft is competing on equal footing. Pricing is moving the exact same direction as Uber and magnitude-wise, and their pickup times are nearly at parity now. And so you say, hey, if Lyft can actually compete here sustainably going forward, there's a lot of room for this thing to run to the upside, we think.
I wonder what you make of the long-lasting debate about Lyft as a pure play versus Uber as a diversified mix of food and logistics and freight and so forth. Is that story still the same, or has that changed over time?
Yeah, I think it's still the same, technically. I think what we're proposing here today is, you know, a lot of people recognizing that Lyft was kind of, in a box on that sole platform approach, that they would have to get acquired by somebody, maybe DoorDash. I think what we're proposing here today is, you know, no M&A needs to occur here, just merely a partnership to tap into each other's bases, and then they can still run their unique strategies over time. So, yeah, that's what I would say.
And finally, you know, Uber's success, if you call it that, has come on the heels of tough measures regarding cost discipline and headcount. I wonder if you think Dash and Lyft have taken their own medicine at the same scale.
Yeah, absolutely. I think we'll start with DoorDash. COVID was so strong for them; they never really had to make any of those cuts. And then the business since the rebound and post COVID has also just executed basically better than expected throughout the last year or two. And so other than not hiring as much last year, they will hire more in 2024. There's no reason for the business to have to do that at some point, which it frankly speaks to the health of it. On Lyft's front, obviously COVID was a disaster for the ride-hailing business, and so they cut back costs a lot. And then I think as the business took a little bit longer than Uber's to recover, they also trimmed it from there. From here, again, they're pretty lean already, probably don't need to cut. And like we said, if the business is getting better, away we go.
Brad, pretty intriguing. Good report. I'm sure our viewers will look for it in a space that's already getting so much attention. Thanks. Good to see you.
Thanks. You too.
Up next, Apple trying to change the narrative around its AI ambitions with the release of some new MacBooks. We'll go dig into what they have planned when we come back.
Shares of Apple dipping about 3% today after unveiling this pair of new MacBook models, including a bold claim that the machine is, quote, the world's best consumer laptop for AI. That's the focus of today's Tech Check with Deirdre Bosa. Morning, Dee.
Hey, good morning, Carl. So what exactly does the world's best consumer laptop do? Basically, better camera features, speech-to-text, translation, autofill, etc. More of an evolution of stuff that we already have, that our iPhones already do, and that we expect versus something more groundbreaking, like, for example, a new Siri chatbot. And that may not be enough. As investors, they're getting impatient searching for Apple's AI strategy. Shares are down nearly 10% this year, and they're down 3% today. The release of an AI laptop, this highlights an upsell cycle strategy, the idea that Apple can leverage AI features to its products to encourage customers to upgrade or pay for additional services. Samsung is already trying to do this with its latest Galaxy smartphone lineup, and it is likely that Apple is going to do this again with new iPhone models. Now, the street, though, is divided on whether it's enough, whether that can get Apple caught up in this AI race. Melius Research writing this morning, forget the car. What matters most for this stock is the AI strategy launch coming in June. Now, for them, it is the most important launch since the iPhone that it says could drive a super cycle. So that would certainly change the thesis there. But as investors, they await this potentially, and I highlight potentially big announcement, others in the space are pushing forward. Today, Gen AI startup darling Anthropic debuted Claude 3. That is its most powerful chatbot yet. Google's Gemini launch, we've been talking a lot about it. It was a mess, but it continues to test to get it right. And by the way, also released an open source large language model, which some believe could prove more exciting than anything that we're using now. And I just wanted to point out this chart as well from the Journal today, because if you follow the dollars like we do, there is this major delta in R&D spending between Apple and other mega caps. Apple on the far left of your screen, its total R&D outlay last year represented less than 8% of its annual revenue. Alphabet and Amazon averaged more than 17% of their reported revenue. Meta, nearly 30%. Now, if Apple does need to play catch up and build up infrastructure and buy GPUs like some of its competitors, this could be a long uphill battle. But I say, guys, this is a very contentious issue in tech, whether AI is going to kind of be able to leapfrog some of the others because of that 2 billion installed base, or whether it really does need to play catch up here.
And also, Deirdre, just what it looks like for a company like Apple. We talk a lot about generative AI on the software side of things, on the chip side of things, but what about on the hardware side of things, and what kind of revenue opportunities exist for that?
Right. So what Apple's strategy may employ is this idea of edge computing, that the AI actually sits on your phone, and that Apple would be uniquely placed to do this because of that installed base I mentioned of 2 billion devices, but also because of all the strides that it's making in terms of its custom in-house silicon. Today's announcement really centered around that M3 chip, which has put it sort of ahead of other mega caps in developing that custom silicon, at least for now. So that could look like an iPhone super cycle, Sarah, just selling more iPhones the next time around. It could also look like more services, right? We all have these devices, simply pay for more features on top of it, which again, like, isn't as exciting as a really good Siri chatbot, but could just add up in terms of revenue and profitability for that stock.
Hey, Dee, you know, that Melius call today looks at what would have happened if you got impatient with Microsoft before their strategy was rolled out, or got impatient with Adobe before their strategy was rolled out. I wonder if you think those are sort of fair analogs regarding Apple.
I loved that point. Also looked at AMD, right? This idea that when this announcement comes out, investors kind of sell on the news, but they end up being really interesting and sort of help that AI thesis for these companies all along. I think it's probably still too early, right? Google, we've seen what's happened with this Gemini launch. It was one of the examples. I remember I was at I/O I was at I/O, the developer conference last year, when they kind of blew everyone away with the demo. Then Gemini wasn't so good. So again, it's just a moving target. We don't know how it's going to shape out, but if you do look at stock action, it has not been a good idea to sell on these types of events.
All right, Deirdre, thank you. Deirdre Bosa, also that EU fine potentially weighing on Apple shares as well today. By the way, they're still fighting an EU fine back to 2016 over the $13 billion in back taxes. Remember that from Ireland? It's like been in courts forever. Just want to check on the markets here. Tesla is a wait on the S&P 500 right now, because we are seeing strength in groups like industrials and materials, some of the cyclical groups. Look at Tesla, it's down 6%. as the debate continues over whether it's part of the Mag 7. It's lagged all year.
Yeah, it does seem like Cramer is now talking about a Mag 6 more often than a 7. But we'll see what happens with later in the week. Some key data out tomorrow. Let's get to the half.
The strength of the economy and job market means the Fed has.
Carl, thanks so much. Welcome to the halftime report. I'm Scott Wapner. Front and center this hour, the relentless rally. Stocks on pace now for their best run in some 60 years. The investment committee sizing up this big week ahead for your money. Joining me for the hour right here, post 9, we have Joe Terranova, Steve Weiss, Jim Leventhal. We will go to the markets. We do have some red arrows across the board today, modestly, but nonetheless, we are in negative territory in what, Jimmy, is a pretty important week. A lot of data starting tomorrow. You got Powell on the Hill on Wednesday and Thursday. Got a jobs report on Friday. Have JOLTS, ECB with a decision this week. Talk to me about it.
Yeah, so we're actually in a shoulder month as far as I'm concerned, as far as information goes. By that, I mean we're really at the end of the fourth quarter earnings season. Very little to come. Obviously, we've got Broadcom, a few others, but really we're at the end of the fourth quarter earnings season. We're nowhere near the first quarter earnings season, nor are we even near the pre-announcement season. So as Scott just said, it's all about the macro. It's all about ISM services tomorrow, because that's been the real strong pillar to this economy. Don't want to see that weakening. And then not just a labor report on Friday, Scott, but also next week. It's not
where monetary policy is having an impact. There's risks to inflation and employment, and they have balanced out. Pent-up exuberance in the economy and upside risk to inflation that bears scrutiny. Businesses are not distressed and are ready to invest and hire when the time is right. As long as overnight reverse repo is active at significant volumes, balance sheet can continue to decline. I'm hopeful that the Fed can continue the current pace of balance sheet drawdown as long as possible, and services inflation remains higher, and it may take longer for adjustment to occur.
Of 19, that's the first time since 1964. And it really has. They use the word.
Just a note here. This is Bostic. Fed's Bostic saying the strength of the economy and the job market means the Fed has the luxury of proceeding without urgency. I would not anticipate that cuts when they start would be back to back, but it will depend on the response. I still expect 2/4 percentage point cuts this year. That's Fed's Bostic. Saying that he expects at least 2 cuts, that the cuts will not be back-to-back. I need to see more progress and gain confidence on disinflation before reducing the policy interest rate. He also goes on to say inflation is on track to slowly return to 2% target, but it is too early to claim. Hold on a second, I missed that one there. It's too early to claim victory. Bostic also saying January hiring, including the breadth of hiring, is a fresh sign of strength for the labor market. Return to price stability without significant economic gain would be a resounding success for the Fed. Inflation is still widespread, with prices for more than the usual share of items increasing above 5%. Trimmed mean is stuck at 2.6%. Bostic goes on to say the Fed has become or has some time to be sure inflation returns to target. I am not seeing degradation of the job market in any meaningful way. The strength of the economy is pretty clear for many businesses. Businesses say there is a stress among lower income consumers, and it is expanding up the distribution. The risks to inflation and employment have balanced out. So he is still on board right now for 2 rate cuts, just not back-to-back this year.
There's enough underneath mega cap finally to support the market at a time where, as you said, these pillars, prior pillars in some respects of the mega cap growth trade, that's all you needed. Now you can afford for those to falter, apparently, because you're getting picked up by all these other areas.
Yeah, there's a remarkable rotation that's going on underneath the market that is really speaking towards the confidence that's been built, surrounding what we've witnessed with earnings, but also for investor expectations, inflation expectations. And I think it's defying the logic of what you're citing, because I thought February would be a down month. I thought we'd see at least the correction. We haven't even seen the consolidation, in fact, but you have to acknowledge what is going on. And when you have such significant weakness from pillars of the market over the last 10 years, and it does nothing to initiate that type of catalyst. That's pretty remarkable.
Okay, so you say it's defying the logic. Those are the words you just used. And I wonder if we're overthinking the logic. Tony Pasquarello, Goldman Sachs today, has a note out in which he says, I think it speaks to this, and maybe it simplifies everything, Weiss. The bullish thesis is clearly defined. U.S. growth running nicely above trend, right? We know that's true. The Fed put is alive and well. Joe's point, we know they're going to cut. Right. Just a matter of when. And the stock market can tell several distinct stories of immense innovation. It's not just AI. It's GLP-1 also. Those are two distinct trends that have carried this market higher. So maybe it's not defying anything. Maybe the logic tells you that the stock market is where it should be, and it's going to go higher from here as a result of all of those things. And then you want to throw broadening into the mix?
Yeah, no, that's all true, and good point by Tony, as usual. What always hurts markets, though, is what you don't expect.
Well, of course, but that can exist. That exists every day if you're an investor in this market.
Absolutely. And as you go through what the possible triggers are for a correction, it's difficult to come up with anybody. Is it war in the middle? I mean, broadening of the war in the Middle East? Is it, Biden or Trump stepping out of the campaign? Is it, how would those be perceived, right? And both are realistic. Well, one's more realistic than the other, even though both are unrealistic right now. And is it the only thing could possibly deter this, given what Tony's saying, couching in those terms, if inflation numbers just really balloon up. But that's not going to happen. And that's not going to happen because China is now trying to be an export economy. So that's going to be deflationary.
I just posted on Twitter a link to a bill that's going before Congress, if you want to take a look at it. This is a letter from the North American Securities Administrators Association. Biden is opposed right now to H.R. Bill 2799, the Expanding Access to Capital Act. This has to do with the stank market and crowdfunding for securities, if you want to read up on that. Seems like it's a hot topic that's under the surface in the news this morning.
Aim at the notion that we're really late cycle, which you've been hearing from a lot of strategists and market participants come on the network and talk about where they think we are. He says perhaps these are the middle innings of a major bull market that is underwritten by generational shifts in technology and medicine. We spoke to it, AI, GLP-1, all the advancements there. Maybe we're not so late cycle as people would like to paint the picture of us being, particularly those who've been more cautious, if not negative, and who have missed a good portion of this move.
It could well be.
Tesla getting blooded right now, down 6.68%.
A year ago, when a lot of people were saying we're late cycle, I said, no, we're right in the middle of it. But, as much as I do agree with Tony, I have to point out, and it gives me a little bit of discomfort that I'm agreeing with Steve here, that, there are some cracks, that this is not just set it and forget it here. The ISM manufacturing last week was lousy. You are hearing more about layoffs, and Torsten Slok's note from I think Friday has some legitimacy to it that if these inflation numbers from January continue, that the rate hikes the rate cuts might be off the table. So I am not changing my thesis right now, which is generally in agreement with Mr. Pasquarelli, but we have to be Pasquarello, excuse me.
Get the Italian names right.
But we have to be alive to the idea that this is not set it and forget it. You have to be aware of the risks that are out there.
Well, I mean, we already know that rate cuts are pushed off, and frankly, for the right reasons, because the economy has enabled the Fed they don't need to rush. There's no reason for them to rush. On that note, you did get some commentary today from Bostic, the Atlanta president. He wrote in an essay, talks about the threat of what I'll call pent-up exuberance is a new upside risk that I think bears scrutiny in coming months. Again, it's too early to cut rates now. If they do, then you risk having this exuberance go to another level. Steve Leisman, our senior economics reporter, spoke with Mr. Bostic just a short time ago. But that's the crux of it, right? You have this risk of igniting this over-exuberant action in the market for one place, and then you risk inflation going back in the direction that the Fed doesn't want it to go.
I think that's a good way to put it, Scott. It's as if, your conversation really leads into this. quite well. He's afraid about what you guys around the table are going to do and what the CEOs are going to do when the Fed cuts rates. Let me go through some of the headlines here from the media briefing he did give us. He sees 2 rate cuts this year, but says, you know what? We may not do them back to back here, these quarter-point cuts. We may take our time between them. And he's concerned about this issue he calls pent-up exuberance, which could mean a change in the pace or the amount of cuts. What does that mean? He says his conversations with executives are that they're ready to, he uses the word pounce in terms of investment once the Fed starts cutting rates, and this could lead to additional inflationary pressure. He says inflation risks remain. The return to price stability without economic pain is not assured. He notes the number of categories in the CPI that are north of 5%, which is a concern of his, and he says premature to declare victory against inflation. He needs to see more progress before cutting. Just a couple more things here. The job market, he says, shows fresh signs of strength. That's from the January report. And the risk of keeping interest rates elevated for too long is there, but he sure doesn't sound all that worked up about it. And Scott, almost exactly quoting you from moments ago, he says the healthy labor market, the healthy economy lets the committee make policy without much urgency here. But this idea of pent-up exuberance, his words, is kind of a new idea here, and it's something that could stay the Fed's hand. Look at Mickey Levy's op-ed in the Journal today, where he talks about the idea of this strong economy, the strong investment that is.
It is interesting to hear this. I mean, you're talking about we're already in the month of March. We don't have that many months left. We've got 9 months left this year.
To me,
it's not like we've got 12 rate decisions ahead of us either.
Because he's putting a number on what some have suggested. Well,
still, the claim of 2 rate cuts this year, even if they're not back-to-back, signals that by summer we should at least get a cut by June.
They're cut that much, but 3 is probably right. 2 sounds like Bostic, who's a voting member, has moved a little even further into the be a little bit more hawkish camp.
I don't know why they're coming off as Bostic being hawkish here. I'm scratching my head listening to this conversation on CNBC right now. Do they not know that? I've got the transcript right in front of me.
So that 3 is the median of the committee. So we'll have to watch to see if others move towards him. It does seem, what's the right word, miserly or cheap just to provide 2. But remember, there was this idea out there, I forget which Fed person put it forward, of the 1995, I think it was Jefferson, the vice chair, put forward saying this 1995 cutting cycle, which was like a few cuts spread out over like 6 months. Then the Fed went on an extended hold. And again, Mickey.
Yeah, do you guys hear this? Like, there's a couple things here to be watching. Like, number one, or listening to. Number one, you've got comparison after comparison right now about 1995 to 1999. You can hear them talking about this on CNBC. They're taking Bostic as being hawkish. I'm not seeing anything hawkish from his comments today. They do have some red labels on financial juice, but you're still talking about the idea of probably 2 rate cuts this year. Even if we don't get them at the next decision, you're still talking about, and they did mention that briefly, that, you know, the doom and gloom is behind us, right? It's just a matter of when they cut. And even if Bostic says they're not going to be back to back, you're still talking about every other decision is going to bring a cut.
Yeah. So it still remains stimulative for stocks. It appears, right? Because investors, they want to see more concrete cuts before they actually do pounce. Investors are already pouncing.
Absolutely.
Right? Because they anticipate all this.
Federal Reserve is no longer adversarial. That's all that matters. Quite candidly, my personal perspective, I'd rather see them.
That's a big thing, too, that the Fed is not adversarial anymore. That's a huge departure from the old Fed.
The way that they would do that through the balance sheet, but just the basic knowledge of understanding the next move from the Federal Reserve is a cut in an environment where very clearly the market and the economy is telling you, guess what? The Federal Reserve is not too restrictive right now in their policy. Their policy is the right policy for the marketplace. And Jimmy, you cited before underlying cracks within the marketplace. ISM manufacturing
on cross-border trade puts EU energy solidarity at risk.
part of the last year, and layoffs, well, that speaks to the cost efficiency, the headcount reduction that's actually benefiting stocks in the market.
I don't want to talk us down, okay? I am invested, let's be clear. But what I am saying is that, like any good mariner, I'm looking at the horizon and I see some clouds. And I'm going to be more specific here. What I'm hearing from the Fed is more like the old Fed of they're going to be late with cuts. And when they do the cuts, it's going to be for the wrong reason. So I'm not trying to shout fire in a crowded theater here. I am watching what's going on with New York Community Bank. Obviously, it's only one name. I got that. And, you know, you, Joe, can push back reasonably on anything I say, including what you just said about the ISM manufacturing. I'm not going to like wildly portray that things are going awry. What I am saying is this is, to me, sounding a lot more like the Fed is going to be late to cuts, and when they do cuts, it's going to be for the wrong reason.
Well, we have to, I think, just get used to higher for longer being talked about every week. That's, you know, Slock over to Paulo. That's what he's talking about. On Friday, you mentioned the note that was much talked about, and a lot of others are embracing this idea of higher for longer, by the way, doesn't mean higher than where we are now for even longer. It just means we may stay where we are for a while. And we're not talking about hikes. We're just talking about higher for longer. By the way, it doesn't matter to Savita Subramanian, Bank of America. She raises S&P target to 5,400. Now, there's like 6 strategists who've already raised their targets. Why? Because they're chasing. Yep, they're chasing. I don't know that they're necessarily getting more bullish, so to speak, but they're chasing. The market is making, the market's making them raise their targets.
Right. But to Joe's point, credit has actually tightened, despite the fact
not much. So I mean, the spreads are so tight.
But the direction's going the other way. But here's how I believe the market's looking at it. They're not looking at it saying, okay, the next move is down. What they're looking at saying is, if the market did this well before the dialogue even started about cutting rates, can you imagine what it's going to do when they actually do cut rates? So that allows them to look through a lot of the data. So I agree with Jimmy. You know, the fact you can point to the ISM being weak over the last year, but
yeah, SPOOS right now is killing me. Watching SPOOS here, it's like just straight sideways burn.
Do you see where that happens as rates stay higher? You could.
Well, industrials have looked great, so then stay away from the
XOM just continues to go down. Not even a relief trade on XOM. Google turning around already. Tesla still not showing signs of turning around.
That's what virtually
IWM up 0.5%. XOM down 1.54%. Bitcoin chilling out right now. SPX just meandering like sideways. SPY not doing anything.
A lot of the industrials, I think, have done well too. It's the idea that it's the trough trade. Right. You assume that, okay, the worst is behind it. Now, even if it muddles along at current levels, you assume that there really is only one way to go from here.
We looked at the trough trade earlier last week. How far does that back test go?
Buy the stocks that have been sold during tax. So I always look for those.
All right. Other things of note today I want to get to. What else is new? Another new high for NVIDIA. Can we put that up? Because it's going to be $900 before you know it, and you know that's going to happen. We're going to turn away, we're going to turn back, and then NVIDIA is going to be at $900. The chips, the SMH, new record high today. AMD, a record high. Supermicro, a record high. And that takes me to our first move of the show by one of our committee members. It's Applied Materials. Why do you want Applied Materials? That stock has done incredibly well, so I know why you want it. Why do you want it here? I mean, you like buying stocks at high levels, assuming they can go higher from here.
Well, no. I mean, so here's why. I mean, here's first why AMAT. I want to be in the semiconductor capital equipment space. I mean, I think I've spoken long enough that I believe there are plenty of semiconductor plants being built, especially here in the U.S., but not just in the U.S. Those plants need new equipment that will be supplied by AMAT. As far as why now, you know, the multiple at 23 times might seem a little bit lofty to some relative to others in the space. It's really not. And again, that fundamental picture there tells me that two things may happen. One, the historical multiple may have been re-rated higher, and I think there's a chance for earnings out surprises as we go forward. Lastly, AMAT is in a space with a lot of other competitors, some of which are very good, some of which my colleagues may own. I like AMAT because it's involved in more steps of the semiconductor fabrication process than most of its other competitors.
Let's pull it back a little bit too on the chart, away from the intraday. Get a broader view to get an idea of what we're talking about here. As these chip stocks have done Just unbelievably well. See, there you go. That's what I'm looking for.
If I can just, because I'm aware of the chart.
You feel comfortable buying that up there on the right?
Yeah, because I'm just starting the position. Okay, and I, this is a small position. I know you hate it when I say that, but there's a reason for this. That chart is the reason for it. Meaning that if it comes down, I've already laid out the fundamental case. I've already laid out that I'm comfortable with the multiple. If it comes down, having a small position right now gives me room to add to it.
Weiss, this makes sense to you? You bought ASML.
Politic?
Well, what's ASML done?
ASML actually has a new machine coming out.
Let's pull that chart up. Let's pull that chart up too, because Weiss is buying ASML, but I want to pull that up over the same time period. Okay, so here you go. So you can't criticize Jimmy at all.
I didn't criticize him.
Not yet. I saw it in your face, though.
You're trying to get him.
I saw it. Believe me.
I saw it.
The viewers didn't have the benefit. It was on a single shot at that moment. I had the perspective of everybody, and when he was talking, I was looking at you, waiting, and then I said, well, this guy bought ASML. What's he going to say?
So when Jimmy was saying that, I was thinking to myself, what do you know that everybody else, most firms, I believe, if not almost all firms, have a buy on AMAT. Okay. So what do you bring to the table?
Is that a rhetorical question for yourself?
Well, here's how I'm going to answer it. Do you like my setup? So ASML is underfollowed and underappreciated. They make they've got a new machine.
Underappreciated.
It is underappreciated, believe it or not, because it's underfollowed on the street, and they don't know why they're buying it right now. And here's why they are. They've got a new machine that's out. By the way, it's sold out for all of 24 EUV, which is extreme ultraviolet. What ASML does, in lithography technology, allows chips, it etches on chips and allows chips to hold more circuits, so for them to be more robust. So they've just started getting out there. It's not really noticed by the street all that much, number one. And number two, that's what's going to arm the companies like Microsoft, like Apple, like all the others to make their own AI chips. So that's why I like that. That's a new sense. These machines cost over $150 million apiece, and they have a huge backlog going into 25. And by the way, there's a second generation of those coming out. So you've got to see everybody from Taiwan Semi, who's a customer. As I said, every chip manufacturer is a customer. Because they're the only ones that do it. So that's why I bought it.
Now, the other move that you had kind of surprised me. You bought Intel.
Okay, and here's why.
Okay,
perfect setup. Because they're the first customer of these EUV machines. So they bought a lot of the capacity of them, going back, putting that in the order book, going back to 2020, 2021. So for their foundry service, right, that their new fab that's gone up, they're going to be able to manufacture these chips for Microsoft, who's already got orders in for it, to make their own AI chips, so they're not beholden to NVIDIA. Now, NVIDIA is not going down.
Nice move today, by the way. Look at that.
They both can exist. When you think of the ultimate demand for AI chips, right, you can't measure it. So that's why Intel. So Intel looked overvalued today. It doesn't look. It is. But earnings are going to grow into it, and nobody in the street is focused on that. Goldman's got a sell on Intel. Others have sells on it. So nobody likes it. So that's the perfect opportunity to buy Intel right now.
Center of the universe is the semiconductor industry. Every name that they have mentioned, these are names that will continue to move higher. In the case of Applied Material, no. Analysts, not every analyst loves the stock. In fact, the 12-month price target is only $2 above where it's trading today, 26 buys.
SPY squeezing higher now, trying to take out that high at 513 above here. Look for the next target here at 513.28.
Very big story. This
SPY with a new intraday high.
Hearing from Broadcom, which is
I'm going to just show you guys this here. This is the previous high. Back here on Friday at 2:48 in the afternoon.
Quadruple.
Trying to come back up and create a new high currently right up here. And also note that SPX local resistance above.
Everything in 2024 begins and ends
at 51.50.
ASML. When it was on the decline.
So keep our eyes up here as well for that target to the upside.
I bought it.
Okay.
So.
All right, good stuff. Let's take a quick break. When we come back, Farmer Jim has another new move, and we're going to tell you about that when we come back. We also are going to talk about healthcare more broadly. It's one of the 5 best performing sectors this year. Jimmy's move was within that. Little teaser. We're back after this.
Are you following the Halftime Report podcast? What are you waiting for? Look for us in your favorite podcasting app. Follow the Halftime Podcast now.
comfort.
All right, we are back. Farmer Jim with another new move. You sold Thermo Fisher TMO, which you owned for several years. Why?
I did it reluctantly because I do think it's a fabulous company with fabulous management. But the problem here is simple. Earnings estimates and guidance have been disappointing for several quarters, particularly the guidance. And there's fundamental reasons for this. China is in a big slowdown. We know that. We're past the big COVID surge in business to Thermo Fisher. And this is a stock that has a 27 times forward multiple. I have a hard time putting those two things together. It's a stock that I may revisit in the future. Actually has a meaningfully high debt load from some acquisitions that they've made. I just don't see it going anywhere anytime soon, and potentially going down at this valuation.
You have a thought here, Joey?
So we sold Thermo Fisher out of the JOT ETF last April. Obviously recognizing a lot of what you see is the deterioration in the quality of its earnings. Healthcare overall is beginning to resurrect itself.
It's waking up.
Yes.
It is resurrecting itself. And I think from a perspective of allocation, you're going to see a lot of funds that had moved away from the healthcare sector in 2023 re-engage once again. So I think there's a lot to get excited about. Obviously, companies like Intuitive Surgical are doing really well. Viva Systems is another one, and Regeneron. These are all associated with a lot of the technology that's being introduced into healthcare, but also some of the biotech move that's playing out within the marketplace, and the biotech move that you could play at a higher market cap valuation.
Scott, if I may just quickly agree, I totally agree with everything you just said. I still have the exposure, Vertex, AbbVie in terms of pharma, biotech, CVS, United Health in terms of the healthcare, but the overall healthcare trade is coming back from a terrible 2023. I think what happened in 2023 is the bad concerns about an upcoming election season actually were brought forward courtesy of the Inflation Reduction Act in 2022, which allowed drug price negotiations from Medicare and Medicaid.
So Lilly has been the standout, obviously. Price target raised to 910 from 810 at UBS. It is the best performing healthcare stock this year, up better than 35%. Weiss, I obviously turn to you here. You had liked profitable healthcare. Two questions. Did you get out of the space too soon? And obviously, I think it's fair to say you may have chosen the wrong stocks to express your view in the space when you were in it. Now what?
I think both those are fair points. I did make some money on United Healthcare, didn't on Humana. So I did pick the wrong ones.
What about now? I mean, it is. Look, biotech's been going crazy, and healthcare's...
Yeah, biotech, to me, that's a catch-up trade. I'm not really sure if finance costs still high. I had owned the biotech indices for a while, and I think that's the best way to play it, unless you have...
You mean like the XBI?
XBI, is one way that, there are a couple of different ones. There are more than that, but XBI is one of the more liquid. But unless you have the time, and I don't have the time at this point to go in and do all the work I need to do. You got to own a basket of these. But I did miss Lilly, and I don't know how I missed it. I missed it, and I don't want to chase it because, there are other weight loss drugs that are coming on the market. So sometimes you just miss things.
You didn't miss it. I got you covered. Don't worry.
I'm in JOT.
So Lilly,
actually had a decent
exposure to
healthcare,
which, by the way, last week hit, I think, an all-time high.
So Eli Lilly is, here's an interesting conversation. Everyone keeps talking about the Mag 7, okay? Eli Lilly should be part of the Mag 7. When you think about GLP-1 and what it means to the market, what it means to the economy, the technological usage in healthcare right now, why not? I would argue that Eli Lilly is more relevant right now than Tesla is actually relevant. This is a company that is seeing staggering revenue growth. I will acknowledge the comps will get harder as you move into the summer. In particular, Q2 of 2024 is going to look tough relative to Q2 of 2023.
I think you overstate the relevance of Tesla to the market now and in the past. It's really, to me, a cult stock, a niche stock that doesn't deserve even this valuation. I mean, everything is going wrong for them, and I think will continue to go wrong. I think, they're just not part of that group of the mega cap tech stocks that deserves to be there.
All right, let's get the headlines now with Pippa Stevens. Hey, Pippa.
Scott, Jack Teixeira has signed a plea deal for leaking hundreds of classified military documents on a popular online chat platform in one of the most serious national security breaches in years. The former Massachusetts Air National Guardsman accepted a deal today that includes a suggested 16 years in prison sentence and a $50,000 fine for pleading guilty on all 6 charges, sparing him of a sentence of up to 60 years in prison had the case gone to trial. French lawmakers gathered for a historic vote to make abortion a constitutional right today at a joint session of Parliament at the Palace of Versailles. As both houses of Parliament have already adopted the bill, today's joint session is expected to be largely a formality. And no relief for the Sierra Nevada as forecasters are warning more snow is on the way. A new system is bringing more to the region after being hit by a powerful blizzard that closed highways and Yosemite National Park over the weekend. Many areas received as much as 7 feet of snow. Scott?
7 feet?
Yeah.
Unbelievable.
Yep.
Pippa, thank you. Just ahead on the half, the committee debating our top calls of the day. First, though, Bob Pisani is going to bring us today's ETF Edge. We'll do it next.
NBC.
All right, we're back. Bob Pisani has today's ETF Edge. Hey, Bob.
Hello, Scotty. On Wednesday, SEC Chair Gary Gensler will hold a vote on one of his most controversial proposals, a rule that would require corporate America to disclose material risks posed by climate change. President Biden said climate change is an existential threat and that it posed a greater risk than nuclear war. The ETF community is watching the vote closely because the proposal will provide a lot more data on climate issues that can be incorporated into ESG ETFs. Let's talk about the implications with Arnie Nowak. He's the DWS head of systematic investing solutions for the America. He also runs several ESG-oriented funds. Arnie, this vote's Wednesday. How's it going to go, and what will it require corporate America to do?
Yeah, so in general, I would say it's fair to say that corporate America has varying levels of enthusiasm for that rule change. From our perspective as fund managers, more data, the better. So the more clean data we can receive and the more regulation fosters the creation of that clean data is good for us.
But what will it require corporate America to do?
It will require reporting more. It will require being more transparent and more forthcoming with the actual emissions.
So there are a lot of climate change and ESG ETFs that are out there. You run a couple of them. We've talked over the years. Does the ETF community universally support the idea of more disclosure? How does that help the ETF business?
Yeah, if you think about ETFs, we track indices. And the way indices are being constructed is systematically on the basis of publicly available data. So, as I said before, anything that fosters good data generally is supported by the ETF community and by us specifically. If you look at USCA, S&P, some of the funds that you mentioned, it's important for us to have clean data.
Yeah, we're putting up some of the funds that you manage right here. Now, remember, a few years ago, we covered this extensively. Environmental, social, and governance, the ESG story, those ETFs were all the rage. But that enthusiasm really has cooled off dramatically. There have been outflows from most of the ESG funds in the last year. Several have shuttered due to investor uncertainty over how to define what ESG is. We've had high fees. We've had political controversy. Is ESG still relevant? And how is it going to redefine itself if it is still relevant? It seems like it's really lost a lot of momentum.
So, Bob, I would say it absolutely continues to be relevant and will be relevant in the future. S&P, for example, our S&P 500 ESG tracker for the first time crossed $1 billion in terms of assets this mark. And USCA is a climate-specific index tracker with over $2 billion worth of assets under management, really focuses in on climate-specific topics. So to your point, it's being redefined as something more specific. We come from a broad ESG, environmental, social, and governance-related investing, to now specifically honing, for example, on climate-specific topics.
Yeah, with all this new data that's going to be generated by these disclosures, it's no wonder the ETF community is really supportive about this. We're going to have a lot more on the SEC's proposed climate change rule and what it means for your portfolio. That's coming up on ETF Edge at 1:10 p.m. Eastern Time. Arnie will be joined by Dave Noddick. He's the former financial futurist for Verify. That's etfedge.cnbc.com. Scott, back to you.
All right, Bob. Appreciate it. Bob Pisani coming up. We do have our calls of the day. Fleet Court, Disney, Rollins. By the way, Bitcoin ripping.
Oh, yeah.
Ripping today. Talk about all of that coming up.
2025.
Welcome back. Take a look at Bitcoin. There it is, over 67,000. We're approaching all-time highs, Mr. Weiss.
Yep.
It's another 7% today. What's behind this other than
Tesla right now trading minus 7.19% coming into S5. I'm about right now to DCA on 200Cs. Once again, so I'm kind of spooked here. I'm like scared.
In debt to GDP.
Now $2.18 on 200C. I'm about to add some more right now. Just want to give you guys an update there. I'm still bullish here on Tesla, even with all the doom and gloom down here. Google turned around briefly, now only down 3.22%, so it looks like it's about to turn around as well. Tagged its S5 and made its turn. Tesla right now on its S5 at 187.
I mean, it's just
97, down 7.24% today.
Asset class right now.
Tesla, baby. S&P 500 SPY coming up here, still not getting that new high. Kind of looking for that new high on SPY. It's doing the same thing that it did earlier, where it came back down, rolled. See right back here where we had the failure to get the high, rolled back down, retested across to see if it was going to head down, reversed, and trapped the bears. They're going to try it one more time here to retest that 5-minute trigger. At 517.66.
Interesting one in here.
But I am going to add some well, I've got an order in right now. It hasn't filled, so we'll see if we catch a fill on it or not. But I am about to DCA some more Tesla down here. I'm in the dumpsters trying to buy a bottom here in Tesla.
Is Ethereum
full blood on Tesla today on the news this morning?
On the belief
that they were China sales were down 19%. Woof!
So much alpha that could be generated in owning Ethereum.
5 on Tesla, minus 7.34% right now.
I just think it's, sheep, being let
slaughter. Can we replay that like multiple times over the next 10 years?
Also, talk about Bitcoin rallying. Bitcoin today trying to make one more stab above at R5 at 63.03167 right here. We've got the chart up for you this morning. Someone asked me if I wanted to buy it. Bitcoin here, I said no, I'd prefer to buy it lower. Prefer to buy 65,640, but it is trying to make that leap straight up into 68,03167.
Upgraded to outperform at Baird. Price target to 330. You own it. You own it in the Joe T.
Correct. And to be clear, this is a financial sector company. The sentiment towards profitable.
I think I'm the only person out here buying Tesla right now. Definitely, I am probably the only person out here buying Tesla.
It's a business payment platform. So far, year to date, coming into today, it was down 2%. So it had relative underperformance to financials overall, but it's getting obviously a clear lift today on the back of that.
All right, Disney, new 52-week high, Jimmy.
Yeah, I know.
Boy, as the tables turned, for the stock.
Yeah.
Jury's still out probably on what's going on at the company, although even those prospects seem improved at this point, and maybe dramatically so. 135 is Morgan Stanley now from 110, and they cite, quote, realistic optimism.
So I'll start where you started, Scott. The sentiment has clearly changed. Now, if you go back 6 months ago, it was seemingly every day we were talking about how negative everybody was on Disney. Now, what's happened? I mean, a few things have happened here. One, the path to profitability and streaming. I know for a lot of people that's not the most important thing. To me, it's very important. I mean, that is the future of this company. And they're on a path that 6 months from now, they say they're going to be profitable. Maybe even before that. That's very big for their future. The Hulu transaction, Scott, at some point, the Hulu transaction's got to get done. It's got to get done pretty soon. And maybe people are going to kvetch over whether it's $9 billion or $12 billion that Disney pays, but you put that in the rearview mirror and you grow the streaming business even more with Hulu behind it. Finally, I think some sentiment has, believers have come out in Bob Iger and in his ability to monetize ESPN and thus staunch the decline in linear declines of subscribers there. So, look, the sentiment has turned. Here we go.
All right, Rollins also, Joe, reiterated at Bank of America as a buy. Price target stays at 51. This stock is the bee's knees and still a buy.
So this stock is the purest definition of a quality company. Stock has done remarkably well over the last 15 years. They are Orkin brand. They are about pest control. Residential is about 46% of their business. This is a company that in the industrial sector is a must-own.
All right, quick break. Then Mike Santoli with his midday word is on the other side.
Yeah, you need to see more. You want to see more sideways before I add to your Tesla position. Yeah, I was just talking to Joe about it. I'm like, Joe and Bork here in the background. I'm like, I can't believe I'm taking this Tesla trade. I'm like throwing up here in the chair going, what am I doing? I'm a little scared here for sure. Let's go over here and look at Tesla really quick. I mean, it's blasting below even S5 right now. Down 7.37 on the day. Huge downside move on Tesla. Not only that, but let's take a look at this day here. Talk about a down day. Look at that right there. Just blasting straight down this morning. Trading right now 187.82. Kind of brutal, right? And kind of like sweating bullets here. Look at that trade right there. Woof. If you want to get scared, look at what I'm doing here. That's a straight shot down today on Tesla. Coming into retest where known support is down below here on a 30-minute basis, you can see right here that right down here, these are where all the known buyers are. And it's coming right down there right now to say, hey, are you guys still here down below on that bad news? I'll tell you what, if this doesn't hold down here for me, right? This dip buy that I'm doing down here doesn't hold. You're talking about looking for some pretty serious downside for Tesla. Let's look at a day chart over here and see where the next spot would be for Tesla. Not only that, right? Just look at this quarterly here. The quarterly is at 163.83, so that would be the first target on the downside on Tesla.
All right, Mike Santoli.
I got two of these in there. I don't know why.
Here with his midday word.
Delete one of these here, but move this stuff over here.
Yeah, you recall it.
Look at that one big red bar on the day on Tesla. Look at that bar over there. Woof.
Now the majority of
that's a big boy right there. Look at that thing. Bam, straight down. So first target would be if this doesn't hold here right now. Next target to the downside 175.20, then 163.83. And if that 163.83 fails, we're taking a trip, big boys, down to 80 bucks. 77.93 is the next target below.
And it's plausible. And I think you can separate out the different.
I am sweating. Whoa, what's going on here? I'm sweating on this trade for sure.
And of course, it comes along with a lot of that speculative energy that we see.
Look at that blooding down here.
So it's ringing some loud alarm. It's more saying
187.10.
Bullish. You have company.
So you got 175 next, then 160 something, and then 70. That's basically a S1, S2, S3 on Tesla.
It's going to bear though. Marco,
3 downside targets on Tesla.
The Bitcoin over 60,000, maybe some complacency too. So
no, you see the.
And I caught a fill in here. I got that fill at that roll down there. I caught a fill.
200-day average on the S&P 500. It's just by any definition. But what it comes down to is mid-cycle stocks are beating late and end cycles.
Down 7.5% almost. More than 7.5. Down 7.64% on the day for Tesla.
I mean, whether you like it or not, when you're up this much in the beginning of the year, when you're up this much over a 4-month period, the streak 16 of 18.
187 is the case that they gave me on Tesla, trading the murder right now at 187, baby. Tesla getting murked this morning. Woohoo! All right, let's see what you got. Let me come on back on screen here for a minute. Let's see. Break time, be right back. Turn that off. The old man break time. Dude, I am sweating bullets right now. I'm scared. I hate buying dips on tickers, man. It's like the worst part of trading is being like, okay, I'm going to go in and find the worst ticker today. Oh, it's Tesla. Let's buy that shit as it fucking like the flaming dumpster fire rolling down the road. Tesla down 7.74% right now. Woof! Way outside. That's a 2. Is that a 2 sigma move? I think that's a 2 sigma move on Tesla today. Down almost 8% on the day. On news, supposedly on news this morning, that China sales were down 19%. Shit. 8% whack. And they're down on the year. Let's look at Tesla for the year now. Tesla down this year. Let's see what they are for the year right now. I keep bouncing. This keeps bouncing around here in Tesla. So Tesla on the year, right? This is January, right? This is the December 31st high right here. Down on the year so far with this new low. Right there. Down on the year, you ready for it? 53.69% on the year. Literally taking or being given nothing this year. Heading into March right now, and Tesla down almost 54% on the year. And getting clipped this morning by almost 8% in a 1-day time period. Woo! Tesla, baby. What are you doing? Turn around for me. I was fearful taking the next expiry, too. I was like, man, they could make this shit go sideways and torch all Tesla bulls this week. So I did put the expiry out to the 15th of March, thankfully. But I'll tell you what, watching this right now, it is gnarly watching Tesla go down like this in 1 day. 8%, that's got to be the story of the stock market today on sales dropping 19% in China. I guess you lose 8% of your stock value, possibly even more. SPY just grinding right now, exhibiting the same traits as it was earlier this morning. Came into its first high. Back here this morning, a little bit of rejection. We didn't get the peak that we wanted. Took all day to get up here and get the new high. It's now 1 o'clock in the afternoon. We know that in another half an hour to an hour, we're going to get the crazy part of the day, right? 1:30 till 2 p.m. We see the market go kind of crazy. We also have Turnaround Tuesday coming up tomorrow. We've got Fed speak, and then we've got congressional Senate hearings into Wednesday and Thursday for Jerome Powell. The talking heads this morning are discussing rate cuts and what's bearish or what's hawkish, what's dovish. The truth be told, you've got Bostic saying expect 2 rate cuts this year, more than likely not back to back, but that still means we only have so many rate decisions this year. So the expectations as of right now is that the first rate cut would be in June, right? So that would give us another one sometime in the fall or winter. I do have a question for you out there. I was asking a buddy over the weekend if we would see something like, I think it was 2018, 2019. Check. My mic's kicking out right now. We used to see sometimes emergency rate hikes at Senate hearings And I'm always wondering about these the Fed, if they're ever not going to be forthright and just throw down like a rate increase without anybody knowing about it, like an emergency rate hike. Oh, by the way, we're raising rates by 25 basis points. What do you think the effect would be on the market if that were to ever happen, where you get an unannounced rate hike? Do you think the market would blood? That's what I think would happen. I think you'd auto correction ignite it or something, right? Would set the market on fire. Yeah, limit down. Dump. Just like right at the Senate hearing, right? Just we're going to raise rates today, 25 BPS. Market would fucking go to zero like one day. Back to 420. I bet you there's got to be a bear out there somewhere that's praying for that to happen this week, right? Unannounced rate hike. Woof! That would be smoking. Just for the memes. 420 on 420. Oh man, dude, it would be saucy if that happened. Especially with all the talk from the CNBC guys this morning. Someone tried pushing the narrative this morning that if there are any rate hikes this year, it's because they broke something. And we just don't know about it. They're watching all these banks, these regional banks, as the precursor for it.
Christina Hooper.
So there are some people out there that want to see the world end.
Analyst on the street. And Jeff DeGraff, he foresaw this rally before a lot of other people did. We'll find out where he thinks we're going from here, and I hope you'll join me then. All right, CrowdStrike. They report tomorrow. That's a big deal, especially after Palo Alto. You a little nervous?
Very big deal. Candidly, I bought the stock at around 140 last August. I wish it was in the quality momentum index because it would make the decision easier.
Yeah, I'm not really a fan here. I'm upset at Tesla right now. Now they're trading 7.35 right now. I'm just like, I'm looking at my so I've got two trades on right now. Well, I've got.
So I
own RGF. That went below $1 today, and I added to it the other day. I just got asked if I was going to add again, and I'm like, fuck no, I'm done adding to RGF. So I'm in like an RGF trade that's upside down. I've got a in the market that's made me some money twice.
It's foolish to sell based on.
I'm hoping for it to pay in late March, hopefully. And then I just took this Tesla trade, and I'm like, what am I doing down here buying this stuff? I'm going to have to come back in 2 weeks and go, yay, I made it, or I'm going to say I got fucking wrecked on this Tesla trade. So I'm looking for any kind of print to make me happy. Anything. I just need like some kind of a win right now.
A penalty and a pivot from Apple.
And I'm looking at Tesla and I'm like, fuck me, they could run Tesla sideways for the whole week.
It's messaging.
Just to destroy whoever's got weekly calls on Tesla.
To be positioned in that stock going forward. Also ahead.
In our interview long on Tesla, let me ask you that out there. Here, let me ask you guys right now: is anybody out there buying Tesla down here? Do you guys like buying when it's already up and stuff like that, or do you guys like afterwards saying you were long? Or let me know what you're doing out there, because I'm down here buying it, and I'm like, am I the only person out there buying Tesla here? I might be. Yeah, I saw that RGF has earnings on Friday. I told myself that I would hold RGF for Q1 only. So if I don't make any money by, the end of March, for maybe the first week of April, I'm going to cut that trade loose. So I'm only willing to hold it for M&A season. That's why I started buying it, was on the hopes of not quite a merger, but either they take it private. Or someone's gonna buy it, one or the other. So I don't want to hold it for like 2 years or 3 years or anything. I told myself I'd give myself 1 quarter. That was it. And I think they blasted through this morning below $1. So I'm hoping for any kind of like, we're taking this company private or whatever they're gonna come out with. The CEO was buying big blocks of shares the past month and a half or so, and then there was a activist investor that was pissed off, saying that they were trying to take the company private. So just all that rumor mill that's going on around that company, and they do good stuff. Like, they make real product, they make good money. They had a bunch of debt that got repackaged. So that it's a good company. It's not like it's a bad company or anything. But it's getting killed right now. So you're not buying Tesla down here. When do you guys buy Tesla? You guys always look for it to be back above the hourly trigger to buy? Probably, right? I'm down here trying to scoop up the bottom here. Buying at the top on margin is your specialty? I know. I always feel alone when I'm buying these things at the bottom. I always feel alone, and then I come back in like 2 weeks, and I'm like, woo, I'm rich. And I'm like the only one. People are just getting in at that point. They're like, I'm getting in right now, Cap. There's more to go. And I'm like, I was over there buying it in the shithole when it was down in the dumpster fire. Should I sell and just buy it? You know what? I have something about NVDA today. Did you see? Let me read something to you if it's still here. Goldman Sachs. This was at 10 a.m. Goldman Sachs this morning says that the run is done in the hottest AI play in the market today. So Goldman Sachs calling a top, I guess, in the stock market. One of the most popular AI plays may be nearing the end of its red-hot run, according to Goldman Sachs. Analyst Michael Nej, I don't know, it's NG, initiated coverage of excuse me, I'm losing my voice already. I lost my voice on Saturday. I couldn't speak. All of Saturday I was like no speaking. But they initiated coverage of super microcomputer with a neutral rating Monday, saying that while the high-performance server company's partnership with NVIDIA and AMD and Intel backed the past year's 825% rally, now the shares look fairly valued. So they're talking about super microcomputer. SMCI is very well positioned to serve, so I guess not NVIDIA, but SMCI is very well positioned to serve demand from AI CSPs over the next few years, but serving enterprise AI infrastructure demand in the years after likely will be more competitive, particularly given more enterprise-focused IT hardware suppliers such as Dell and Cisco, referencing cloud service providers. Supermicrocomputer has grown to nearly $60 billion in market capitalization and is slated to join the S&P 500 later in March. The stock has more than doubled in the first 8 weeks of the year, soaring more than 278% in 2024, after climbing 246% in all of 2023. That's why further upside looks limited. Let me know in the chat, do you think that SMCI is done on its run, or do you think it'll keep running with NVDA or not, or maybe there'll be a rotation of money into NVDA? XOM with a dip buy, and it looks like it hit a bottom at 104.02. Still looking pretty bearish though. So that if you're looking to sell that one, another sell on that one would be at 105.29. 105.29. Tesla down 7.32% right now, hugging its S5. We'll see if this one turns around. IWM still parked on its half-hour trigger, just grinding sideways. No big moves there. Google trying to turn around right now. Bitcoin doing its thing. Looks like it's got some kind of topping going on. SPX still grinding above, trading sideways on that local resistance, trying to get as high as 51.50. Q's doing its thing, just dragging ass sideways. I'll tell you what. Tomorrow looks like a down day is shaping up. When I'm looking at Q's right now, it looks kind of like it wants to roll off into the end of the day today. I'd be kind of wary here. I'm watching Q's on a half-hour basis. Looks kind of weak. SPX is almost at resistance. Gold was moving today to the upside. It looks like it wants to make one more move to the upside as well. If you guys are thinking about turnaround Tuesday, do you think that we just grind sideways and down into Wednesday for all of these bears, and then you get your upside move from Jerome? That's what it looks like it's setting up for. If you look at let's look at the Qs really quick. No, wrong one. Nope, wrong one. Bottom right-hand side. So here's QQQs right here, right? And let's just take a peek at this one. This is a 30-minute basis on Qs. And it sure as shit looks like it wants to do the Like CNBC wants to play that traders wait the Fed decision bullshit into Wednesday and Thursday, and then you get the vol release into that Wednesday trade, right? That Wednesday Thursday trade, where we've got sideways and down into Wednesday Thursday. Traders are waiting the Fed speak, and then of course you get the vol that comes off Thursday, and then Friday though we still have non-farm payrolls, so you might not see the relief until after that report on Friday. So far right now, Q is looking kind of bearish. SPX kind of at a top right here, right? Like they're setting up that, hey, place your bets for Wednesday and Thursday for some downside moves to come. Gold taking off right now still, consolidating. Here's gold right here. We're looking for a target of 2150. Yeah, not too much today. Not so much going on in the market today. Kind of one of those slow days in the market today. Oh, Trader Podcast, what's going on? Did you make a deep fake of J-Pow? Dude, where is it at, brother? Hey, Trader Podcast, can you email it to me and I'll play it for the audience right now? Because this is making my eyes bleed here. I'm watching Spoos and I'm like, oh, we're going to have to do this for 3 days, aren't we? Just that slow sideways consolidation where my eyes bleed, and then we finally come to the Senate hearing, and all is well, nothing changes, and then all the vol comes off the market, and we just start ripping into Friday close. It's like last week. I think Vol Wiz said that too. Last week, Vol Wiz was like, oh, fuck, here we go. Another 4 days of sideways for a rip into the close on Friday. Apple had some bad news come out this morning as well, right? Apple was down, Google was down, Tesla down. So I'm already in. I mean, I guess I'm in like a quasi Apple trade just by being long Tesla, right? Looks like they're all down. They were all down today in bad news. You sent it via DM on Twitter. Let me bring it up right now. I didn't see the new J-Pow. Let me bring it up right now. Hold on here. Here we go. What do we got here? Can we
day in that chest?
Hold on. Can I make this bigger? What do we got going on here? Are we gonna get busted again? We're gonna lose. I keep losing. I keep playing like regular music on the show. Binky's all mad at me because we're being demonetized every day. Hold on, let's play this. And this is, I think this is from Trader Podcast. Oh, yeah, baby. Here we go. Ready? You guys ready?
He's a rational investor. Live the day in that chest. Save some of his paycheck just like all his.
Oh, hold on. What are we doing here?
Him looking for high yields. That's never the case. He's a rational investor. Live the day in that.
Nice.
Save some of his paycheck just like all his ancestors. Him looking for high yields, that's never the case. He's seeking 6% returns low, instead he wins the race. When he checks his accounts just to see what they're fielding, it's like driving in Maryland, ain't nobody yielding. What is he to do? He shouldn't be in a drought. So he visits his advisor just to sort it all out. Inflation's higher than your bond rate, that's what I was fearing. So your savings account is slowly disappearing, and your CDs are pointless. That's not very funny. What would you like me to do? Put it all in dog money. Dog money, dog money, dog money, dog money. I'm trading it in for dog money, dog money, dog money, dog money, dog money. I'm putting it on the dog money. My 401k is now a 401k now, and some of my net worth ain't no longer in a straight line. I'm making small moves, I ain't gonna be a pawn. I sold my IRA and bought an NFT of one. Balling on Doge, I dish them out like a Tommy gun. You think I was stayed with the way I'm passing on Washington? Let's be like Matt Gates, you know what I mean. Assuring everybody it's above 18. It's a modern day gold rush, the prices of gold home. Like Reggie White first to honest, I'm headed straight to the moon. My broker's calling, you know that it's on. Bad dog wanted, don't stop till it's dawn. One more airbase, 2 more museums, 3 more walls, 4 more Supremes, 5 more stadiums. We're all out of fiat. Can you take trillions of these and go and make a zero? Pay our debts in our currency that might be unfurled if it's no longer the reserve currency of the world. Confidence in the dollar is permanent. Just ask any scholar. People are exchanging their dollars for dog money. Dog money, dog money, dog money. We trading it in for dog money, dog money, dog money, dog money, dog money. I'm putting in all the dog money.
That was a Trader Podcast out there. Trading it all in for, did I get that right? Dog money? That was Trader Podcast. Coming in hot with some sauce. SPOO's trading sideways still. Not much movement today in the S&P 500. Oh, we've got some talk about Apple right here.
Microsoft, I don't know, maybe 2014, when they stopped chasing Apple, when Microsoft no longer wanted to develop a phone, and they just understood where their role was in the world, and that is as an enterprise software company. And I feel gratified that Apple is leaving the world of EVs behind and concentrating on what it does best.
What are your thoughts on that out there? Do you like that Apple's not going to do a car?
Is iPhone.
Or do you want to see an Apple car?
That's the linchpin of everything. It is, right? How much does Apple tell a story about how all of this works in the ecosystem of iOS and iPhone specifically, as opposed to new Mac hardware and generative AI visions and everything else?
Here's what a lot of the analysts are saying. Again, this is mostly speculation, but I can also consider this informed speculation from their history doing it. They can hold a lot of these, whatever AI features they announce, a lot of it will be global. That means if you have an iPhone today, a new iOS update will come out and you'll be able to use it. But they'll reserve some of the best stuff for the new iPhone. Whether it's true or not, they'll say it can only run on this iPhone. We created this amazing new chip that can only run this stuff. So that is kind of how in the past they've used it to drive upgrades. Go back in time to a few years ago when they introduced the 5G iPhone for the first time. That was a big upgrade cycle. Go back to the iPhone 6 lineup. Big screen for the first time. That drove the biggest upgrade cycle, period. Everyone wanted those big screens.
I got one at 6.
Exactly.
Yeah.
So, but those are like more hardware-related things. This is all, to your point, going behind the scenes. Again, a lot of the stuff they're talking about literally today with these new MacBooks are stuff that you just need an internet connection. You don't need the latest and greatest hardware to run. If you have Wi-Fi, you can do it. So they're going to have to prove that the new iPhone is worth an upgrade just on those AI features alone.
All right, Dee, you get the last word.
Okay, I just want to introduce this idea that the killer piece of hardware in the age of AI may not actually be a smartphone. That is something that is getting some discussion here in the Valley. Could it be a pin like the Humane AI pin? Could it be a Rabbit device? And I think that is like this big existential question that is maybe far off in the future, because Apple, certainly Kim talked about the moat, it's entrenched the iPhone device, but look at what happened so quickly with Google and search, right? Everyone thought that search was so dominant here to stay, and now, we're having this really big discussion of what will displace search. Yes, Apple iPhone being displaced is much further away, but there just is that question: what is going to be the hardware of the AI era?
It's so complicated for sure. Deirdre, Steve, thank you both very much for that. We could talk about this. We need like a 2-hour-long.
Do you think that Apple abandoning plans for a car is good or bad?
We're going to get your take now on the.
Does that make Apple not, or do you think the
data for
the AI talk is good for Apple, or what are your thoughts on that?
Trends in the.
Are they still a growth company?
You to invest specifically in technology and in computer chips in particular.
Right. Well,
I'm kind of taken aback by the whole Apple thing as a growth company. How do they maintain growth and leadership in growth? What would it be? Would it be an implant or something, or do you think AI is the way forward for Apple as well? Apple is IBM now, zero meaningful innovation. They haven't been a growth company for years. I remember when they went to services and analysts couldn't wrap their heads around it. It took, what, 2 ERs for analysts to realize how many revs would come in due to services. But that still doesn't make them an innovation company, does it? That's what I always considered. Even, I mean, what does services do for you? I didn't see that as being an innovative thing either. So I feel like Apple's whole shtick is you have to have an iPhone, right? Everybody needs an iPhone. Everybody needs a Mac. And you want to see that next device, right? An actual hardware device that people have to have. Yeah, you're saying services is the only growth that they need. Carillo is saying services all the growth that Apple needs. Does that make them a growth company, though? It does, I guess. Carillo is saying that it does. I don't know if it does or doesn't. I find that hard to believe. I could see AI as being the growth that they need, or they need something, I think. Services is just a tax on user base. Someone can come take it if they come up with something groundbreaking. If everybody, yeah, this is the thing that I'm worried about. If everyone switches from phone to AI, cochlear implant or something, they're fucked. Yeah, I agree with that statement. And when we're there, right? We're like one step away from it. Do you guys all understand that? That the whole concept of your phone is that eventually it's going to move into your body, right? It's either going to be an implant, it's either going to be something in your ear, glasses, contacts, something like that, right? They have to compete with that, don't they? And if they don't, they're going to be fucked, aren't they? I agree with that statement. Who said that? Who said that? You think Apple's going to be the company that controls the tech ecosystem? Yeah, I think I'm with Dr. Gon on this one. Dr. Gon on this one. They could get displaced fast, right? They could get displaced very fast if that happens. I mean, just think about it. If you had shit. Why am I having a mind block on this? If you had contacts, right? And they were somehow connected via a small wire or something, even if it came out of your eye or something like that. But just imagine if you were in construction or something, anything, right? You could just, with your eyes, measure something or imagine different colors on a wall or on a house, directions in front of your eyes, you name it, right? If anything like that would ever be possible, and get rid of the phone, if they weren't a leader in that, they could be in for a hurting if they were not a part of that. Their whole business would be taken away, right? Yeah, just anything other than a phone. I agree with you, Dr. Gon. I think I'm with you on your argument there. They have to keep up with whatever the next thing is after a phone. The whole AI thing, I don't know. I mean, I get that one day it's going to replace Google search, but dude, I use AI, or not AI, but I use written language models. They're okay. There's a lot of garbage in AI right now, in my view. I realize that we're pricing it in the stock markets, it not being the case in the future, but there's still a lot of fucking garbage in AI, or at least written language models. I mean, that's two different conversations, I guess. I don't see AI replacing like Google search yet. Although I have a lot of friends that spend a lot of time using ChatGPT 4, I feel like I can see it. Like, I feel like I can see even the answers. I'm like, there's some bullshit in there. Where I'm like, there's like something not human about the returns. You know what else I noticed too is I was actually using GPT-4 last week looking for some information, and they were giving me stale information, stuff that wasn't current. Yeah, copyright too is an issue, right? There's a lot of like bullshitting that goes on in the returns on AI that I notice. Like there's like it's just like whatever the best answer they can find, but it's not necessarily the best information. Oh, please tell me the Tesla's not going down. I haven't looked. 7.31%. I'm okay here. I feel good here with Tesla. I'm actually not I'm not that concerned about Tesla. The only concern I have about Tesla here is the Fed. Outside of that, I feel pretty good. I'm not gonna stare at that shit until like next week. All I needed to do is like if by next week it goes back to 200, I'll be happy as a pig in shit. But I need it to come back. Right now, we've got a little bit of a roll going on SPY. You know that at this time of the day, it's now 1:23 in the afternoon. We get that funny business going on in the markets. Not much happening today in the marketplace. We've got a second attempt by bears to send this down. Do they get a second chance? Or are they too afraid right now? But we don't have the cross just yet, but we'll watch to see if they get the cross and the downside move in S&P 500. Tech looks like it wants to roll down, so hopefully at some point SPY does the same thing. Maybe we can get a weekly buy on that hourly trigger. Still no joy, though, to the downside move to buy a dip. A little bit of a rollover in IWM. XOM coming back right now for a relief rally. XOM looking for 105. Google just kind of bopping around down there. A little bit of a roll here in Bitcoin. Talked about not wanting to buy that R5. It looks like it's coming back down. What else we got here? Tesla still kind of looking shitty right now. Gold consolidating on 21.19, looking for 21.50. SPX starting to roll. A little bit of a double top here. Nice little blood move right now on S&P 500. If this is SPX down below, we are at the local resistance. Sellers trying to come in one more time and take down SPX and SPY. Can I check? I've got Google. Google's up down here. If you want to see Google right now, I've got it up for you. Now, some people are long on Google. We had people buying this R5 earlier, I guess, or S5 earlier. They're doing better than Tesla is right now. But there are people in the stream that are buying Google down here. From a copyright perspective, I don't know how these AI groups are going to be able to defend themselves. I agree with you on that. There are already lawsuits out there, aren't there? I thought New York Times already filed a suit to sue, and I think some other companies followed along with them. I don't know what the answer to that is. I don't think it's good for AI particularly. And the other question becomes, when does it become more seamless with the copying of work that's out there, where you can't tell if they're actually copying or not? We're not there yet either in that aspect, are we?
Six straight positive weeks. Barclays is seeing strong margin momentum.
This is Target that CNBC is talking about right now.
Discretionary spending, maybe no surprise there. Gina, why upside from here?
Yeah, that's the challenge, is that sort of negative outlook, or the what I call headwinds to consumer spending. You know, things like higher interest rates, big credit card debt, you know, student payments starting up again, student loan payments, and so all of those things are going to be
so negative. Still in cars. Shaq's asking about Apple still being in cars. I think just going back to Apple really quick. Elon had mentioned that he doesn't want to see Apple in cars. I've heard that Apple wants to be the infotainment in cars, but not the actual car maker. That's what I've heard people say. They would prefer to be the systems across automakers, not so much the car manufacturer. The other thing too is they had some. Do you guys remember when Apple had rumors of having a deal with Foxconn to build a manufacturing plant, and then they had a deal with Hyundai that became public, so they broke that deal because they don't like publicity surrounding that kind of development. You guys remember when that happened with Apple and Hyundai and Foxconn, I believe. All right, this is it right here. If you're a bear, you're about to get the cross. Let's slide this over and see if they can do it. You're looking for a rejection right here. Let's see if they get it. They didn't get it earlier. You're just waiting on this green candle to turn around red to take a short on S&P 500. This is exactly what they did last time. Instead, we got green candles here. So they ended up getting big green candles right in here. Bam, bam. As soon as that happened, sellers got set up, right? We squeezed higher. So you're going to be looking for a red candle here. You want to see, hold on here. You want to see a failure right here. If you start seeing that failure right there, it'll take out that high. Right down there. Let's go check on Tesla, make sure I'm not going to get blooded. Look at Tesla down here, looking to get even more downside. Tesla still down 7.5%. Would not be good for Tesla today if the S&P 500 rolled over. Probably see a 20% down day on Tesla. Tesla's still down 187.55 right now. It's looking pretty bearish on S&P right now. Do I remember how rough Apple Maps was on release? I still don't like Apple Maps. Oh, hold on. So I still, to this day, am not a fan of Apple Maps at all. Haven't been. I don't like them because I feel like they curate my driving experience a lot, especially in the center of towns. I feel like, or not feel, but like if I know a place. Like if I go somewhere and I'm like, and I'm not from there, let's say, right? But I know the area. Like I've either lived there in the past or visited so many times. I'll get Apple directions, and I feel like they curate my drive. They're like, oh, you should take a left over here, and we should bring you downtown so that you can see, hey, look, that over there is the Apple store. Oh, and by the way, we do advertising with this company over here. So you should stop over here. Do you ever feel like that with Apple directions? Or do I sound like I'm going crazy on that? And I used to run, I don't know if it happens as much, but I used to have an iPhone. I used to do like directions on an iPhone and an Android. And I'd sometimes get different directions. Yeah, I used to run tests against Androids. And I would get two different sets of directions on how to get somewhere. Yeah, I don't know. Jerome's asking if we're going to get a new low. I'll tell you what. We'll look at Apple one more time right now. If Apple begins to lose, if like real doom comes in for Apple, I don't know why it would though. Like 19% sales down in China is big, but it's not that big. But if this is doom day for Apple, we'll look at it one more time here. I'll give you some big downside targets. So here's or not Apple, sorry, Tesla. So let's look down here in Tesla. You've got the first target down below right here, 163.83. So you can keep track of this at home, 163.83. Then you've got the low at $77. $77. You basically go. You'll have one more. We'll have one more stop at 153.27. Another check back on the big low down below at $103, and then you're heading to $80. And I would assume at that point, if you're just looking at it from a daily candle chart perspective, there's no reason not to go down to that $78. I gotta be honest here. Even if it turns around now, I thought Tesla was gonna go at least up to 220, possibly 260 or 280 on a squeeze, but still head down to that $80, that $78. Dude, they're murking it right now. It's not that far away, right? We're trading $187. We're down 8% in the day. $80 is not that far away. It really isn't. You know, an 8% day, you figure another 50%, you can do that in a correction, right? For Tesla, at least. I mean, just looking at it from the daily candle basis, we were already down at 103. If you're not going to get a new high this year on Tesla, right, then that means it's lower. It's not higher. So I don't, where we roam, I don't know what to say to you there, but woof. Woof. He took some call spreads for May on Tesla. Yeah, I've got March 15th, a couple weeks from now, some calls on Tesla. But I'll tell you what, like, it's, you know, if Tesla can't get new highs, then that prior low at $103, that means nothing, right? We go even lower at that point, try to find real support for Tesla. Another bear trap. Woof. They're just, dude. Look at that. Another bear trap right now for the Bears. They're just no joy today for Bears. They got to be pissed. Bears twice today. Twice trapped. No joy if you're a seller today. Literally no joy if you're a seller. Miro's got to be pissed at home right now. No joy. Sellers just getting wrangled in right now for all that doom coming on Wednesday, Thursday. They got to be pissed right now. Doesn't Musk want Tesla in the dirt so that he can gain back shares? Yeah. Does it matter? Like, the price of Tesla right now, anywhere from like that $70 to even here at $180. I don't know. It seemed like on a 1 minute basis, sure, but like, I don't know. I don't know that I would care if I was Elon. How long do you think he'll hold him for? 5 years, 10 years, something like that. A long period of time, probably. I don't think he really cares where he gets it. I mean, yeah, he'd probably like $80, but yeah, he probably would like it, but I don't know. I've heard there's problems with that too. Isn't what insider trading for Elon? Elon is moving his company, right, to Texas so that he can get his shares back, right? Paying dong pattern. End of day rug pull. I don't know. They are roping people in right now. They're like, place your trades and we're going to pin you until Wednesday and Thursday. A little bit of a roll right now in Bitcoin. Bitcoin rolling down. Two targets down below. 65,429.41, 64,485.1. A little bit of a bear cross on Bitcoin. Q's doing its grind sideways still, just grinding. SPX grinding sideways as well. Gold looks like it's still consolidating over here. Not much change in gold. Tesla still parked on S5. Not too much movement here. Big down day today for Tesla. Down currently 7.47%. IWM still consolidating sideways as well. And XOM pulling up right now. We'll see if it gets sent down for one more turn at 105.29. All right, I'm going to take a quick break here. I'll be back with you guys in just a bit. Tesla with a new low right now, now trading 7.83, almost 8% down day today for Tesla.
Seen some declines, but I think it's important to note that the average leasing pre-pandemic was about 580 million square feet. So to put it in context, industrial real estate was going about 70 miles per hour before the pandemic. It sped up to a frankly unsustainable 120 miles per hour. And now it's going about 90 miles per hour. And that's where the market's settling and really kind of hitting that cruise control button.
But we are seeing vacancies rising now. Is that just a factor of more supply or demand fall off?
It's a combination of both, but most of the supply that's hit the market has come from new development. So because of that massive demand for space, vacancy rates declined to a record low 2.9% in early 2022. So just like anything else, when demand is strong and supply is at record lows, there's going to be supply added to the market. And just like every number we track post-pandemic, the development hit a record in 2023 with over 612 million square feet of completions. The previous record was the previous year at 500 million square feet. So in a 24-month period, close to 1.2 billion square feet of supply was added to the U.S. industrial market. That's nearly equal to the entire Chicago industrial market, which is the largest one in the world. So right now we have vacancy rates at 4.8%. I mean, that's still a low number. That means the market's 95% occupied, and the 10-year average is 4.7%. So we've had this unprecedented amount of space hit the market, and we're just back to what the 10-year average vacancy is.
Well, just to dig in on construction a little bit more, especially in the closer in areas, you know, that was the big place to build because we all need our same day deliveries from Amazon. So construction starts, though, are now down 60% from their peak. I know you said it was a massive boom, but could that present perhaps an opportunity for investors?
I think it could. You know, construction, like you said, construction starts are down significantly. There was only 46 million square feet of starts in fourth quarter. And we do have about 377 million square feet under construction in the US right now, but over half of it's going to be built in the next 6 months. So we do feel that vacancy rates are going to peak at mid-year and then start to go down again because development is going down quite a bit. We're going to have much less supply hitting the market. And we feel vacancy rates are going to go down for pretty much every quarter for the next 6 quarters through 2025. So from that perspective, we really do not have fear of any kind of oversupply because this drop in development is occurring right now.
And that means the market could then get stronger if you just sit and wait, hold tight for a couple of years, I guess, right?
Yeah, I mean, I don't even think, frankly, that long. Again, we're at a 95% occupancy. We have maybe 1 to 2 more quarters of some small vacancy rate increases. And then the market vacancy will go back down again. But, you know, you're talking about a peak that might be 5.5%. Again, that's still a 94.5% occupancy rate in a market that's 19 billion square feet in size. So again, you know, the market's healthy. There has been some vacancy added to it, mostly through construction, but that construction is going down quite quickly.
Okay, James Breeze from CBRE, thanks so much for joining us. Dom, I'll throw it back to you.
All right, Diana Olick and James Breeze, thank you both very much for that. Coming up on the show, it's no secret that last year was a rough one for venture capital funding, but one group of founders managed to raise more money in 2023 than the year prior. We'll tell you who they are next. The Exchange is back after this.
Tech ODT.
Welcome back to The Exchange. Women-led funds received about 3%, of the more than $100 billion raised by venture funds globally last year. And while that's still just a drop in the bucket, that's about 1% increase from 2022's total. Sharon Epperson is here with more on that story and what's happening. Sharon, what can you tell us about this particular jump, albeit still small.
It is small, but it's encouraging, Dom. You know, it's a small fraction of the total pool, yet venture capital funding in the U.S. for female-founded companies has been trending up in recent years. The upswing has been helped by the creation of several women-led funds, incubators for female founders, and more new companies. Emergency physician Elizabeth Claiborne developed a device to stop nosebleeds.
Each NasoClip can be used for one nosebleed episode.
In the last 4 years, her startup, NasoClip, has raised over $3 million in funding, mostly from female investors.
When women invest in women, they also bring to the table more than just capital. They're introducing the social network that is needed to be successful.
When we first met Dr. Claiborne last year, NasoClip wasn't yet on the market. Now the product is for sale and bringing in revenues.
I don't think I would have actually got off the ground at all if I had not been, believed in really early on by my fellow, female investors.
One of her backers is Portfolia, a woman-led venture capital firm with investments in over 140 companies.
It's all about putting our money behind the companies that will enhance our lives and provide us those returns.
The Portfolia platform creates and manages 16 venture funds aimed at women investors.
We have about $25 trillion of wealth in the U.S., and we're approaching 50% of all wealth being owned by women in the U.S. today. And that wealth is power if we use it.
Investors in Portfolia funds must be accredited, with $200,000 a year in income or $1 million in net worth minus a home. The minimum investment in a Portfolia fund is $10,000, and each fund invests in 10 to 12 companies.
So we let them dip their toe in and basically give it a try and see what venture investing is all about.
And investors have a stake in startups that have the potential to generate significant value, not just in dollars, but also in women's lives.
All right, it's a big story. We're going to get right back to it in just one moment, but we got a news alert on Boeing and Spirit Aerosystems with Phil LeBeau. Phil.
Hey, Dom, this is a notice from the FAA. They have concluded their safety audit investigation, if you will, into the Alaska Airlines door plug that was blown out in mid-flight. Remember, shortly after this incident,
just a heads up right now, I'm bringing up BA coming up into its hourly trigger right now, looking for a squeeze higher. Target to the upside on BA, 206.12.
Within the last half hour is pretty much what we expected it to be. There was a lack of oversight in terms of things like the manufacturing processes, the identification and storage of parts. Not a surprise, given the fact that we knew that one of the conclusions from the initial investigation was that, from the NTSB, was that the door plugs were not put back inside, the bolts were not put inside the door plug, and that nobody noticed it. So there are no surprises in this report, but it is the conclusion from the FAA regarding the incident involving Alaska Airlines, and this is the final word from the FAA from their safety audit of Boeing and Spirit Aerosystems.
Okay, so with that in mind, how much of an all clear will this be for this whole idea that Boeing and Spirit can not only move forward with production of those affected jets, but also with the possible merger that we have in the works as well?
It has no impact in terms of a possible merger. That is a completely separate situation. In terms of production of the 737 MAX, it's capped at 38 a month by the FAA. Boeing cannot move above that. So it's going to take some time for them to show to the FAA that they have made the corrections that the FAA has outlined in their investigations, and that the FAA is satisfied that Boeing's quality controls are up to snuff. That's going to take some time. That will not be an immediate, hey, a couple of days from now, you're good to go in terms of raising production.
All right. Phil LeBeau with the latest there on Boeing and Spirit Aerosystems. Thank you very much. Sharon, let's get back to you now with regard to your story about companies and funding. Can you take us through kind of what kind of companies are helping in this effort, and where exactly are female entrepreneurs and founders finding that money?
Well, you know, female-owned businesses are suffering from access to capital, many of them. And what is happening now is more major financial services firms are looking to help fund some of these companies as well by funding women-led venture funds. So we have seen Bank of America jump in, and as of June of last year, they'd already committed about $500 million to equity investments for women-led and minority-led funds. And then there are different resources that entrepreneurs can go to themselves to see which funds may be interested in them. The Venture Capital Journal has about 160 different women-led funds that they run through, talking about their focus, how much they've raised, what kind of stages they're looking for in terms of the companies that they invest in. And then there's the Angel Capital Association for those folks who are accredited investors and want to be angels and really do it on their own, do their due diligence, and figure out what companies might be right for them. That's another way people can invest.
And where are the hot industries that are kind of attracting some of this money for women-led founders and alike?
Femtech, women's health, all of that is very interesting to a lot of female investors right now, and we're seeing a lot of growth there, particularly in women's health.
Sharon Epperson with a big story there. Thank you very much.
Sure.
All right, for more on women funding and investing in women, joining us tomorrow.
We are coming into the 2 o'clock half an hour here. You want to watch out for some manipulation in the market as we come into this 2 o'clock hour. Maybe the bears are not no joy here. We'll keep an eye on it, see if they can get some more downside here or not. So next 7 minutes, you should see a pretty big move coming into the marketplace.
So a bit of a rough setup for the key spring housing season as well. The latest data from ICE is showing inventory deficits worsening to 40% below pre-pandemic levels in January, while new listings saw their largest gap in 6 months, coming in at 24%. Below pre-COVID averages. Home prices, meanwhile, ticked up slightly from the previous month as rates dipped. So joining us now to discuss all of this is Andy Walden, the VP of Enterprise Research over at ICE, tracks a lot of this housing data. Andy, thank you very much for being here with us. Take us through just how promising maybe or not so this spring season could be.
Yeah, I mean, the downside is when you look at that inventory story, you just mentioned the numbers. After seeing 7 consecutive months of growth heading into the year, we took a little bit of a step back in January. Despite that step back, still a little bit more inventory out there in the market than there was at the same time last year. So buyers out there have a little bit more to shop amongst. At the same time, you're seeing interest rates over 0.5% higher than they were at this time last year. So affordability, obviously, a little bit lower, should lead to some lower levels of home price growth, at least this spring when we look at it in comparison to last year's levels.
Is it really just, Andy, only about rates at this point? I mean, I know the supply is an issue and everything else, but it really does feel like if you had to single out one factor that's holding this whole housing market back, it's this idea that nobody wants to transact buying or selling with rates at these levels.
Yeah, and it's true. And we had the inventory issue even before, right? The genesis of the inventory struggle was actually rates being too low, and we overbought the housing market, which pushed us into deficit territory. So it's interest rates that have driven that inventory. It's inventory that's driving the prices. So it's all combined with one another. But absolutely, interest rates are a key factor in the spring buying season.
Do you think as though the activity that you're seeing or not seeing in single-family housing, coupled with what you're seeing or not seeing in multifamily housing, creates a very difficult dynamic for what the market looks like in the next 6, 12, 18, 5 years down the line in America?
Yeah, I mean, absolutely it does, right? You're looking at the buy versus rent comparison out there in the market, and neither one of them is overly attractive. So buyers out there, renters out there, kind of stuck between a rock and a hard place as we move forward. Now, the positive news on multifamily is if you look at new construction, there's a little bit more opportunity there. There's a lot of units under construction, so you may see a little bit of headway there. Single family, not as much opportunity and some deep challenges there.
There's also an interesting point to be brought up about just how far interest rates have to fall before you really start seeing a critical mass buildup of interest. Do you have an idea of the kind of rate that we need to see for not just new home activity or existing home activity to pick up, but also what's going to happen overall with the dynamic and the entirety of housing? Is there a magic number?
I don't think there's a magic number per se. I mean, if you look at what's happened as interest rates have trended higher and lower, you've seen mortgage application volumes trend right along with that, right? So when you look at a 6 3/4 interest rate this year compared to purchase application volumes at a 6 3/4 interest rate last year, they've been very similar. So you're going to incrementally pick up that volume on the demand side on the way down. When you look at supply, there's kind of this magic number thrown out there of 5%. Well, you still have 80% of all mortgage homes that have interest rates below 5%. And so I think you're going to gradually pick up volume on the way down there in terms of sellers. we just haven't seen it trend in the same way, and we haven't seen that hold true yet. So we'll have to see it before we can believe it on the sell side.
Andy, we got just a few seconds left. The metro areas that could be the most opportunity if rates fall.
Well, when you look at what's happening in January of this year, it's the Northeast. That's been the storyline throughout the last 12 to 18 months. The surprising one to me when I look at January was really the West Coast of the United States. Your San Jose's, your San Francisco's, your Sacramento's, Riverside, those types of markets that had really gotten hit hard in 2022. Inventory falling, prices firming up there again, which is an interesting change from what we were seeing last year.
All right. Andy Walton over at ICE with the state of the housing market. Thank you very much, sir.
All right, thank you.
All right. Well, that does it for the exchange. Courtney Reagan is getting ready for Power Lunch. I'll join her on the other side of this quick break. Keep it right here.
Is everywhere.
Welcome to Power Lunch alongside Courtney Reagan. I'm Dominic Chu. Markets right now are lower across the board. You can see right there the Dow Industrial is down roughly 1/4%, 95 points, 38,991. The S&P pretty much flat on the session, 51.35 the last trade there. The Nasdaq Composite off 1/4% as well to 16,241. Apple is a big drag on the averages today, especially with the Nasdaq. The company hit with a nearly $2 billion fine by the European Commission. The EC said that Apple has abusive rules for other streaming music providers, but maybe of bigger concern for investors is the company's perceived slower start to the AI race. We've got much more on that story, Courtney, coming up.
Yeah, but Dom, first we're going to start with Macy's. That stock rallying 15% today as Arkhouse and Brigade Capital raised their offer for the company to $24 a share from $21. Macy's confirms it has received the offer and its board will review it as they did previously. Joining us now for more on the story, Gabrielle Kahane, managing partner at Arkhouse, and our own Leslie Picker is here with us as well. Leslie, why don't you kick this one off for us?
All right, Courtney, thank you so much, and thank you, Gabrielle, for being here. So the
the big news is that you bumped up to a 51% premium to the unaffected stock price from a few months ago, but shares still trading about $3.50 below that price tag. You said in an earlier release that the board was unwilling to engage due to a lack of confidence surrounding financing as well as the purchase price. And I'm wondering if you believe that this newest offer, as well as any developments on financing, have closed the gap there.
Yeah, so firstly, thank you so much for having me, Leslie, Courtney, good to see you both. The company said that they were unwilling to engage with us on financing. I don't know if that's the real reason or not. We can only guess as to the specific reasons that they weren't engaging. In fact, in previous conversations with them with respect to financing, they made it very clear to us that they didn't have any additional questions on our financing. And we hope that the additional information that we've given them, notwithstanding their lack of specific requests, has put to the side any questions now. But to the extent they have any additional questions, we urge them, as we have previously, to please let us know specifically what they would like for us to address. With respect to price, as we stated then when we initially made the offer, we had a high degree of confidence and optimism that we could increase our offer if we were granted access to confirmatory diligence. The company was unwilling to provide us with access to said diligence, but they did release Q4 earnings, and that gave us more information, allowing us to drop some of our conservative assumptions in our underwriting and in turn increase our price to now $24 in cash.
Macy's, for its part, said in a statement that it does not intend to comment further on the Arkhouse and Brigade's revised unsolicited non-binding proposal until the board has completed its review. But kind of going into the financing, you say that Fortress and 1IM have joined as equity capital partners for 50% of the financing. You say you have that, but what about the rest in terms of presumably debt financing that you'll need to get to this purchase price? And how does the $24 a share change the dynamic as it pertains to this financing?
Yeah, so the debt.
I'm with you there, zero day tarot. Like my eyes are bleeding here.
Level of 50%. I think for historic comparable transactions, that is much less financing than typical. And we're pleased that we can kind of give that certainty to shareholders. The debt is coming from money center banks, a number of whom have expressed very strong interest in getting diligence alongside us and moving towards firm commitments and closing with us. With respect to how 24 changes that financing, as mentioned, our ability to come up in our offer was really driven by us being able to shed some of our very conservative assumptions in our underwriting.
Gabrielle, obviously you mentioned that we now know a little bit more about Macy's financial position, given that they did just put out their earnings. But I know a lot of part of the value that you've seen in the retailer when we've spoken previously does have to do with the real estate. As part of the announcement and the strategy under new CEO Tony Spring going forward, they do intend to close about 150 of their stores. That's about 30% of their fleet. So how does that change, if at all, your thesis about the value of the real estate?
Well, hopefully not at all. Hopefully we get to, close on this transaction and to give shareholders that premium long before, the company under its existing leadership moves to close stores. Our plan is not conditioned on store closures. It is not a part fundamentally of our business plan at all. In fact, we think the real estate is so valuable in large part because it's occupied by Macy's.
So then I guess another question, too, is do you really want to run Macy's? If you were successful, would you continue to run it as a retailer, or would you just try to sell off that real estate and get the value therein?
So very much we want to continue running the company. And again, the value of the real estate is really fundamentally driven by its great tenants, which we think can be that much more creditworthy under new leadership. So the two are sort of fundamentally enmeshed with each other. There is a very commensalistic relationship between the real estate and the retailer that sits in it. And we think the real estate can become that much more valuable by putting on these necessary changes on an operational level post privatization in the private markets.
This is making my eyes bleed. Look at SPY right here.
On really fundamental business.
Just grinding.
Markets where it's much
brutal day for SPOOs. Look at that.
Gabrielle,
Oof.
I wonder just if you could take us through what you think Macy's /
looking like a double top up there, though. Some kind of a double top forming on SPY.
After you've hypothetically done this deal 3 to 5 years from now.
Hopefully a whole heck of a lot stronger. Our again, sincere hope is that this is not a sort of going concern for shareholders, but very much that Macy's is a stable and growing company that can live for decades and potentially another.
All right, mute this for a minute here. We're going to take a look at this.
We think that needs to happen.
Let's see if we can switch over here to the full trigger screen. Can we go over there? All right, sweet. All right, so let's take a look here at SPY. I mean, this isn't good, right? I don't like seeing this kind of like just garbage trading. It does show you that there's no demand to go higher. We are just kind of like grinding it out, right? This is the close on Friday, come down to the open this morning, tagged the half-hour trigger, grinding higher, but, I'd still like to buy down here. I'd still like to buy down here, maybe 510. We're just grinding away. I'm gonna go with Tuesday being a down day here, possibly. I think that's what I'm looking for at least. But what it looks like on Qs here, let me show you Qs on a 30-minute basis. I mean, can we just come down a little bit? Can we get down just a little bit more so that we can take this ride up? So 443.66, looking for a dip buy there. Still no joy, right? Still no joy. No hourly trigger. SPY, still no hourly trigger. Still just kind of putting along right now. I mean, can we just get a drop right here? I just wanna like a nice easy drop down here. And buy that nice dip into Wednesday right in there. What's really gonna suck too is you're gonna get that that talk from the talk that always bothers me. Not necessarily bothers me, but the talk that always bugs me is when they do the CNBC does the whole, traders wait, Jerome Powell, they're just hanging out, waiting for Jerome to make a decision at the Senate hearing. Well, I don't know what decision that is, but as soon as that volatility rolls off, what do? We squeeze, right? We just start squeezing up and to the right. Boring day in the markets right now. Please give me some downside. Come on, Bears, you can do it. Get us a real dip to buy. Something, anything. Yeah, I hope we can get something here. If I had to guess, if I wasn't a streamer, I would say go for a bike ride for a few days and come back on Wednesday or Thursday. I mean, talk about an eye bleeder. Over there so you can see it. No joy for the Bears.
A crowded market. Bottom line, you need a store experience that you want to go to, and Macy's has to stand for fashion and excitement.
Oliver, this is sort of a two-part question. As I mentioned with Gabrielle, obviously, the part of the plan going forward over the next 3 years is to close about 150 of Macy's stores that they classify as underperforming. So the first part of the question, I guess, is what is the risk of potentially losing?
I mean, just flush it. Like we need a flush. Someone just said that in the chat. We need to flush this. We need to flush it.
Consumers use both the
please just flush it all down.
And the in-person store as sort of this cohesive, coexisting company. So what?
Yeah, B. Harder said looks ripe for a
looks
ripe for a flash down to me. I'd love to see a flush. Like a big fat like 30-point flush that we can buy.
So do you need more stores? Do you need less stores? How was Kohl's able to operate with 1,100 and Macy's thinks it only needs about 350?
Yeah, Courtney, you bring up great points. And what will happen is the organization needs to recapture these revenues when they choose to close stores. However, this was a problem in the past when they were engaged in closing stores and lost more digital revenue than they assumed. So what's different this time? They've used more data, more traffic data, more consumer studies in terms of which stores they should close in each market area, and each of these market areas has stores already. Furthermore, Courtney, you and I have seen the small format. That's an opportunity too. So part of that is why we moved to the sidelines, the risk factor around recapturing sales when you close stores. Kohl's being off mall is in a stronger position because traffic has been much more robust off mall for Kohl's, and Kohl's has had very good success with Sephora and is on its way to improve product. But both of them do have traffic issues, and traffic's a big risk factor. It's something we'll watch.
All right. Oliver Chen with the trade on Macy's. Thank you very much, sir. We'll see you soon.
My pleasure.
All right, coming up on the show, the NASDAQ slightly lower today, but it's still up nearly 4% just for the month. But one tech giant is not following those gains, and that's Apple, down nearly 7% over that same period. We'll dig into that story coming up next. Welcome back to Power Lunch. Shares of Apple are under pressure after the European Union hit the company with a fine of nearly $2 billion for antitrust violations over its music streaming apps. Apple said it plans to appeal that decision. Now, this comes as Apple CEO Tim Cook is also facing some heat from investors for lagging behind its peers when it comes to AI investing. Here to weigh in on all of this is Gene Munster, managing partner at Deepwater Asset Management. Gene, thank you very much for joining us as always. We always turn to you for all things Apple. So take us through what exactly this all means for Apple and whether or not there is a bull case to be had at current levels for valuation.
Well, what it means for Apple in the near term is investors are voting that they don't have confidence in Apple's AI strategy. And that's understandable, of course, because it's just been over the past couple months that we've heard more about that. And ultimately, when you think about their AI strategy, it really comes down to how are they going to make money on this? And investors now are generally on the same page that this June at WWDC, we're going to see them come out with their first foundation model. As a reminder, this would compete with GPT, it would compete with Gemini, Anthropic, X.AI. This is one of the kind of top 4 or 5, Llama from Meta. Really important that they have that, so that's one piece. Coming out with that model still doesn't answer the fundamental question that investors are asking, again, which is what does this mean for the business? And I'm going to fill in some of those blanks, is that what it means for their business, of course, they will use AI to make better predictive text and add kind of the fit and finish around their hardware and software, like some of the Macs that they've announced today. But more importantly, this is an opportunity that they come out with a subscription for personalized AI. And I think this is one of the big unlocks for consumer value in AI. And essentially, it is a unique place that Apple has because of their role with privacy and security and the trust that they have with consumers. People will be willing to let Apple use their data, opt in, to allow these AI bots to do tasks for them. Contact your utility company, book a trip, compose emails. There's a lot that can be done. And when I think about that opportunity, it comes down to a subscription business. And if you look at their active install base of devices, that's something that they're really clear about. That's 2.2 billion, growing about 8% a year. They don't give out the active user number. I estimate that that's about 1.4 billion. But if 20% of that 1.4 billion would opt in for a $10 a month personalized AI service, so it's going to take a few years to get there, that would add over 15% to Apple's earnings. And so, Dom, when you put all of this together, understandable investors' reaction, but I think investors are forgetting that there are almost 5 billion people that live their lives throughout the day on Apple devices. That stickiness is a huge long-term opportunity for them to sell AI products into.
Gene, I do have a question about this EU fine. I understand it's $2 billion as of now, but that there's a high likelihood that Apple will appeal. Let's say worst case scenario, it doesn't work. They have to pay the $2 billion fine. Was it worth it? I mean, Apple has a pretty big cash pile. Was it worth it for the business perhaps it did get, even if it believes that it got it fair and square, for the revenue that it has acquired in the EU?
So $2 billion, I agree. I think it's probably going to be more like $1 billion after everything is said and done. It'll take a year. It's 3% of their cash at the $2 billion level. I think the bigger question for me is what impact is these type of fines going to have on Apple's App Store revenue globally? And on their last earnings call, they talked about that the App Store in Europe was 7% of total App Store revenue. So that basically equates to 0.5% of Apple's overall revenue. So they knew that this was coming, these changes were coming, that this fine potentially was coming, and they wanted to get in front of investors and remind them how small of a piece that this is. But it does not change the bigger question, is that there will be changes coming to Apple's App Store across the board. And this is probably 40% of Apple's earnings come from services more broadly. And so I think when I think about that dynamic, they'll eventually pay the fine. And what really sticks out, and I've been closely watching what's happened in Canada, the US, South Korea, Japan, the EU in terms of all these changes. Apple is really smart in terms of how they navigate this. They will go and make changes to accommodate the courts, but then they find ways to essentially charge the developers anyway. And I suspect that that will frustrate and infuriate some developers, but at the end of the day, they're building huge businesses off of Apple's backbone. And I think despite their frustrations, they will continue to pay, and Apple will actually maintain better economics for their App Store over the next 5 years than I think what investors are expecting.
Gene, before we let you go, let's talk about the valuation right now. Apple has not participated. It's underperformed. What exactly gets people back into saying that Apple is the place we want to be?
It's got to come down to growth. They got to show something. They got to show something in June that gets people excited that Apple understands the importance of this. and that they have to go beyond just talking about a foundational model and showing it. They got to show investors that we can get growth going. They haven't grown over the past 6 quarters. That needs to change for the stock to start working, and I believe it will.
Gene Munster, thank you very much for joining us on All Things Apple. OPEC Plus extending its voluntary oil output cuts until mid-year. Nat gas climbing nearly 8%. Details further ahead.
Kramer.
Welcome back to Power Lunch, turning attention now to the bond market, which is its eyes focused on the strength of the economy, and a rare treat. We actually get to talk about it with Rick Santelli, but not from the CME Group or SIBO or anywhere else in Chicago, but he's right here. Rick, it's so good to have you on set with us.
I love visiting. It really is a great experience, and everybody is so kind. I'll tell you, the bond market should have such good friends. Because if you look at what's going on with bonds, to me, the story for 2024 is rates are high, and they're going to stay high, in my opinion, despite all the other chatter. Let's look at Atlanta GDP now. Now, maybe it doesn't always give you the exact right clues, but just in 6 days, it's gone from 212 to 3 1/4. That's a huge move since last Tuesday. And if you look at the 5-year break-evens, Dom, they're hovering just under 2.4%, the highest levels going back to November. And the last thing is just a year-to-date of 2s and 10s. So we're hovering right now, what, around 422 and a 10, around 461 and a 2. These are still within 10 basis points of the highs of the year.
So highs of the year, though, but in relative terms, I mean, there's no doubt about it. Those break-evens, everyone else is pricing in kind of like this stickier inflation story that we've gotten more data on in the last few months. But it's still not like we're returning yet to the levels that we saw over the past 2 to 3 years with regard to real inflationary
but
pressure.
That was only a short chapter, and in 10s we got up to 499, never closed above 5%. And I understand. So we're about 0.75% maybe away from that point. But when you think about all the moving parts here, I think, to me, what we're underestimating is the fact that just because it shot up to $4.99, the variables then were a scramble, okay? And it happened fast and it disappeared. But I think over time, we're going to do that move again. But we're not going to do it as a scramble. We're going to do it as a slow, steady climb. And I think that the moving parts here are, we could talk about inflation moderating, but inflated prices aren't. And the public gets that better than anybody, and the public understands debt.
But okay, so if that's the case, was it better? Prices are high. The prices are slowly moving higher. That's the whole idea.
Right,
that the
they're
inflation
slowly
story is there.
moving higher.
Would it be better or worse if we had outright deflation in terms of the economic picture? Because that would get our prices back to where they were, say, 2 years ago or 3 years ago. But is that what we want?
Well, I think it's what everybody I talk to wants. They want the 21% prices down that they were pre-COVID. But if you're a Fed or you own buildings or real estate, let's be honest here, that countries that have terrible debt problems always like inflation. The old saying was either grow your way out of it or inflate your way out of it, because deflationary pressures in an over-debt burdened society never turn out well either.
Very interesting stuff. Rick, come back.
Absolutely.
Don't be a stranger.
Absolutely.
We got a seat right here for you.
Keep it warm.
For now, let's get over to Bertha Coombs for a CNBC News update.
Hey, Court. Former President Donald Trump held a press conference this afternoon to applaud the Supreme Court for ruling that he cannot be removed from state ballots.
I think it will go a long way toward bringing our country together, which our country needs.
The outcome ends efforts in Colorado, Illinois, Maine, and elsewhere to kick Trump off the ballot by claiming that he violated the 14th Amendment leading up to the January 6th attack on the Capitol. The court ruled only Congress, not states, can invoke that provision. In a world first, France enshrined the right to abortion in its constitution today. An overwhelming majority of lawmakers approved the measure in a special joint vote of the two houses of parliament at the Palace of Versailles. And Philadelphia Stars center Jason Kelce announcing his retirement from the NFL today after spending 13 seasons with the Eagles. The seven-time All-Pro and Super Bowl champ shared the decision in an emotional press conference this afternoon following months of speculation about his next move. So I guess Mama Kelce won't have to choose between the Eagles and the Chiefs anymore.
I guess not. She can load up on the red. Thank you very much, Bertha. Appreciate it. Well, as we head to break, a quick power check. On the positive side, HPE, I should say, having its best day in about a year. On the negative side, though, TES down 6%. This due to some reports of a huge plunge in China's shipments. That is your power check for Tesla and Hewlett-Packard Enterprises. We'll be right back.
NYMEX diesel April futures settle at $2.64 a gallon. NYMEX gasoline April futures settle at $2.58 a gallon. NYMEX natural gas April futures settle at $1.91, and NYMEX WTI crude April futures settle at $78.74 a barrel. That's down $1.23 or 1.54%.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%.
Trial.
All right, welcome back to the show. The major averages are lower today after the NASDAQ and the S&P closed at record highs on Friday, but just marginally so. Our next guest sees a couple of bullish signs for the market, including projected double-digit earnings growth this year and a broadening of the market beyond just, of course, big technology. Stephanie Link is the Chief Investment Strategist and Portfolio Manager at Hightower. She's also, of course, a CNBC contributor. Steph, thank you so much for being here with us. Let's talk about whether or not this story needs to see broadening out, or whether it could be just like last year when the Mag 7 did all the heavy lifting.
Well, I hope it's not that last year, and I'm actually encouraged by what we've seen this year so far. We've had 16 of the last 18 weeks have been up. We haven't seen that, Dom, since 1971. I bet you weren't even born. So we are, though, seeing a difference in this year versus last year. This year, we are starting to see other parts of the market doing better. And it actually started in October, and then it continued in the beginning of the year, then it reversed. And then we saw Mag 7 again. So I think it's kind of healthy to see just this gradually happening. So it's not over for tech. Oh, my goodness, look at the semiconductors every day. They go up. But it's also other areas, like IWM was up 3% last week. Let's see if that continues. That's interesting. Crypto, also very interesting to me. Banks, and in general, financials, energy, industrials. And so I think a lot of that, though, is because we have seen better economic data, and the economically sensitive sectors should do well based on the better data. We're growing at about 3% in GDP. Consumption is about 3%. You're starting to see pockets of manufacturing do well from all the infrastructure spending. And so that kind of add it all up, and it's good for earnings.
Oh, what's going on? Tesla, baby.
But for all of these other sectors.
Give me that squeeze, Tesla.
What companies do benefit in that kind of environment? You mentioned a lot of potential catalysts, a lot of macro tailwinds. Where are the picks to be had out there, given that kind of a narrative, that kind of a story?
Yeah, so within industrials, I am overweight industrials, and I own a ton of them. But one that doesn't get talked a lot about, but it's a really well-run company, is Eaton Corp. And, of course, they're going to benefit from all this infrastructure spend, $2 trillion that we passed last year. That's actually flowing into...
Hey, just checking in right now. I was taking a look at Apple down at S4, S5. Tesla down at S4, S5. Google down at S4, S5. Apple looks really bad on the daily. It's got a double top on it, at least on the daily time frame. But still, I'm looking at this stuff and I'm like, yeah, I'm finding this hard to believe that you're not going to get a rip out of this stuff, or dip buyers aren't going to step in on this stuff. I'm finding it really, really hard to believe here.
See if it's weak.
Tesla looking like it wants to turn around, or excuse me, Apple looking like it wants to turn around on a 30-minute basis. Let's take a look at Tesla on a 30-minute basis.
They do.
Oh, that is.
Whoa, what's that right there, baby?
Stephanie, and
buyers stepping in right now on a 30-minute basis.
And that sort of piqued my interest.
Look at that down there. You got buying, buying, buying. They've been buying this since 12:30, so it's 2:30 in the afternoon right now. We're going to find out if Tesla actually comes back.
If you were interested,
I'm finding it. I was just on the phone with a buddy, and I'm like,
play that and why? I want to hear more.
Well,
I was just on a phone call with a buddy of mine, and I was like, 8% in a day on Tesla. Are we squeezing SPY right now? Where's SPY going? Up? Woohoo! I'm just talking to a buddy of mine. I just got on the phone with a buddy of mine, and I'm like, what are you? You're telling me Tesla's going to be down? I want to talk to you guys about something really quick here, okay? Old man-y thing. I want to talk to you guys about something, okay? We have a little chat. We have an indicator. We have an indicator on our website. If you're a supporter, okay? So we're trying to make what we do here more sustainable. We've always been a free service, right? Everything we do is free, and we're trying to make what we do sustainable. And so we're trying to bring in people, keep people interested, keep the people that are smart interested, David AMS's, Trader Podcasts, people like that. John L., right? All these people that we need to keep around. We've got to keep around the developers. We want to do more too. So we soft launched our website recently, this past week. And at the supporter level, you get an indicator from us. First, you get charts, interactive charts with the triggers on it. But we also give you an indicator for pivots. And what's really special about that indicator is whenever we get a 2 sigma move against a stock or for a stock, doesn't matter if it's going up or it doesn't matter if it's going down. Up or down doesn't matter.
P500.
When you get into that S4, S5, or you get into that R4 and R5 range in one day, okay, so if you've got that indicator at home, you're using it, whenever you see an outsized move on a daily basis, up or down, the probability of you buying a put with like a week on it, or at a top, or a call with a week on it, and let's say we're at S4, S5, the probability of that printing for you is fucking stupid. Sorry to say it like that, but it's fucking stupid. Like, you should. So if you have that tool at home, right, whenever you see a stock hit that S4, S5 in a day, right, that same day, I want you to go back in a week and check that stock again. Those moves are very rare. They're like 10% or less of the time when you see a move like that, and then you'll see a reversal from that move. Now, there's times when it won't work, right? If you have an ER or something like that, or an event or something like that happens, the fucking the plane door falls off, the BA, the Boeing airplane, stuff like that. It's not gonna work, but it does work for bullshit news. Now, I know that some news came out today about, I saw someone asking about the Elon Musk wanting the stock cheaper and all that shit. That's all bullshit. The only real news today that's serious about Tesla was 20% down on China sales. That's real. Dropping the price of the car, that's real. But think about that. You're down 8% in a day. Are you telling me that we're going to be down 30% on that news in 3 days? I doubt it. Do I think we're still going to $80? Yes, I do. Do I think we go there in a straight line? Fuck no. So when you see these outsized moves, and this is any ticker out there is my point. If you see a ticker that's like blasting down a couple sigma moves, you buy that every time. If you see it go up, an unexpected upside move, that thing's coming back down too. So if you have that indicator at home, and you see a stock that's going down like that, like Google, I mean, I'm just on the phone with my buddy, and I'm like, dude, Google's down huge, Apple's down huge. You're telling me Tesla's down huge. You're telling me nobody's gonna step in and buy on those big downside moves? I find that hard to believe, unless maybe the market's correcting right now or crashing, and we don't know about it. Maybe there's an under the covers correction going on. And look at SPY right now, blasting north, just ripping through shorts right now. SPOO's trading 513.74. Q's coming back for the attack. Tesla now down underneath 7%. They were up they're as down as much as 8%, getting back 1% just then. Apple getting the bounce as well. Google with a bounce as well. All kinds of bouncing going on around here. Were you long or not? I want to know. What were you? What were you doing? Were you trying to buy a dip or no? 200C is now trading $2.32. Kind of happy right now. Hell yeah, Dr. Gone says, I've been long Apple all day long, baby. I was hoping for a pullback on SPY. I was like, can you just drop it a little bit to the hourly trigger so I can jump on a call? And they're like, no, we're just going to grind it sideways, and then we're going to push all these bears out twice today. Twice. No joy for bears, right? They tried once over here, right over here. They tried it once right here. Tried it right there, and they got squeezed out. Tried it again. Tried it again today, right there. And what'd they do over there? No joy for bears. Where do we go when that happens? You only get so many chances, right? What do you get? 2 chances? What do you think? You're just going to be there doing it all day long? We're going to throw it down again and again? You're going to get squeezed. And that's what's happening right now. Squeezing us up to R1. Target 514.57. Still no weekly or still no hourly buy, though. We didn't get the HT buy on SPOOs.
The S&P 500
And they were blooding some big tickers
record high.
earlier today. They were blooding big drivers of the S&P 500 NQs. They were blooding Apple. They were blooding Google. They blooded everything basically except for NVDA, right? Something like that. Woo! Woo-wee! Yeah, so first time you ever bought Tesla on S5? I mean, you get some kind of move like that, and I'm like, no, get out of my face. Like, you get an S5 or something like that? Sorry. Not bullshit news, but it's not a bad ER or anything. It's not like they didn't meet expectations. Big outsized down moves for some of these tickers today. Hopefully you got in on some of them. Maybe you got in on Apple or you got in on Google or Tesla. Nice, huge moves right now. Keep your eyes down below here. I'm going to show you something really quick, okay? We're going to switch over to the bottom right-hand screen. So let's keep an eye on this morning or this afternoon. This is SPX Gamma, right? You have some resistance above at 51.50. You get the night. Wait a minute here. Get some wonkiness going on. See that arrow that we drew in this morning, right? See that arrow right there? Just note that these bears are going to want to step in here and pound this down, right? Get down there. They're all angry up in here. So just be aware of that as we squeeze up on SPOOs, that you take some of that profit on SPX as we get, or on SPY or whatever you're trading. SPX or ES futures, there are sellers where that yellow line is. Does that mean we can't get above it? Nope. It means we can still go higher. We are developing the market to the upside and not the downside. You want to take a peek right here. There's a glass floor down below. It's right down here, right? It just keeps moving up, marching higher and higher and higher. You see the glass floor down here? No puts in the market, right? Or no put gamma in the market. I should rephrase how I make that statement, but there's no put gamma down here. Which is risky, but watch as we come up here because we are developing, even though this is local resistance, we are developing more call gamma to the upside. This acts as an attractor, right? Look at all that gamma up there, 5,300 right now, 5,300 upside targets on S&P 500. So looking pretty good there for SPX. Let's see if we can break above right now if they try to reject us down from this 51.50. We are coming into contact with it right as we speak right now. And if you look over here on SPY, you can see this is roughly it right here, right? This is right where that gamma is, trying to sell you down off of this. New high on SPY, baby. Woohoo! Congratulations out there, bulls. You got another high. Hood's being crazy. Let's take a look at Hood. I'll bring it up down below. BA's not doing too much. Looks like they closed their investigation into BA today. Haven't seen anything moving yet on that ticker. I'll look at Hood for you. If you have any tickers you want me to keep going down below, let me know. I want you guys to know that if you guys are ever like, hey, can you put the Hood chart up for the next half an hour, next 3 hours? I'm going to trade on it. Don't ever hesitate to ask for that to take place. Like, we're going to look at Hood really quick. Let's put some stuff down on Hood. Triggers. How about that indicator? Where's that pivot indicator? Invite only scripts. Trade the trigger pivots. We'll put that on there. Oh yeah, I like Hood here. I like Hood here, definitely. I like Hood here. Let's take a look at the resistance levels on the upside. R4, R5. We're going to go with traditional pivots. We'll do an offset of 50. Yeah, I like the consolidation on Hood. Upside targets 1691. And 1722. Woo! As long as you stay above the hourly trigger at 1661, you are on trend to go to the upside. There's Hood for you. I'll leave this up for the day. So there is Hood. Let's take a look. As long as you stay above 1661, target to the upside, $17.22. There you go. Yeah, all right, I'll talk to you about it. So I'm getting some questions here. So here's the deal. We always wanted to be a free service. We had some issues. We had a free Discord, right? And because it was open and free, we attracted financial scammers. We attracted fucking wolves. We attracted all kinds of nonsense, bots, people like impersonating me, all kinds of crazy shit going on, right? So we were like, well, we're going to take this private. And then we're doing some development that was costing an arm and a fucking leg. Sorry. Costing an arm and a leg. So the idea here would be that we said what we'll do is this: people that want to always remain free, we're going to allow them to do that. We're going to give the opportunity to people that want more to pay to help support what we're doing around here, right? So if you've always known us as a free member, this is the steps, okay? You still get your levels every day. You actually get them improved. I used to post 9 levels, I think 9 or 12 levels in the morning at Captain's Alpha. Now we give you the levels for the entire market every morning on the front page of our website, tradethetrigger.com. So you get better now for free. It's right on the front page of our website. You can go there and any ticker that you like and find your levels. Any ticker in the market. You still get the live stream for free. You can still chat for free if you go to Amazon Prime Gaming and subscribe via Twitch. So there's a way for you to consume all of this for free still forever. Okay? Now, if you were like, well, I want more Captain, right? We originally were we did a bunch of developments and we couldn't launch with a cheap membership. And we fought over this, not fought with each other, but like fought to get a $30 membership, I think we're at 32 right now. But we were able to get something for $32, which is awesome sauce. And what you get with that is you get for $32, I think it's $32, right? For the whole year, and that's on a yearly rate. But what you get for that, let me go through everything right now, okay, with you out there. Let me go through everything that you get with that. Make sure I'm not telling you shit that's not true. So I'm going to make sure I get this correct. Now, so for our beta launch, and this is the other side of it too, the money that's coming in, our plan here is to develop a charting system on our website that is similar to what you see on TradingView. A whole charting thing, right? With the triggers and all that stuff on an embedded chart that's fully functional on our website. We don't have that right now. The cost and time that it's taking us to do that is longer than I expected. So, with our beta launch for I think it's $32 or something like that. You get 1 free month or something if you sign up for the year. You get market updates from me whenever required. So I'll give you every morning. Not every morning, but whenever it's invalid or valid, I will do a market update for you on SPY and on QQQ. You then get trigger charts. These are private trigger charts with triggers and velocity. For I think right now we're doing 12 tickers. We update those twice a day. Okay, this is for the $32 level. So if you're like, hey, I trade Tesla, I trade SPY or Qs, you can go at least check where the triggers are, where velocity is on a 30-minute time frame, and we update those twice a day for you. Then you get access to the T3 scanner. Now, we've gone over that T3 scanner on this stream already, right? I've picked stock tickers for you with that scanner. If you're every morning, if you're looking for a pick for a stock pick, that scanner is there for you. Next thing that you get is access to our Discord. Now, in our Discord, it's booming right now as well. Discord is awesome right now. But it's the cool part about the Discord to me. The one thing that really catches my fancy is that we have premium bots in there. So we've got the TradyTix premium bot, TradyTix alert premium alerts. We've got Unusual Whales premium bot in there. We've got the BB bot, and I think another one, or the one's in development right now that's coming in. You also get Twitch chat access at that $32 level, and then you get the daily pivot indicator, and then you get access to the T3 educational videos, which should have launched today. Today or yesterday, I think they launched. That's all for that $300 a year. I think that price, $382 for a year. Yeah, I think if you're a community member with us, if you're spending your time with us, you're spending your time, you want to support what we do. Like I sit here with you guys all day long, year round. You guys are going to also get more streaming out of this because we now have a tiered membership. You're not going to see Jim James going, all right, I'm going on vacation for 3 weeks. You might see me go on vacation, but you're not going to see like lags in the show and all that kind of stuff. So I think if you want to support what we're doing, that's the way to do it, is sign up for a membership. It's $35 a month or $32, I believe, for the year. Might be 30 or something. I don't know exactly what it is, but you do get one free month. Now, if you want the Trigger Suite, right? If you want that Pro Trader where you get your own standalone triggers and you don't need to be watching the stream all day long, you don't need to be checking in, we have a Pro Trader level. What that opens up is a premium Discord with direct access to the Trade the Trigger team. So if you want to sit down and talk to me, you want to sit down and talk with David AMS, you want to sit down and talk with Trader Podcast or with John L., you want to talk to E-Trading Shorts, anybody, right? You can get one-on-one conversations with those people, 24-hour support in that premium Discord, 24-hour, or we also have exclusive channels in there, education stuff, all that kind of stuff. Then you get the T3 Indicator Suite as well. That's where you can just take the velocity and triggers and go and do your own thing. You also get pro updates. So every day I go in and I post. You have market updates for the supporter level, and then I also post pro updates. You get exclusive market updates, forecast charts. You get gamma from me, all kinds of cool stuff. I give a bunch of Elliott Wave charts on there as well. So I do Elliott Wave for you every day. And then the weekends I do an outlook with a day chart way out in time where I think the market is going. You also get a premium T3 scanner and AI scanner, but you get like 4 more buttons for shorting stocks. You also get some not buy stocks, but start watching stocks that are just starting to turn up. You also get what else do you get there? And I think that's it. I think that's all of it. So yeah, thanks for asking. I appreciate it. If you don't ever want to join up or sign up or support the community, that's fine too. You just keep doing what you're doing. I do appreciate you showing up here. Not everybody has a ton of money. I understand that. So the one thing I would say to you would be this. If you're like, hey, Cap, I'm poor. Cap, all I do is lose money. Or Cap, you know what? I don't ever pay anybody for anything. As long as it's free, though, I'll keep doing it, right? I'll tell you this. If you're a free member out there, right, there are a ton of people, right, that have joined. Those people are also going to help you out. So don't hesitate to reach out here and say to somebody, hey, do you have a trigger chart on this ticker? Or what do you think of that ticker? Or what are you guys talking about? I want this synergy, I guess, or the, when you have like 100 people all looking at this stuff, someone's bound to find some great trades. So don't hesitate to be asking each other, hey, can you help me out with this? Can you help me out with that? Or whatever. Even if you don't have access to that stuff, you guys should be helping each other. You guys are a community. That's who we are, right? We're retail for retail. So that was the whole gist of what we're doing here is retail traders trying to help each other out. So don't hesitate to ask each other out, even in the chat or Be like, hey, man, what's your DM or what's your email address? Or, you know what, I can't afford to be in the Discord. Do you have a Discord handle we can DM each other? You know, we have enough to fight out there, right? We're fighting, who? Everybody. Big banks, hedge funds, the Fed's watching us. You guys know that, right? The Fed's watching us now, right? You got big banks saying that they're watching us. Nobody is on your side. You've got you got order flow fucking sellers out there bullshitting everywhere. It's just nonstop. You got Bloomberg lying to you. You got CNBC lying to you. You got social media lying to you. So help each other out, I guess, my point here. Take care of each other. You're retailers. That's the job. You have enough against you already as it is. It's okay for you to help each other out. We got SPX still slamming on the door. We got Tesla now down only 6.69%, baby. How do you like that Tesla? Not so bad, is it? Do you like Tesla now? Let me know. You didn't like it earlier. Do you like it now? Apple coming back right now. Woohoo! Where's Joe Donut? I was like, you buying these calls with me or what, Joe? He's making money right now. He's up. Let me call Joe and find out if he's okay. Let me call Joe and find out. Oh, what's that? Look at what I got right here. I got hold on, what is being told to me right now? I gotta cover that up so you can't see it. I got Joe Donut that's screaming at me in Discord, screaming Tesla right now. Fuck yeah, baby. Run it. Tesla's looking better now. We got SPY banging on the door. SPX resistance, local resistance, just intraday resistance. You got the bears up here trying to throw down big boulders. They want to short everything right now. Anger from the bears today. Anger, rage from the bears, squeezing higher. Hold on, I gotta call Joe and see if he's all right. Let me see if I can get Joe on the phone. I don't know if he's gonna answer or not. Let me see. Let me ask him if he's taking calls right now. Hold on a second. We'll check with Joe Donut and see what he's doing. Any guys know Joe Donut out there? He's on the Discord. You can go in there and say hi to him. Let's see if he's gonna take a call. Let me ask him real quick. Joe, you taking calls? Let's see if he says yes to a Discord call. I just want to ask him. I just want to ask how's your Tesla doing? How is your Tesla calls doing right now? Hell yeah. He's probably pretty happy. I always love this down here. Look at that, gorgeous. This is the green, the two green lines down here in Google. This is that whole zone. It's a gorgeous thing when this happens. You can get down here and buy some calls. On the upside, sell that ticker as well when you see us on the two red. So like right up here, if Google ever comes up on an intraday basis, like this R4, R5, great place to sell. On the opposite side of that trade. Woohoo! Nope, no answer from Joe. I didn't get a response. He's probably ducking me right now. Oh, he did text me Tesla with a bunch of exclamation points, but it doesn't look like we're gonna get Joe on the show right now. Probably get yelled at by his wife or something, or people in his office. What do you got? I'm trying to read what you guys are saying. Trader Moxie, what are you saying, brother? Are you buying puts right here? What am I saying here? Puts coming out across the tape. Trader Moxie right now saying, anyone else seeing a ton of SPX puts coming in across the tape for June? Let me check in the Discord. I'll ask right now. Let me check in the Discord and see what they're saying. Trader Moxie, I'll check in the Discord, brother, for you. Let me go look at, let me see if I see anything in the Discord. Anyone seeing June SPX puts coming out? June SPX puts coming across the tape? Puts coming across the tape. I will ask the Discord. Let me read what some of the Discord people are saying right now. Mr. Patel saying 520Cs are dirt cheap, 3 cents for tomorrow. Let me know what you think. Quick end of day dealer exposure update heading into tomorrow. Career low, dropping some bombs in here right now. As of now, exposures change at any time. It looks like the SPX would find some strong support, breaking above 5150. That overlaps with ES at 4160. SPY has a nice gap up to 520 tomorrow, but that could get filled in overnight once positioning is adjusted. QQQ, some resistance up to 448 as of right now. That was career low inside the Discord, dropping some bombs. I'll see if can I show you guys this? Hang tighter. I'll show you guys this. You guys want to see this right here? This is career low hanging out inside the Discord. He writes, quick end of day dealer exposure update heading into tomorrow. And he's saying, as of right now, exposures change at any time. It looks like SPX would find some strong support, breaking above 5150. That overlaps with ES at 5160 overnight. SPY has a nice gap up. I'm going to put a big fire thing on there. SPY has a nice gap up to 5200 tomorrow, but that could get filled to an overnight once positioning is adjusted. QQQs, some resistance up to 448 as of right now. So that's coming from our Discord. Let me take a look right now at the, here, why don't we do this? Why don't we check, we'll go back and do this. How about this? We'll do my screen again. And we're going to check out, what do we got in here? This is the Unusual Wills bot. Hold on here. Trady Ticks query bot. We got the bullseye. Let's check down here for the Trady Ticks bullseye. I see Futu, Mara. I don't see any SPX in here. At 10:32 a.m., Apple. Woof. Woo-wee. Someone bought calls for Apple. Expiration of 3/8. What else do we have in here? Golden sweeps. Let's see if we see any SPX puts in here. Golden sweep. NVDA 870 for March 8th. $1.13 million put golden sweep. I'm seeing option sweeps, though, on call sweeps on NVDA, so some counter. This might be a bigger part of a larger trade in here because I'm seeing some calls as well. 2 calls. That looks like a what do you call it? A bull ratio spread to me, if there ever was one. Still more calls coming in on NVDA. Looks like that guy's going to get run over. What else do I see in here? I don't see any SPX stuff in here. This is much later. These are all analyst ratings. Trady Ticks insights. Insider selling on DVA, ALSN, ATKR. So nothing there. This is all crypto stuff. And I believe this is this is one of the bots down here. Large put sweep order on Okta, CLF puts, SOXL calls, NVDA calls, NVDA calls, NVDA calls, just NVDA all day long. We want to get up above 5150. Get on up there. Give me some support up there at 5150. Ice Cream God King saying that I want to buy some SMLR for ER tomorrow. Chart looks good, great, but I don't know shit about the company. Laugh my ass. At least you're honest about it. At least you're not going on CNBC saying that you know something about a company, right? You guys remember when that shit happened on CNBC? What do you know about that company? Not a goddamn thing. I just wanted to go burr. SMLR. SMLR. We'll take a look at it right now. SMLR. Let's take a look at it. SMLR. Oh, wait a minute here. Where's that SMLR? It's up. Ooh, it looks really good here. SMLR is gorgeous, man. Absolutely stunning. You just had a daily cross of the monthly trigger. That's fucking extremely bullish, by the way. I don't know if you know that, but that's extremely bullish. This whole chart looks gorgeous, man. Good call out on that. Who called that ticker out? Who called that ticker out? Who called out SMLR? Who was that? Damon Garris 75 says, please, Lord, slam this market down to the depths of hell. I'm sorry, Damon. Sorry, bro. You got to be pissed right now, man. Should I do that once a day? How about this? I don't know who brought up SMLR, but whoever did, it's a gorgeous ticket, man. The whole thing is beautiful. It's just getting positive right now. You got a daily cross of the monthly trigger. Once that weekly comes up, dude, it's gonna moon. Good shout out. We'll continue to watch that ticker. Nice, good job, dude. That's a beautiful ticker. Absolutely stunning. It's a beautiful, beautiful ticker. It looks beautiful. I love it. You guys, how about this? You guys gotta remind me, or I gotta on slow days like today. We should spend some time looking at the scanner, and we should also check out the TradyTix bot. Like once a day, just stop in, see where the flows are, that kind of stuff. You got to remind me. You got to be like, hey, Cap, can you pop in and check the TradyTix bot? And I'll do it for you. Yeah, that SMLR is beautiful. That ticker is gorgeous. Like beautiful. You should take a snip of that ticker and show it to people on social media. That thing is gangster. It looks beautiful. There's Google for you. Tesla now down only 6.5%. They had a low of 8% earlier today. Gold trying to make its way up north. It's consolidating right now. The one good thing, if I had to say anything to say about gold right here, if you're a gold bug out there, what I hate about gold, or not hate, is whenever you see sellers come in violently, you know the run is over. Right now, that hasn't happened, so I have higher expectations for gold here right now. So I'm not seeing any huge sell pressure on it. Even though it's consolidating, normally like gold, when it's done in its run, it's like big old fucking red bar and you're done. SPY squeezing right now, trying to get above to 514.57 right now. We're going to set some bears off here. They're going to be pissed. They're not going to be happy, guarantee it. Angry bears today. Yeah, we've got someone in the chat was saying earlier they were pretty upset that the market's going up right now. Tesla checking a 1 in 5 minute cross right now. If you look down below, you can see the 1 in 5 minute cross. This cross, if it's successful, look down here. You see the 1 in 5 minute cross. If that back test is successful, you're going to have an upside target first of 190.60 and then 193.23. Ultimately, I'm looking for at least 194 on Tesla, and then you've got the 197 on the hourly trigger on Tesla. So some big reversals going on right now in big tech. Oh, SMLR is not optionable. That sucks. That ticker looks beautiful. Any down in that ticker, I'd be a buyer. I'd be setting some alerts down below, Bork. If you see any like weakness in that ticker, it's gorgeous right now. Its whole setup is beautiful. You think we hit R2 for SPY? So we've got R1 sitting at 514.57. R2, whew, 516.30. 516.30 on SPOOs. That would really put the hurt on, wouldn't it? I bet you, I gotta tell you, I'm pretty sure that there are some really pissed off sellers right now. There's got to be. There's got to be. there's got to be some angry sellers right now. This is where when you're like short the market and you're now upside down and you're like, oh shit. This is where you pace the back alleyways and you pace your neighborhood at nighttime. Should I just close here or should I just wait till morning? Any tips on those SMLR alerts? So that alert, someone was telling me, okay, you guys want to see the, you guys want to see it? I'll show it to you. Well, I'll show you guys. Hold on. So this comes from our website, okay? I'll take you there. So give me a second here. So this is, let me go to my screen here. So this is our website. It's tradethetrigger.com. Easy to get to. This is where you get your levels every morning. You just, on the left-hand side here, you just type in the ticker that you want the levels for, and it'll populate a chart for you. So on our dashboard over here on the right-hand side, we're going to click on the T3 scanner down here. It's going to open itself up in a new window. And over here on the left-hand side, you can hit the AI scanner. Let me see if I can mute this for you so you can see it all. Bam. So right here, you can click the AI scanner. Right now, it's returning two tickers, APP and LLAP. Then we have a squeeze scanner. And then we've got a watch scanner. This is stuff that's just developing. It's not quite there yet, right? See how you've got some nice consolidation down here in ALE, but it isn't moving higher yet, though, right? What I like to do is I use this scanner and then I check it against the triggers. So I'll first look at a ticker, and we'll look at just like we just looked at SMLR. I want to see what it looks like on the triggers as well. Then we have short-term shorts. If you're a bear out there, we have short-term shorts and short and mid-term, long-term shorts. So even this one right here, just take a look right now. This is AETH, right? So this is something for you to watch, right? AETH. So if you're looking for something to start rolling over and get underneath the 20-day moving average, the 50-day moving average, any of that kind of stuff. Looking for something that's a little overbought, a little toppy. If you're a bear, we do have trades for you. What I like about that scanner, if I had to say anything about that scanner, hold on, let me go back to that Captain screen. So if I had one thing to say about that scanner, right? Let me go back really quick here and unmute that chat. If I had one thing to say about that scanner, what I like about the most is I feel like I used to pay for data, right? Like flow and stuff like that, or I'd pay for, I don't know, just too much information I would get. Like at some of these sites I'd go to, I'd be like, fuck, there's so much shit coming across right now that what's really the good trade? Like, is there a good trade out there or not? So I wanted it more refined. And you know who did a good job at that? Was Flow Algo. I always felt like if I looked at other people, like if I looked at Flow, I used to buy Flow from different places, and I'd be like, fuck, that's just too much shit going on. I finally found Flow Algo, and they were more directed, right? Like, this is the flow you need to be paying attention to kind of stuff. And that scanner reminds me of that as well. The other thing, too, is any of these tickers that you do use the scanner for, do your research on them. Do your due diligence on them. I'm going to tell you that scanner does not return shitcos. It does not return companies that are pumping some shit that's not real. Like, oh, we're going to build something in 10 years. We need money. None of that shit. These guys, normally these companies are making something already tangible with good year-over-year sales. They have great ERs, great guidances. They're selling something tangible. So the fundamentals in these companies are outstanding as well. You don't feel terrible owning them. Oh yeah, you guys want to see how you get it? Hold on a second here. We'll do a quick little segment on how to use the indicator. We'll do a quick little segment on it. So on the indicator, right, your levels, bottom right-hand screen. Okay, we'll do that together. So on Tesla, okay? So here's Tesla. And I'll put these on the screen, then I take them off, right? I put them on and off whenever I want them, whenever I need them. Normally what I'll do is I won't put, so here's the pivots, right? Down here, I normally won't show R4, R5, S4, or S5. So I'm unchecking them right now, okay? Now, if we break below S3, I'll then show them. I'll then populate S4, S5. Or if we're going up, I'll then populate R4, R5, but only when we go above. You can then choose the label offset. Right now, it's set to 50. And what that does is it sets your, see this right here? All this information box, it pushes it to the right. The more that you increase the number. So here, we'll do this one together. I'll give you an example here. So, oh, wait a minute here. Let's go back to Tesla. So right here, right, the offset will make it 100. Right, click OK. And you'll see the offset move over a little bit, right? You can also pick Fibonacci or traditional. I tend to go with traditional pivots, but some people like Fibonacci retracements better or extensions, and you can always go with Fibonacci levels or traditional. You have your choice. So there it is right there. That's how you find them, man. You go into this little cog wheel up here. Follow my ticker up here. Just get your cog wheel going, and you can start making, you can adjust them however you like, however you see fit. Good question. Good question. You guys have great questions today. You guys are keeping me busy finally. Hold my hand for the next hour, please. I got you, Captain Shashonsky, brother. Oh yeah, baby. You guys want to see? You guys want to see the market updates from today? You guys want to know if you should sign up or not? You want to see it? Here, let's take a look at the. So I posted these. Let's just look together. So let me see here. You guys want to know if you should make a decision or not? Hold on a second. I gotcha. So here's my screen right here. This is the market update from Sunday. This is the QQQ market update for March 4th. We posted this last night. And we've got a pullback down here, right? And then we got this nice big push up to 448, another pullback over here, and then a push to 450. So there's the QQQ's market update. Let's see if we can check out SPY. This is the SPY market update, right? Pull back today, then up, right? We're trading 514, some bouncing around, and eventually we're getting up to 518 and 520. Right, so that was from yesterday. So bullish, right? Find a dip to buy, or find a place to buy a dip and look for that 520. So some of you guys are out there already know that I think we're going up to 518, 520 heading into the rest of the week. What are we trading right now? 514. We're already halfway there. I try to be conservative. I'm like, we'll make the dip down on the hourly trigger. We're not even making it. We're just hitting the half hour and we're ripping right off of it. Woohoo! That's right. Resilient market, baby. Google, Apple, Tesla down, and we are flat. Absolutely. Good eyes on that. That's what I was talking to Joe about. I was like, dude, if you got an 8% down day in some of these tickers, you buy that fucking thing every time. Like Google down 8% or whatever. Tesla was down 8%. Google was dead, got blooded as well. They murked Apple. Like you got to buy those dips. Got to. I need to see price. Now that doesn't say that. That doesn't mean you shouldn't. Be wary. It means more like, is SPY trading below its hourly trigger? No. Have we rejected the hourly trigger? No. Like on SPOOs or Qs. If we do that, I'd be like, yeah, fuck that. We're not buying Tesla. We're not buying Google. We're not buying any of these things that have just gotten murked. But as of right now, we're not below that. So we're not in that stance of selling it, are we? We're not below the hourly trigger. Let me show you guys something here. One quick second here. Can I do this down below? Let me show you guys something cool. So let me give you the explanation behind, like, are we bullish? Are we bearish? And you can look at any, well, I don't have to show you. If you're at, how about this? If you have the triggers, right? If you're a pro trader with us and you have the triggers, just look at price when it's under the hourly trigger or above the hourly trigger. If price is above the hourly trigger, we're going up for a sustained amount of time. If price is below that hourly trigger, you change to that bear stance, right? Where I'm that seller there. When you see the rejection on that hourly trigger too, they'll tee off on it. They'll tee off on the hourly trigger. They'll tee off on the half-hour trigger. In the beginning on the half-hour trigger, and then less and less aggressive as we go lower and lower. So you can tell when we're bullish or bearish on a ticker just by price above the hourly or below the hourly trigger, at least on a 1 to 5 day basis. OCEA saying that there's a squeeze right now. SPY calls or Tesla calls now trading $2.52. Tesla now only down 6.25, 6.4. I bought Tesla twice. I bought Tesla twice. I had to buy it twice. I DCA'd. I did DCA on an S5. I did have to DCA on that trade, but I've got it for the 18th, so I'm like, yeah, I'll just hang on to these fucking things. I'm not looking to sell. I want to sell like way higher, so I don't even know if I'm going to sell them at 200. I want to sell them. I want to sell those fucking Tesla calls 260, 280. I don't know if that's going to happen in the time frame that I'm waiting for, but yeah. I don't even, what are they going to be worth? What would a 200 call be worth if we traded 260 or 280? You guys know? $30? $20, $25, somewhere in there, right? I know. It doesn't sound crazy, don't I? I sound super crazy. Do I think it's going to happen? I don't know. But I do think it's going up there. I think it's going up there, and then it's going to come back down, and we're gonna see that $80. Like, well, 220 would be like, okay, time out, because you're gonna see. Remember that time you said 280? So my range here is due to today. My range is lowered. It was 220 in the bottom, but I'll take 200. Upside target though, 260, 280, somewhere in there. You guys don't believe me, I know. I think they were shaking your ass out today, personally. That's what I think. I think you're all going to be fucking buying 240, 260 going, woo! And I'm going to be like, yeah, I'm out of here. Bye. That's me, at least. I like blood in the marketplace. I like blood in the streets. I like it dirty. I like fear, baby. Give me more fear. Give me more doom, more fear, and more blood. The more blood, the better. The bloodier it gets, the more bullish I get. Tesla now trading $190. Come on, Tesla. Come on, Tesla. Keep on trucking, Tesla. That's how I feel. I'm with you guys. I'm with you, Beartown. More blood, the better. Yep, that's right, man. Blood in the streets. The town of Chi-Town, baby, Chicago. Blood on the street. Blood on the rise. It's following me. Yeah, I like what you I like when you blood a ticker, especially like that much, like 8% in a day. I'm like, what are they fucking thinking? Tesla's going down 30% tomorrow? And I'll ask people that shit, and they're like, yeah. I'm like, really? I'm like 20-30% in a 2-3 days? I doubt that. I mean, it might go down that far, but is it in the next 3 days? Probably not. I doubt that. Oh yeah, I keep getting yelled at. I keep getting yelled at because I keep destroying the monetization. They take every dollar too from like that point into the future. And the worst part about the demonetization is the worst part of it is that the moment that a video is longer than like an hour, YouTube does not allow you to edit the video. I have to like download it, then manually do it, and then re-upload it. If it's a short video, like 20 minutes, I can usually cut it out and it gets remonetized. But anything over like an hour, they're like, fuck you, asshole. It's all ours. Oh yeah, they're not. And dude, the other thing about that too is like the whole music thing. Like I'm still getting like dinged. Like I'm still getting dinged for music that I pay for. I think I've paid now for 4 music services, and all 4 of them I've gotten dinged. Even when I've connected my accounts, I've gotten dinged. It's a real shit show, music licensing right now. Even like YouTube's music. If you ever read their licensing agreements, it's a shit show. They're like, you can pay us $15 for this song, but the license is only good for a month. And you're like, what does that mean? Like, well, we're going to take all the money from you afterwards. And you're like, what? You're doing what? They're like, yeah, you pay us $15 and then we're going to take your ad money too. And you're like, what the fuck are you saying? No. No, YouTube, no. And there are ways to get away from it too. So what I could do, this is highly unethical, I haven't done it, is YouTube records your video, right? So like YouTube records your video right when you're making it. You're like, this live stream is being recorded by YouTube. If I didn't stream on YouTube and I just streamed on Twitch only, Twitch does not. Or they don't finalize the copy. So what I can do is I can use a mixing board, and I can play you any song you want. Once the recording kicks in at the end of the show, the mixing board removes all of that music from the recorded video, so you don't get dinged for copyright infringement. But I think it's unethical, so I'm not going to do it. I thought about it though. I did think about it. I didn't do it though. What are you saying here? Here we go. So Goliath says, I'm an indie musician, music licensing, and my royalties are very labyrinthine. Yeah. You have to go on faith mostly. And I don't even mind paying it. Like, I'm not anti-paying for music. Like, I'm like, yeah, I want to pay for this. And you fucking can't. Like, even if you do, there's like rules, and there's like just read all the shit it's like built for you to pay or not pay enough or have to pay more, or just fuck it, we're going to take your advertising dollars away eventually. And if I could go right to a music artist and just say, here's fucking money, take my money directly, that would be a better way. Just anything but the current system. This current system is a fucking disaster, in my view, or at least from the person wanting to pay it. I just want to pay one fucking fee and be done. Another thing that happens to me too, this is the last part that really gets my ass. Even when I pay for music, there are scammers out there, and what they do is they'll copyright claim your music, and if it's too much of a pain in the ass for you to follow up on it, they get to keep it. So there's a bunch of scammers out on YouTube that will fake copyright claim your music, especially if you own it. And they will copyright claim it. And you have to go down and chase these I'm not going to swear, but chase these people down. But the time and energy associated with it, it's not worth it. You're like, fuck that, I ain't doing that. It's too much time and effort to fight the scammers that copyright claim you too. Yeah. I'm paying right now for, so if you're a music maker out there, so currently I'm paying for, it's called, Mubert, M-U-B-E-R-T. So I pay for that music right now, and I haven't gotten dinged on that stuff yet. That's an AI type company. Gold getting more bullish. But I do pay do pay an AI company for their music. It's not tripping up anybody out there, or at least it's not triggering right now anyone to claim that music. Dude, Miro, what's going on, dude? Miro's here? Miro, what's up, brother? My boy, Miro. Dude, Miro, what is going on? Dude, internet hug, man. What's going on, brother? Good to see you, brother. Dude, if you don't know him, number one, if you don't know Miro, make sure you're following him on FinTwit. Let me get you his handle. I know it starts with a K. Hold on here. Let me get Miro in here. Hold on a second. So if you guys don't know Miro, right? Hang tight here. Hold on a minute here. I want you to follow this guy. Dude, Miro's here right now. I can't believe Miro's in the house today, brother. What's going on? Miro, you trying to sell the market right now, you dirty dog? I know why you're here. So if Miro comes into the show, right, be wary. Be wary. Hold on here. Okay, so what was I saying? Oh yeah, what would Tesla be if it went to 260 from right where it is right now, a 200 call? What would it go to? The price of that option? Oh, look at the bears in here. Ooh, look at the bears in here trying to throw it down. Let's look at SPX really quick. Watch that. So I'm going to switch over to SPX really quick. This is your local resistance on 5150. Let's go down to your bottom right-hand side screen. Follow Miro, by the way, on Twitter. So this is your local resistance right here, right? And look at these sellers coming in right on cue at 5150. Miro's probably throwing bombs from above right now. Let's find out from Miro. Miro, are we going above 5150 or not? Hold on. So Miro, let me ask you. I bought a shit ton of 200 calls, man, at the bottom. I bought a shit ton of 200 calls. They're doing all right now. Well, they were doing all right like 10 minutes ago. What do you mean? I already own them. Dude, I own a shit ton of Tesla calls. Big time, dude. Oh, dude, $80? Hold on. $60. Woof. They'd be $60. Don't get me all excited. I got them for like $2, so that would be like the biggest trade of the year for me. They're blood and spoons right now. You've got Mero in the house. You know when he comes on the show, right? I think I answered your question. Oh, all right, I did answer your question. All right, I did. That's just this is an old chat popping up in the show right now. Fuck yeah, Mero's the man. I love that. I love Mero. I figured he'd show up when we got to 5150 today too. What would Tesla 200 call be if Tesla is 260? Yeah, $60 $60, man. $60, dude. I don't know that that's going to happen, but I don't believe it's going to happen, but I hope it does. It's a ridiculous bet. Okay, so Mero's handle. I just posted it. I just posted it just now on YouTube and on Twitch. We have to have you. Mero, when are we going to have you in the show, man? Oh, stock price minus strike. What's up, Mero? When are we going to get you on the show? When are we going to get you on the show, brother? It would have to happen if the stock, yeah, 260, dude, $60. That's what it would be, $60. Did I say? I thought I said that earlier. When are we getting you in the? I'm like I have like delayed. I think I'm like delayed. I think the chat is delayed. I think I'm missed. Like the chat is like 2 or 3 or 5 minutes late right now on the screen. I'm gonna have to check the chat later. Mero, when can I get you on the show, man? Tell me when, dude. How do I get you on the show, brother? Oh, damn, nice yacht. Cap will use Epidemic Sound out of Sweden. Epidemic Sound. You're too bearish for this show? Who cares? No, you know what I wanted to have you on for was to show the I wanted to have you on the show that you could show the was it SPX divided by VIX and that kind of stuff. Do we all have to turn into a bear to get Mero here? I would be a bear for the day. I'd put a fucking bear suit on to have Mero here for a day. Absolutely. The guy's a fucking gangster. He's a great trader, so I'd love my dogs. Dogs are freaking out right now. Yeah, we've got bear love here. 100%. I definitely think this was Mero that sold this down earlier, too. Let me move this out. Let me get rid of this green box so you can get out of the way there. I'm gonna send you a Mero, dude. I'm gonna send you a DM, man. Today or tomorrow, I'll shoot you a DM to try to get you on the show, brother. Like when a good day and time that's good for you. Even if it's just voice, dude. I want to talk to you, man. Look at us floating around right now out there. Look at this Google carrying the market right now. We've got SPX with the insta sell off of 5150. Tesla down to 6.6% right now on the day. They were at 8% on the low, so they're holding up the market now too, I guess. Robinhood's just trading sideways right now. As long as they stay above the hourly trigger, you're good to go. That's where the buyers are down here on this hourly trigger. So if you can get down to that 1662, try to buy a dip with some stops underneath it. Looks like it's still continuing higher. You've got the bears sending boulders down on SPY right now. Hold on here. I got to take care of this. SMLR has a let me fix this for you guys. Whoop. SMLR, let me take care of this really quick. Get rid of this, that, and this, and that. Make the offset 100. Click OK. There we go. Clean it up a little bit. Hold on here. SMLR. We'll keep this ticker up as it is on our scanner on the website there. So that's SMLR. Google carrying the weight of the market right now. Trying to read the chat. Oh, look at this right here, dude. Look at these bears here trying to sell this bad boy down on spoos. Mary, you might finally have it, brother. You might get it, Maro. Mary, are you targeting the hourly trigger? Ooh, where is it at? 511.50. 511.50 downside target if they can close this. They've tried twice today to close this. Look at this right there. No joy for the Bears. We'll set them up one more time here. Right up there. See if they can get this. We'll leave the no joy for Bears to the side. And if they get the no joy again, we'll slide it back over here. Let's see if they can get it this time. And that we should actually go lower, right? Get underneath right here. Whoop. And target right there. How's that look, Maro? You like that? Right there, right there. Oh, dude, nice boat, Maro. I just saw your yacht too. I'm looking at your yacht right now. You dirty dog. I'm looking at it right now. Dude, that's a nice yacht, by the way. I like it, dude. Hold on, let's check this thing out really quick. Oh, yeah, look at that bad boy right there. That thing is sexy. That thing is super hot. Super hot. Hot, 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 baby. Super hot. It's a pretty nice yacht, right? Is that an NFT? Cap looking ahead to jobs. Do you think a hot or cool report is more bearish? Yeah, I think it's all bullshit massaged, man. I think the jobs and unemployment numbers are being scamified right now. I'll be honest with you. I think my thought here is that we bounce around into Wednesday, Thursday, and then the vol comes off the market and we rip some faces off in a Friday's close. That's what I think. Yeah, I don't know what the name of this boat is. This looks like AI possibly. I'm not sure if it's a real boat or not, but there are real boats out there like this. I watch a yacht guy on eSys Systems, I think the guy is called, on YouTube. If you actually like yachts, Maro. Is it eSystem? eSys something. Some guy named eSys something. He's always reporting on the big industry gossip on yachting. trying to read. You're saying it's a 91-foot Viking, the boat that was in the picture? Oh, that's not your boat, though? Getting underneath the half-hour trigger right now on S&P 500 on SPY. Downside target 5150. I gotta watch out for my. I'm gonna watch. I got Tesla calls still on. Tesla's still holding up here, so I'm okay with Tesla. I'm happy with Tesla right now. This looks like a hit and run by the Bears. Hit and run by the Bears right now. Miro's like, I'm in the. He's like, I want to know when to take the hedge off. Spoo's trading against its 30-minute trigger right now, trying to probe lower depths and try to get down to that 511.50. Hold on, Miro. I got music for you, my man. Give me a second, brother. SPY or a Tesla holding up right now. I'm pretty happy with that. Let's put some music on for the Bears, baby. We haven't been able to play any bear music around here. Oh yeah, there it goes. Get that blood going. Get that blood pumping. Here, we're gonna put some which music should I pick? Which music should I pick? We're gonna go with this one right here. Hardest BDSM techno. Let's see what that does. Oh yeah, that's really loud. That's super, super loud. Super loud. Let's turn that down a little bit. Gotta turn that down. Erotic loud. Yeah, they have it. This is so they have an 18 plus. They've got like 4 channels: chatting, let's play, education, and 18 plus webcam. This comes from Mubert, M-U-B-E-R-T. I usually like this music. This music's not doing for me right now. Let's see what else they got here. Hold on. See what this one sounds like.
Market on close imbalance, 2 billion.
This one's pretty good. It's scary. Put some scary music on for the Bulls. Yeah, the original bear music was really good. They took like half of it away too. YouTube did recently. Inflatable. I need to get a pool, don't I? I should probably get a hot tub or something like that. Let's take a look and see if they're going to rug pull this. Oh, look at that down there. Look at that sauce. Look at that down here. Ooh, what is that right there? $511.6, baby. Woo, yeah. Pull that rug. You'll mail me the pasties? If you mail me the pasties, I'll get a tub. Yeah, where's Chase right now? I haven't seen Chase in a while. Yeah, I would totally do that. I would totally do that. You guys want to do like a tub someday? Hey, oh wow, look who's here. Is that Figuring Out Money? Is that my guy right there? Yes! Look who else is here today. Oh, dude, look who's here today. We've got, first we had Miro stopping in, right? I got another shout out. I got another shout out coming. I'm going to show you guys something else too. Well, give me one quick second here. Dude, this is crazy. I got everybody showing up here today. People swinging by. Well, let me read the chat here. Is Mike Silva still here? I thought I saw Mike Silva in the chat. Okay, so if you don't know, right? I want you guys out there to check out, here, let me bring up his page. If you guys don't already know, I want you to check out, let me turn this music off. This is who I want you to check out. He's in the chat right now. Mike Silva. This is his YouTube page right here. You can see that I'm subscribed to him down here, right? I want you to check out Mike. He's also on FinTwit as well. If you ever have the chance, I have a lot of faith and trust in Mike. He's one of the best technical traders that I know of. He knows where everything is. He knows where the sellers are, the buyers are. When I had time, he was the guy that I would watch. And I still, if I ever do have time to watch videos at nighttime, I still check out his stuff to this day. I trust his analysis. So if you don't know who Mike Silva is, check him out on YouTube and on Twitter. He says he wants to collaborate. I would love to collaborate with you, Mike. Yeah, man. Are you gonna reach out to you? I'll totally reach out with you, man. I would love to collaborate with you. You're like one of my heroes, brother. Plus, I love your dog too. Is your house finished? Did you ever finish the house? You got like a bunch of stuff going on, don't you? You got like family and all that kind of stuff going on right now, don't you? Yeah, it would be a lot of fun, man. I'm totally into it. You know what I would like to do, Mike, is it'd be really nice to have you. It'd be really nice to introduce you to people, where they can ask you questions and talk to you and that kind of stuff. Something more personal. And if you ever want to do something like that, either on a weekend or even during the week at some point, like a Friday or something like that. Hang out on a Friday from like 3 to 4 or 5 o'clock. People have questions for you. They want to get to know you better. That kind of stuff. The house is finished. Heck yeah, dude. What are you? Yeah, you got the new baby too, right? Hey, so what's the question? So I gotta tell you something, Mike. We are about to renovate a house right now, and I don't know what I'm gonna do. I don't know. Like, I was like, do I stay in the house? You built the house, but I was like, do I rent a house and go stay in a rental? I told my wife, I was like, I might put an RV in the backyard. She wasn't happy with that one. Yeah, you've had a lot going on. I don't know what to do. I don't know if I should stay in the house while it's being renovated. I think it's going to be too dirty, too messy, all that kind of stuff. I'll have to put like an air chain exchanger in the house and stuff like that. It would be kind of crazy. And I don't know what to do. I keep looking at rental homes, and it's slim pickings out there. There isn't a lot available. Did you rent a condo did you own another house while you were having your house built? I would totally stream from the RV. I have no issues doing that. You got a short-term rental that was right by it. Yeah. Yeah, I did too, Mike. Every previous renovation that I've ever done, I've always stayed there. And I don't see it this time happening. Like, I got, like, my girls are becoming, my oldest daughter is like 16 years old. My other daughter is just coming of age. Or not of age, like of like teenage years. I don't know what to do here, man. And I don't, like, my oldest is going to college while she's in high school. Then I'm like, I got all kinds of like People have lives now. It's not like when I was younger. Yeah, and it's a hassle too, dude. I'm doing that too. Like, I was just talking to my wife, man, and I'm like, I'm tired of unpacking and packing and moving stuff completely. Like, I don't want to move anymore. I don't want to move crap anymore. I don't want to do any of that stuff. Yeah, I still got a target down below too. We're not done going down, I don't think. I think we're going to blast right. When we're underneath the half-hour trigger. It's just waiting for the 1 minute to catch up here. That 1 minute trigger is going to come down here. That 1 minute trigger is going to come down here. You could get a squeeze up here, but still looking for that half-hour trigger, one minute trigger move to the downside. Still bearish here, ish. Well, you'll get a squeeze, but still looking for that blood down there. I want to see this blood come straight down. I want to see blood, baby. You want to see the blood? That kind of blood right there. I want to see that blood. I want a dip to buy. Give me my 1 hour dip, please. Give me my hourly trigger dip that I can buy down here. Right down there. That's all I want. I just want the hourly trigger. I could take a little bit lower. That's really what I really want to buy. So from this morning, you want to see what I really want to buy? Down here. I want to buy 507.50. I would take 510.50. I would take 511.50. Either any of that stuff down there, just give it to me. Give me any of that stuff. Hey, Mike. Mike, listen, I'm going to send you a DM, brother. I'll send you a DM today. I'm so excited to even talk to you, man. I'm looking forward to, if you mind me interviewing you, I'd love to interview you. I have a big, long list of questions. I'll send them to you prior to the show, and I'd love to interview you, brother. 100%. I'll talk to you soon. Follow Mike Silva on FinTwit, and please follow him on YouTube. He's got a great active Discord as well, so I've got nothing but good stuff to say about Mike.
Forecast.
Another guy out there that I really like.
Budget deficit is at 3.66 billion New Zealand dollars.
Yeah, Stacey F's saying the same thing. Mike's awesome. I agree, 100%. SPY now trading 5.12.12. A little bit of weakness in SPOOs right now. We've also got Q's testing its hourly trigger down on 443.81. If you're a bull, this is kind of the place for you. If you're looking to buy a dip, this is your place right now. Trading the half hour or the hour trigger on Q's. SPX with the sell down. If you look down here where SPX is, this looks pretty bearish, right? Local support is down at 5,100 down here, right? We knew that the local resistance was up here. Now we are sitting on this support right here, right? If we do lose this support, where do we head, right? We end up heading down here to close all that gap down below. You see that juicy gap down there? Gold right now still consolidating. No big moves on gold so far. Huge early morning move. Tesla turning down. SMLR up 2% in the day. XOM reforming another low over here. There's still no new low down here, so that's actually pretty good. But XOM with the target price down below at 103.11. Google down 2.79%. It's just parked down here and holding in a holding pattern. Hood down in its hourly trigger now. So if you are a hood trader, okay, if you lose that $16.62 and you start to reject it, your run is over on Hood. So you don't want to see any rejection below 1662. $4:02 in the afternoon. I'll see all of you guys. Wait a minute. Hold on one second. Is it already at 4? Woohoo! Yay! It's over. No more downside move. All right, so I'll see all of you guys tomorrow at 9 a.m. I've been coming here early in the morning. Let me know if you like. The show on at 9, or if you want it on at 8:30, or is 9:30 or 9:15 better? Give us a turnaround Tuesday. I don't know. I think you might get more blood tomorrow. The Bears at least want that blood into tomorrow. You want 8:30 in the morning? You prefer 8:30 in the morning. So 9's working for you guys. Okay. I'll be back again then tomorrow. 9 a.m., baby. I'll see you in the morning. 9. Every day is a nightmare for me, so I just try to sleep in past the open. Only for Fed folder days, 8:30. Okay. All right, I gotcha. Am I swinging puts? No. Fuck no. Dip buyer. I am a dip buyer. All day long a dip buyer. All right, I'll see you guys tomorrow. All right. Later. There was like a big cutout.